you got a cold in your throat? Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Nikki, we are back, son. Good morning, you knucklehead, and all those other things. Merry Christmas, happy holidays, happy Hanukkah, Kwanzaa, and everything else in the world. I had a little computer issue. Plus, this sweater is hot as Hades over
It
here.
really is hot. I don't think it was much of a computer issue. I think it was just a boomer issue.
No, it was definitely. It was.
I don't know.
No, I'll tell you what happened. Your brother-in-law Lucas was down here using my area. Now I leave everything the way.
Jan was down there too, just so you know. So you could loop her into it.
So they messed up my speakers or something like that. So that's why I had a problem. I'm quite sure. Now,
Okay.
you tell people not to touch things. You were the same way when you were a kid. I say, don't touch anything. I come in, everything will be different. You know what I mean?
Yeah.
So
Well,
I
that's because
apologize
if you put it out there, that you shouldn't touch it, it makes it more appealing
to touch,
to mess around with. So.
Right. And I get it. It makes sense. Well, Merry Christmas to everybody. Market's giving us a little Christmas. You're giving us a little Christmas. I was with your uncle Barry last night.
Yes. How was that?
Very good. He's happy as a clam.
Good. I highly doubt that, but I will take your word for it.
There's nothing else you can do but take my word for it is right.
Yeah.
But he's happy as a clam. Very nice. Good conversation. Went to the typical place, EJ's, how that goes.
The spot. I know.
The spot. So that was good. I don't know. It was good. It was a good night.
Very nice. I went skiing yesterday. That was my little event. Took Vinny out there. Vinny and Lucas, my brother-in-law.
How'd it go?
It was very good. It was my second time, so I'm very much a pizza guy. I go full pizza pretty much the whole time. Pray to God to not tear an ACL or fall over or do something embarrassing. I did have one Jerry moment. And for those of you that know what a Jerry is, you'll understand. I did fall one time in front of the ski lift. So I just wanted to put that out there. I just wanted to admit that.
In case there's pictures or something like that.
I'm hoping that is the only time that I do that in my skiing career. But you got to get it out of the way.
You do have to get it out of the way. I'm glad you got it out of the way at Alpine Valley and not in. What bougie place you going to? Vail? Where you going?
Vail. Yes. Only the finest.
Only the finest few. Yeah, you don't want to do it there. You're actually going to find Vail a lot easier to get around than Wilmot. They're professionals at it. You know what I mean?
Yeah.
So you're gonna be okay. You're gonna have a good time. Trust me on this. You're gonna be all right.
All right, that's good.
Yeah. So how did everybody ski? Vinny ski okay?
Yeah, he's good. Is he? Yeah, he flies around. He does his thing. We're not as Lucas and I as Unk status, and I didn't have the sty either, I got just like all black. I'm in the bib. So, it's not the the coolest outfit, and certainly the age was showing.
You didn't have the big puffy pants do they all wear those?
Oh yeah, the puffy pants. It's a fashion show. It might as well be a fashion show.
And in Vail, it's going to be a bigger fashion show.
Oh, for sure. But it's more like earned fashion. Like this is just like rich kids from the suburbs, like Vail.
It's Wisconsin.
Yeah, I know, but those are that's who's going to Alpine. I mean, come on.
Okay. That's fair.
But Vinny, I could tell Vinny, he wanted to like mess around a little bit more, and Lucas and I, as more beginner skiers, were just like trying to survive. So I could tell that he was, he wanted to like race and like do some sort of things, he
Go in
wanted to
the
be a
go in
little,
the park and do a little
yeah,
parkour or something.
yeah, go off the
The
trail,
rails and
go,
the trails.
yeah,
Yeah.
go to the bra tree. There's apparently some tree wherever all the girls put their bras there.
There's a bra tree. I had.
Apparently, that's what he told me. We didn't see it though.
Omaha.
He's gone many times. He's never told me about this, and I
Yeah,
thought he told me everything. I wonder what else he's hiding from me.
yeah, you don't tell your dad those kind of things.
Oh wow, a bra
Yeah,
tree.
yeah,
Okay, all
yeah.
right, all
So
right.
I don't know,
Hmm.
but it was fun. It was a good time.
Good, good. I'm glad you guys had
Yeah.
fun. I'm glad nobody got hurt. I'm glad you got home, and that's all.
Yes, yes, we
Good.
survived. We
Very
survived.
nice.
Good.
Well, you got home and you saw our market basically at all-time highs again, new all-time highs or close enough to them.
Same as it ever was. Talking heads, baby. That's us.
Santa was in full force yesterday. Right now, you
Hmm.
got everything basically unchanged. I mean, even the S&P's down 2 and change, Nasdaq down 15, Russell down 5 or 6, Dow down 29, basically unchanged across the board. Volatility is unchanged at 1690. I didn't think it was going to get under 17 yesterday at all. I thought it would hang out at like, I don't know, 1725, 1730, something like that. VIX down to 14 17. That's about as low as it's been. Bonds have been a non-event for all the news of QE and everything else like that. You got bonds basically going nowhere quick, 115.13.
Hmm.
Bitcoin can't catch or hold its bids. Remember yesterday it
No.
traded 90, 91. It's 88 and change. It seems to be a dead product going sideways these days, really trying to get its feet underneath it. Ethereum's doing the same. If this market ever turns, I wonder what's going to happen to Bitcoin and Ethereum. Uh, Oil up 11 cents. And I think really the big news again is metals. I mean,
They're
gold.
going nuts. I mean, all of them: gold, silver, even platinum. Platinum is like, I have a couple little junkies that trade platinum.
Up
Uh,
7%, huge.
it's insane. I mean, it's gone from 1,600 to 2,200 in the span of a week. It's very hard to trade it. It's platinum, which is /PL. There's no options on it, so it's only long, short, and it's a big contract. I think it's $50 a point,
Yeah,
I believe.
I would not.
So it's a huge product. You have to be very careful trading
Yeah,
that.
I don't. I would caution anyone to get in front of that train. It's probably be a great trade over time, but
Yeah.
man, it wouldn't be worth it.
Yeah. I do want to do a quick PSA for tomorrow. So it's a half market day. So the market will close noon Central, 1 Eastern. No shows tomorrow, so we'll be off tomorrow, but just giving everybody the heads up. The market will be open, but it'll be a shortened session going into Christmas, which will be closed.
The market will be closed. Yes,
The
and then
market will be closed, yes.
silver over $70 for the first time here.
Yeah.
$70.47. Up almost 2.75%. Gold is up $56. That ratio is about 64 and a quarter. So it's been hanging out at around 64 to 64 and three quarters. It's 64 and a quarter. So with all of this movement that we've had, and it's been a lot of movement in the metals, the pairs trade hasn't moved that much, but again, it's at the very low end, or if not the lowest end, since we've been around for Tasty.
Yeah, it
The
looked.
last 15 years.
If you saw it last night, like right around the open, gold was up like $30 or $40. Silver was basically unchanged. It looked like we are going to get a little bit of relief there. That is not the case right now, unfortunately.
Yeah, I got a lot of emails last night about gold and silver moving so much, and like, what would be the reason? I don't have one. Like,
Yeah,
I've heard the rumors that there was somebody at JP Morgan that has a margin call and they just need to buy at any price. You're going to hear all of this stuff. The fact of the matter remains, you'll never know probably until it's over. And even then, I would take whatever anybody said or gave you the reason why with a grain of salt. All we have is the pricing in front of us. That's all you really have.
Yeah, no, it's a crazy move. I mean, I guess it's sort of a catch up because you've seen equities go, up 100%. So maybe this is just like the next thing. But it's
Oh,
a
well,
crazy move.
when does Nat Gas get its turn then?
I think that's a different story. I mean, those are
Oh, okay,
I
okay.
don't I don't I don't put that in that bucket. I mean, these are I consider gold to be like, financial asset.
Yeah, yeah.
In the
I was
same
making it
bucket as
too.
stocks. Natty gas is not really natty gas.
Okay, then when does Bitcoin get its day in the
That's
sun?
the big question. I just think the narrative is just dead right now.
Mm.
So I just don't. And we even talked about it with Ryan. It seems like the highs are put in overnight, and then during the market hours, it's just instant selling. Like as soon as we open, it's selling. Maybe it's rotating into something else. Maybe it's tax loss harvesting because of the move that it's had and going into year end. But it does not seem like anybody cares about crypto right now. But that always has the opportunity to change pretty drastically.
Yeah, no doubt, no doubt about it. No doubt about it.
Yeah.
Last night was pretty much of a quiet night. You only had about a 10 handle. I know top to bottom on the E-mini S&Ps was 14 handles, but it really only had a 10 handle move top to bottom. On the expected move, we're looking under 20, 1973. That's about as low as I've seen in quite some time, even though, you had a day like yesterday where we moved 20, 30 handles on the opening and then moved another 20 handles or so for the rest of the day. So be careful out there on those 0 days. Monday's usually the best day. Tuesday's day. Thursday's the worst day. So be careful with the 0 days. Relatively low implied volatility across the board.
Yeah, I mean, going into a holiday, it's not a shock to see the market basically unchanged. But are we back in the 7K?
Oh,
Are we going to make that grind to 7K? I mean, like that's what it feels like now.
right. I'm going to say no because that's what I said yesterday.
Yeah.
So I'm going to be team no. With only a few trading days left and 75 handles, you're certainly there. To the end of the year, you have about a 71, $72 expected move. So you could, you know, get that 7,000, and we're talking about 7,000 on the E-mini S&P
Hmm.
print sometime in the next what do we got? 8 days till the end of the year.
Yeah. Not that many trading days, though.
Not that many trading days. Not that many trading days.
Yeah.
That is correct. That is correct. All right, my friend. Hey, listen, let's take a quick 90-second break. We'll make sure that my audio is still working properly. We'll come back. We've got confirm and send, and we'll take a look at the market at the end of confirm and send. Also, if you have any
Cool.
questions and you want to put them into the chat room
Yeah.
for Nick to read, he would love to do that too. We'll take a quick 90-second break and come back. We got more Tasty Live after this, right after these messages.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade's Money Match event Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send. Nothing's really moved in the market since I quoted it just a couple minutes ago, so I'll let that go, and we'll get right to Confirm and Send. Even the S&Ps are down 5 handles. Can you believe it? They're near their lows of the day.
Crashing.
Crashing.
I don't know how we'll ever survive.
No doubt. Volatility up 3 cents. That's all I've got. Let's get right to Confirm and Send on this December 23rd, 2025. It is a Tuesday.
Yes. Ooh. And if you've got questions, put them in the chat for us. I'll pull them up as we go too. And I'll have Frankie relay those to me as well.
Perfect. Let's get to our first question, please. Are you ready? Is there a way to invest in Starlink or other non-public companies in the private market?
That's a great question. I would think as an accredited investor, you probably could find some sort of way. You'd probably have to do a large sum. I don't think you can do this with like 10 grand. But for the most part, not really.
No, the answer is no. I mean, there's no way. I mean, especially if they're asking about Starlink. I mean, that's owned by SpaceX or something like that, and that's a private company.
Yeah.
So there are no like shares or anything like that. I mean, that you could invest in. I mean, there are some like you have to be real creative. Like there might be like a trust company, there might be I'll go like Morningstar. I mean that's a
you got to be a big time client.
And they have a trust company, right, that invested early on in SpaceX, and then you could be
and they want to dump
shares in Starlink,
$10 million worth or whatever.
Yes.
Like there's not going to be like you can buy.
There's not a disseminated market for it.
Yeah, you can't buy $1,000 worth, 5,000, 10,000, whatever.
No,
it's got to be big boy numbers.
No, that's right. That's right. Yeah.
Unfortunately, we just got to wait till it's public, which I would imagine is at some point.
Yes, I would imagine it'll be at some point too, but not right now. So unfortunately, there's nothing you can do about this.
So I got one that came in from YouTube from Too Much Delta asking, so when we do these 0-day SPX iron condors, does it ever help to roll into the iron fly with one side if you get tested? So, and then the other way, or the other question is, does the win rate change from 10, 15, or 20 point wide wings? So I'll go with the first part.
Yeah. Go ahead.
The iron fly. I mean, I typically, because it's such a short-term trade.
Now wait a minute. Now an iron fly, they're they're short the same strike, right? And they
Yeah,
and then they're
with
long.
wings, but they're getting there. So they're asking like, okay, if you're tested on one side, do you roll up or would you roll up to an iron fly to kind of manage that trade
Oh,
on a 0-day
gotcha.
time frame? And so for us and for what we've been doing, we've been leaning a little bit more directional. I mean, there's been times where we've rolled up just the naked option or rolled down the naked option. I don't think we've had any that have gone really to the downside in that extreme of a way. So it's been mostly rolling just up the put. So you'll be like, let's say $30 wide by $20 wide on the upside, just rolling that put up. It does add more risk to the downside. I mean, generally speaking, with these 0-day trades, I try not to get too aggressive with the management because they're such short-term trades. I mean, it's very much a binary type trade. Like you're either right or you're wrong on most of these, and I'm managing them really quick. Like that's how I'm mitigating the loss is by managing them for 10 or 15% of the max profit. And so the majority of the trades I'm out in like an hour or 2 hours, and the ones that I'm not out in an hour or 2 hours, I'm peeling off the side that is near worthless, and I'm kind of just leaning a little bit directional where we haven't had a lot of these that have gone like blown through either side of our iron condor, just because we're going to kind of a further out delta, and we're going pretty wide too at 15 or 20 points wide. So you really have to have like a realized vol moment to be in the money on either side of those.
Yeah, totally agree, 100%. So I mean, really, it's something that you take as a day-by-day example. I mean, is that the answer? I mean,
yeah, I think that's part of it too. Like you can't, a lot of these, there's not a ton of planning or management that you can really do on these. Like
right.
you can reduce the max loss, but like, if you're reducing the max loss, you're pretty much setting some sort of loss. Like if you're rolling to the iron fly, you're saying, okay, I want a $200 loss instead of a $400 loss.
Right.
Like it's
you're
basically like
no
a
longer looking
surrender.
to win.
Yeah, you're not winning. It's a surrender almost.
Yeah. Yeah.
And then as for like the width, 10, 15, 20 points wide, you're obviously going to increase your win rate and your probabilities by going wider. But, it depends on what your risk tolerance is. Like that's, I stick to $15 to $20 wide. If you don't want to have that much risk on, I totally get it, and do the $10 wide or $5 wide. And I think it's more of a risk.
It's hard to make money, not really more of a risk because your width is smaller, but it's harder to make money.
Yeah.
It moves slower.
Yes.
If the $20 is going to be profitable at the end of the day, the $10 is going to be profitable too. It's just going to move a lot slower.
Yeah.
Great. Thank you, John. Next question, please.
All right. So what do you think of all the circular investing taking place in AI? Personally, I find it to be a house of cards, but I'm not sure how to trade that. Any thoughts?
We've been talking about it being frothy since it's doubled in price. I mean, so yeah. I mean, I think it's got a lot of smoke and mirrors to it. Piggybacking the last question, a lot of it is behind the scenes. You can't invest in it, kind of thing. And it's almost like Nikki. It's almost like Vinny on his final for science. It wasn't like we knew he wasn't going to get an A. It was whether
he could have, because he got all the answers from his friend. If you didn't hear about that,
he wasn't going to get an A, but he could have got a B or a D. We really would have settled on a C. And I think these stocks are trading at BA prices, so I think they're destined to underperform. I don't know. That's the way I would look at it. But I don't think it's a house of cards. Like I don't think this is. I don't think this is I don't know, and I don't have a good example like a Y2K moment. Like I don't think this is like that. I think this AI is real. I think it's I mean, I think it's warranted that it's probably going to take some entry level jobs away from people. I think it's going to enhance life too. I, I don't know. I think it's real. I think it's just like the computers. I mean, it's going to be. Remember when computers were just going to be used to look at porn? So, and here we are, doing a financial show on the internet. So, I don't know. I don't think it's a house of cards, though.
There's still a lot of porn, though. So it was kind of right. It was kind of right.
It doesn't go away. It just goes to the far reaches of the internet. Yes, this is true.
Yeah, I mean, I think this just goes with trading in general. Is like, if you think it's frothy, it can be frothy for a really long period of time, and focusing on catching that, like it's just not what we do. We don't catch like these huge moves, these crash moves. Like that's not the game that we trade, and I don't think like most people should trade like that. Like those, black swan type events, if it is one, you're never going to be able to catch it in full. And to be completely honest, the rest of your stuff probably gets hurt way more than whatever you make on that sort of event. And so I think just trading what's happening in the market is more important, and focusing on mechanics and high probability trades. And if you want to take directional shots, do it. And if you think that some things are frothy, then you can place those bets. But I think that sitting and just like doom and glooming all the time and trying to play for this crash is going to lose you a lot of money most of the time.
Yeah, I think and more importantly, I think you miss opportunities. I think more fortunes are lost waiting for something to happen than to just participate in whatever's going on in whatever direction you want to go in. Doesn't matter.
Yeah,
to me. Yeah,
totally.
yeah.
So I got another one coming in from the YouTube chat. So
Sure.
This is from Juice, asking, is pulling 25K from a 401k to open a Tasty account sufficient funding? And if so, what's a realistic potential account balance range after 1 year of trading the Tasty way? These questions very, very hard to answer because we get this question all the time. Like your risk and your reward, and even between my dad and I, it's different, right? Like we have different risk parameters, we have different risk tolerances, we have different time horizons. I mean, my dad talks about he wants his next 20 years. I mean, come on, I'm gonna keep him around for a little longer than that.
Thank you.
But it's so subjective and it's so hard to quantify. I think the first part of the question, if you're a younger person, you should leave that 401k and let it do its thing, because it's a forced savings account, and over time,
especially if you have a matching, if you have a
matching, yeah, but you don't want to have the tax implication. You get I don't know what the early penalty is, but it's a significant.
Say it's 50%, Nick.
Yeah,
by the time it's all said and done, it's about 50%.
It's a big number. So you pull out if you want 25K, it costs you 50 to get it, and so you're already in the whole 50%. Like you should just leave that and let it be. Start whatever you got, $1,000, $5,000, $10,000.
No, I have a workaround. So, and again, every gimme has a gotcha, as Dr. Jim says. But hear me out for a quick moment. Let's just, and again, you don't know the person, you don't know the age, you don't know how much money they have, everything else. So let's just talk high level for a minute. So if you were thinking about pulling 25,000 out of a 401k or an IRA or anything else like that, you have to have 50,000, because it's going to cost you basically 50% on your money. So don't do that. And I think that's I don't know if that's the most prudent thing to do. But you can borrow money from your 401k, meaning you can actually take money out of your 401k, set an interest rate. You actually set the interest rate in most instances. You could set a little bit higher or a little bit lower interest rate, and then you pay yourself each month. And there's no penalty for doing that as long as you continue to make all the payments. So if you took out $25,000, you would still have, let's say you had $100,000 in your account. You'd have $75,000 in your account, but you'd have a loan for $25,000. Your account would still be worth $100,000. You'd be paying it each month, and you're paying that interest to yourself. Now, if you did something like that, and
that money comes out of the market, though.
The money comes out of the market. You don't have
it's not a double dip. It's not like a free.
No, it's not a double dip. You don't have it in you don't have all the mutual funds that you had before. You have to sell some of them or whatever. But there's no penalty involved in it. You just are you're loaning yourself your own money.
Yes.
That's a more intelligent way, or optimal way, I should say. I shouldn't say intelligent, more optimal way to use your 401k. And I think you could do up to 50,000, or maybe it's some portion of how much money you have. If you have 250,000, you can take 20% or 30%. I don't know. You have to go to your own one and find out. But I think that's a better way of doing it. Now, if you did that and you were willing to make, you might lose that money and you're willing to make that payment back each month, and you can afford to do that, I think that's probably the optimal way to access those funds. So that's what I would do. And then I answer the question exactly like you did. Tell me how much risk you're taking, and I'll tell you how much money you can make or lose.
Yeah.
Well, that's what it comes down to.
And I think before you do any sort of financial engineering, take whatever you have that you can afford to play around with, and make a couple trades. Like you get comfortable, like, get the 1,000, 5,000, 10,000, whatever it is, and put that into an account and start trading it, and then go that route of, borrowing against a 401k or something else. Like, start off and just and do the thing, and then go from there. This is a good question.
Great
and
question.
I have another one, and this is from Ambiance.
Sure.
So, and these are all the people in the YouTube chat, so we got like pseudonyms, all that stuff.
Yeah.
So this is a good one for you. I'm interested in your take. So can a trader tell if they are a gambler right away, or is it something that develops over time? Like, do you know, is it inherent, or do you have, is it something that's learned?
Oh, wow. That's a great question. It's so funny because I was with your Uncle Barry last night, and we were talking about all the old guys, and he actually mentioned Jules. Who used to be on the show, was a producer here on the show for the thing that we did, Bootstrapping in America was called. And Barry, who was a market maker, but kind of risk adverse market maker from all of my friends, remembers when Jules made him make his first $500 bet when he was about 18 or 19 years old. It was like 2 weeks of his pay. He remembers the team, the points, the whole thing, how he lost. I mean, this man is 68 years old now. I mean, he's remembered it for
he's been angry about that $500
50 years.
While he was getting married at his wedding night, he was worried. He was mad about that $500
for 50 years. I remember this story for 50 years. Now, I say that because he has the same path that I had, started basically with nothing, saved some money, became a market maker. Everybody, one investor's floor is another investor's ceiling. But he's completely risk adverse. Now, I think I take a little bit more risk than some of my friends. I took a lot less risk than other of my friends. And I think it is something that is inside you, like something that you're born with, or you learn by environment. I think that whole thing, I hung out, in my early years with hoodlums, basically, and everybody bet on everything. So it was just part of my upbringing. So I think I was used to it. Barry had a similar type upbringing too. So I think it's very hard to not have a paycheck every week. Like, a lot of people have never had that before. And I grew up in a world where, a paycheck was frowned upon. If you weren't gaming the system, you weren't surviving. So yeah, I think you learn it from an early age. I think it's inside you.
Yeah, I agree. I think there's an aspect of risk taking that is not. I like you. I have many friends that are not risk takers, and
Yeah,
so I
right.
think that's like part of
And
it.
and and many
But I think
intelligent
if you like taking risk,
right.
like
And
that's a
you have many college educated, successful, smart friends, and
yeah
when it comes to the market or investing, they really don't understand or do anything. They know headlines kind of thing. You know what I mean?
yeah
Like it's just not in them, I
yeah.
guess, the way to put it.
It's a good question.
Yeah, it's a great question. Mhm.
Um, that's all I got in the chat so far. If I get
Okay.
another one, somebody else, Todd chimed in about the 401k too. So if you have like a rollover like from a previous job that was a 401k that you're no longer contributing to, you can convert that tax free into a traditional IRA. So you can if you have a leftover IRA from a previous job, instead of rolling it into your current IRA, which is a managed IRA through whatever 401k provider you have, you can roll that into a traditional IRA. So that's another route you can go. Good point out there by Todd.
Yeah, you should always talk to a tax professional. I mean, there's my disclaimer.
Yes, there you go. Let's get back into the confirm and send questions. We got a handful others. So when would a trader prefer vertical spread over a naked option despite lower maximum profit?
If you're staying very, very mechanical, and I hope that you are, probably when IV rank is low, you would go to a vertical spread over a naked option. Naked option is going to have more delta. Delta's king, right? No matter if you have an existing position or you're starting a new position, delta is king. Now you can put volatility or try to put volatility on your side by entering riskier trades, going back to the person who wants to know how much they can make when the IV rank is high. So in this example, you're bullish. If IV rank is high, I would probably default to a naked put. If volatility was low, I'd probably default to some sort of put spread or diagonal, right? You
Yeah.
can get the short delta by doing a diagonal spread, which would probably be over the vertical spread, probably be the optimal way to get the 25, 30 deltas that you want to get from a naked option when volatility is low by using some sort of directional diagonal. So it all depends on how much risk you want to take. But in general, IV rank is high, we like to sell premium. IV rank is low, we like to define the risk, vertical spread.
Yeah.
Horizontal or vertical.
Well said.
Next one, please. What do you think of prediction markets? Are they strategic or just pure speculation tools?
It's a good question. I mean, I think the funniest thing about prediction markets is they're essentially options. So they're binary options.
I was going to say binary options, right?
But I mean, you can trade them, which, adds that aspect of like what we do. And, it's funny to see them kind of mainstream now where we've been trying to make options mainstream for quite some time. And I get the reason why they are, and it's because of how small they are. You can make a 10 or 20 or 50 or $100 bet. Whereas with options, you naturally have to have a lot more capital, or at least a lot more understanding of leverage and capital markets and whatnot. So
right.
It's kind of cool to see us moving in that direction. And I think it's I think it will ultimately be an on-ramp to more sophisticated investors in the space of options and stock and futures and all that stuff. I think that's ultimately the route it'll go, because if you are trading these things at a certain point, you're going to want the size aspect of it and the strategic aspect of it, which I think will come from options. And so people predicting where the market is going to, be above or below X dollar at X point in time, they can make that bet way more capital efficiently with more asymmetry to it via options. And I think at some point, the public will pick that up in some aspects of prediction markets. The stuff with elections and sports, and the sports edge or the sports side is going to be interesting because it's going to eat the lunch of DraftKings and a FanDuel and whatnot, and tighten those markets. But the more kitschy stuff, like the weather or the color of whoever's cup at a dinner party, like like that stuff is that's just
that's the Johnny stuff.
yeah, that's the Johnny stuff. That's just pure gambling. But I think for our space in our world, the financial aspect of it will be an on ramp to more people engaging in traditional financial markets. I think it's going to be a huge killer of sports betting and gambling. Like, I think those companies are going to have, big problems moving forward. And then for the kitschy stuff, I just think it's just, somebody wanting to bet $10. Like trying to turn 10 into 100 on something stupid.
Yeah, I think they've got a way to go, too. Like, I know everybody, I'm going to use Bitcoin as an example. Nobody wanted Bitcoin to be regulated. It was supposed to be, anti-establishment, blah, blah, blah. It never really got its wings underneath it and really had the type of momentum that it had until it became mainstream for everyone. Same thing with these predicted markets. Like right now, you don't get paid on some technicality, and there's really no recourse because a lot of these are offshore. I think once it becomes mainstream and embraced by the traditional markets, then it'll really become something. So I think it's a bright future.
Yeah. I mean, but it's interesting. Some of the things that I've been thinking about is, how the prediction markets can be used for like micro type trading. Mm-hmm. So like you buy 5 shares of SPY and you can hedge that with a pseudo covered call using prediction markets, right? Like, will the S&P be above, 7,000 by the end of this year? You can sell that against your shares of stock. I mean, it's not cash secured, but it's a way to sort of hedge. If that happens, your 10 shares of stock increase by, $20 or whatever, $3, $4, $5 a share. And you're betting, $5 or $10 on it, being under 7,000. So you build that sort of covered call for, a couple $100, like you can kind of leg into that sort of thinking. I think there's something there, but again, it's an on-ramp. It's not, nobody's going to be sitting there doing that for a long period of time. Cause at a certain point you're going to be like, oh, well, I can just do this with like a short put spread in options and use that same, $1,000 and have way more upside.
Sure.
Than, being long the shares cash secured and short the call via prediction markets cash secured. So I think it's good.
Totally agree. Can't really add anything there. But while we were talking, silver's just made a move higher, 7,000.
If it goes to 70,000, we got some real problems.
7,000.79. It's up over 3%. And gold actually, I don't know, it didn't really sell off, but it's down from its last price that I quoted you. So that ratio of that spread is now closer to 64 than 64 and a quarter, and maybe under 64 right now.
Yeah.
Next question, please.
With the VIX I'm sorry, my bad.
After you, no, you do it.
Yeah. With the VIX so low and there being some evidence that markets do rally between Christmas and the New Year, is it worthwhile to buy SPX at the money options that expire at the end of December? It seems like a low risk, possibly high reward trade. It certainly is.
Yeah, I mean, with that assumption, which I tend to agree with. I don't know if we've had the move already. I said 7,000 was not going to be here for this year, so I would kind of say that this is probably not the greatest strategy, but not my assumption. It's your assumption. And I love your assumption. Volatility is low. If you're looking for volatility to be low, I just told you the expected move. It's moved a little bit more. It's 21. It was 19 a moment ago. The expected move is relatively low. We've been selling, most of Tasty Nation been selling this premium, and it's been working out really nice. But maybe, we're due for a day where we move outside the expected move. And, this is the scenario that you go with. I would probably, and again, it's very expensive to buy, a straddle in SPX. I mean, you're looking at what, 50, 60, $55, something like that. I mean, it's not a cheap shot here. You might want to go into SPY just to get a little bit smaller,
or make it a spread.
Or make it a spread. But sure, go ahead. This is why not? It's a good assumption. I like it. I just don't, you just don't know how far, right? That's for the next 6 days, you got a $50 expected move in SPX, and the straddle's trading for $50. So, do you just buy the call for 20, $25, or do you just buy the put, or do you just buy both? That's completely up to you. But I think a spread is probably the best way to do it, and not the naked option. But again, how much risk do you want to take?
Yeah. Let's do the next one.
Next one, please. Why do option prices sometimes fail to reflect obvious macro or news risk until the last moment?
I mean, that's an opinion, right? So like options are priced basically at the same price. You could buy or sell it at essentially the same value. And so whatever you think is the macro risk or the news risk coming up in the future, you can trade that for the same value. There's nothing that you're missing with option prices, right? When you look at that screen and you see the price, it is what it is, and you can either buy or sell that. And so, we look back and say, oh, well, this wasn't, like this was a surprise, or, the number came in cooler than expected or whatever. And that's all after the fact. Before that came out, the options were priced with that uncertainty, and then the uncertainty is either realized or unrealized, and that's that's the trade. And so I think getting caught up in thinking there's something mispriced is a tough exercise, and it's natural. Like, you look at stuff and intuitively the reason you're making a trade is because you think something is better priced than the other. But this sort of stuff, like the macro and news stuff, you just can't, that is uncertainty.
Yeah, for sure. I don't really have too much to add there, but if you're seeing the obvious move, do it before the market moves until the last day, right? I mean, again, you're saying it's subjective. I'm playing with the same thing there. The worst thing you can do is have.
But if you think it and I think it, everyone thinks it, right?
Yeah, but the worst thing you can do is have an opinion and not do something about it.
For sure.
Do something about it is what I would say.
For sure.
Next one, please.
All right. So, go ahead.
No,
I didn't know which one we were on.
No, go ahead. I forget, me too. Go ahead. You go.
All right. We'll get on track now. Volatility has really collapsed. How much capital are you guys using at the moment?
Wow. I can tell you right now.
25?
Yeah, approximately. Maybe
30?
Maybe a little bit more into the 30 handle or so. In my own trading, I think I'm at one of the lower ends that I've been at in quite some time. Matter of fact, I have a third of the amount of delta that I normally carry. So relatively small. I have numerous positions, but relatively small. So for me, it comes down to delta. Delta's king. Delta's risk. And I have 1/3 of the delta that I normally have.
Yeah, I would say this is about as light as we've been in our short time together.
Yes. Yeah. Yeah.
But that's not a shock. I mean, like, we like, the Coinbase puts from yesterday, you have these positions where they're not, you're not getting paid a ton to put them on and to hold the risk. And, they're moving slowly. So you're kind of taking stuff off as it works. And there's not a ton that you're like, oh, I definitely got to go put something on there. It's not like anything's really jumping out at you.
Yeah, no, there isn't anything jumping out at you. You're 100% correct.
Yeah. Besides the metals, but they're,
but you're there and they're big.
I'm there. Yeah.
Right. And I'm there too. I mean, listen, the SLV is going to be the new GLD for 2026. I can see this already. It's going to be a pain. Next question, please. What do you see as the biggest risk for the market heading into 2026?
Ooh. If I knew, I would trade it. I mean, I don't know. I wish I knew. I wish I knew what the biggest risk is. I would say.
I mean, would you piggyback? Let's get public for a minute. Would you piggyback the question from a moment ago? Would it be like the AI bubble, that tech AI bubble? I mean, is it inflation? You always talk about, the prices of thing, or
yeah. I think it's prices. I think it's more social than it is financial, and I don't know how that'll be reflected in financial markets. We always say the stock market is not the economy.
Mm-hmm.
I think that's probably our biggest risk is the social aspect of it. What
about a new Fed chair? I mean, let's talk markets. Talk markets. Maybe it's the new Fed chair.
Maybe. I don't know.
I mean, how about healthcare? I mean, a lot of people are getting all their their healthcare prices are changing. Maybe that's the.
Yeah, we got some people throwing out like China blockade, Taiwan. I think that's
tariffs, right? I mean,
that's definitely a big angle.
But isn't there always something like
Sure.
there's always something. I mean, that's why the market climbs the wall of worry, right?
For sure.
There's always something.
Yeah.
So to go back to what you originally said, yeah, I wish I knew. I wish I knew what the biggest risk is. There are many. The names change, but the circumstances remain the same. You know what I mean? Like, it's always there's always something new. But the problem's going to be the issue, if the market has an issue, 20-30% pullback or something like that.
Mm-hmm.
It's going to come from a place that nobody knows. That's why it's called an outlier.
Yeah.
The AI bubble might move at a couple of percentage points. It's not going, in my opinion, it's not going to be the catalyst. It's going to be something we don't know anything about.
Yep. Good question.
Interesting
question.
Yeah, interesting question. It's one that people can debate forever, and some will claim victory, and most will get it wrong.
Mm-hmm.
Next one, please. Is it me or you?
Yeah, it's you.
How does trader psychology influence decision making differently in option trading versus outright directional trading?
I think it's the leverage aspect of it that freaks people out. I think people, and it's just, the leverage goes both ways. It's positive and negative. And so, when you buy stock and it goes up, you have 10 shares, it goes up $1. It's not, like nobody's thinking about it. Right. Like, that's just like, it's like my sister where she's like, oh, it's been a great year. And I'm like, yeah, of course. I mean, the market's up, and it's like, that's just like, there's the baseline number metric is just like up or down. So I think like for a trader, you have this aspect of leverage, and you have day-to-day price action, and you see everything. Most normies aren't looking at platinum today. Like,
yeah, right.
I don't think 99% of the population can quote you the price of platinum,
Right.
or even silver, to be completely honest, or probably even gold. So I think that's kind of what separates us from the pack, is that, we're not only trading the markets, but you know about all these stocks. Like it's funny when I like meet people or I talk to people, and I like, you get to where you work or what do you do? The funniest thing is I always like know the tickers, right? And I know what the stock's been doing, and like that's just not. I think that's a part of trader mentality that's kind of underrated.
Yeah, I would say I don't know. I don't have too much to add here, but you said, you think it's the leverage. That always kind of made me feel funny, because I think the 50-50 stock or futures position has so much more leverage than the option position with, a 60, 70 or 80% probability of success, although options provide leverage and options are scary kind of thing. You know what I mean? Like
Yeah.
it's let's throw out futures for a minute and just compare stock to options. Harnessing the leverage of options with a strategic position or strategic way of trading the same amount of delta you can get with stock is so much more delta efficient, capital efficient. Throw theta on your side, or use long theta to your advantage for leverage, is so much better than buying 27 shares of $1,000 stock. I mean, I don't, and using the same amount of buying power kind of thing. I just never understood it. Yeah. I don't know. Next question, please.
Yeah, let's do it. Last one here. So is there ever a time when you might widen a short put spread or a short spread? For example, if you sold a put spread and the underlying move higher, would you ever just roll up the short put and leave the long put untouched if your assumption remains bullish?
Sure. I think it's let's throw in that IV rank is high or high enough in this scenario. Sure. I don't have any problem with that. You're taking a $5 or $10 wide put spread and making it a 10 to 15 to $20 wide put spread because the stock moved in your position and you're wanting to assume more risk. I have no problem with that whatsoever. I might look to, it looks good on paper saying you do this. I might look to come up with a different strategy after that. Maybe if I sold a put, maybe I'd go to an at the money call spread, try to get the same, capture some of that upside move with the call spread, have less downside risk. But sure, I have no problem with what you're doing here.
Cool.
Awesome.
That's it.
Awesome. Good job. Good job out of you. The market itself, even the S&Ps are down 13. This is about as low as I've seen them. You can see here the low is 69.13, which I just made a moment ago. NASDAQ's down 63, all really just 0.25% in the market, with the Dow down around 90. Russell, which was the strongest and the weakest of the group most of this week, is the weakest of the group, down 14. Volatility up 15 cents, 17.05. Bonds are down 6 ticks, under 115, 114.30 for the first time in about 4 or 5 days. Bitcoin down 800. Bond volatility is relatively low at 1.8, so very low. Oil up 16 cents after having a 3 or 4 day rally here. Gold is up 33 dollars, only 0.75 of a percentage point. Silver still over 70, 40. And if I do that calculation for you, I'll do it for you right now. See what that gold ratio spread is trading. It's got to be probably near its lows, 45.01.
Yeah, 64.
On the nose?
Pretty much. 63.54.
Yeah. It's under 64. That's about the lowest that I've seen it. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
Got an option jive.
When you define risk, you set a limit on how much you could lose if the trade.
Tasty Trade's Money Match event Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It's option. Jive. Nikki, we are back, son. It is time for an option jive. E-mini S&P is down 15. Go.
Let's do it. 3 effective ways to increase pop.
All right.
Good one. So return on capital, which is ROC, is a crucial metric that traders often prioritize. And it directly reflects potential profits and losses. However, probability of profit, which is our POP, may be even more important because it outlines the probability of achieving positive results and determines the ultimate return on capital for each option strategy. So unfortunately, it's not possible to get both things. There's always a gimme and a gotcha. So high values for both metrics is tough to come by due to their inverse correlation. We're kind of getting into the weeds here on the question that we get frequently of like, what's the highest upside way to, how do I make the most on this assumption or this trade? And, you make the most if it's a low probability trade. You can, buy the $5 lotto ticket and, walk away with $1 billion, but,
Right.
it's a pretty low shot at that. So it's always, there's always that give me and a gotcha. So we're going to kind of talk through, a good little sweet spot to be here, at least quantify, somewhere to be here.
Very good.
Next slide here. So the most straightforward way to boost the pop is to use further out of the money options with smaller deltas. So however, this means that you'll be sacrificing return on capital. So finding a balance is really the crucial spot here. So when you go and sell a 5 delta option, you might only get, 50 cents for that option. And that option is going to be much higher probability, but your return on capital, because it's going to use relatively the same amount as a 30 delta or 25 delta or something like that, is going to be way, way lower. So, there's always that trade-off. It looks exactly like this chart in that, the further you go out of the money, the higher probability of success, the higher win rate you're going to have, the lower potential value you're going to capture. And so, where do you go? Where's your spot?
Yeah. Right.
Where do you like to go? Where's your sweet spot?
I mean, for me, I typically go somewhere between the 30 and 20 delta. I would probably default to around that 22 to 25-ish delta if I'm just looking for a short put. I know from our research that the 30-ish delta is probably optimal, but I default to somewhere between that 30 and 20, closer to 25.
Agreed. I'm right in that spot too.
Yeah.
Next slide here. So in addition,
I always think like the 3-day rule is it's an inherited trait, kind of like your gray hair. So I think I gave that to you. I think I gave both of those things to you. So
thank you so much.
So you go the 25 delta, becomes the 30 delta. You feel comfortable and you can stay in the position.
Yeah. So are there other ways to increase a position's pop while reducing the return on capital to reasonable levels? Of course there are. They come with caveats as well. So we'll get into those here. So the next slide here. So one option is to place a defined risk strategy with a undefined one. So for example, if you're doing a strangle, you would do an iron condor. If you're selling puts, you do a put spread. This is going to increase your return on capital just by defining the risk. Of course, there comes a cost with that. There are other quantifiable differences from the speed at which the position will move, your exposure to time decay. Those are all things that change with a spread versus a naked position. But just from a very basic level, defining the risk and capping the risk is going and reducing the amount of capital you put up to hold the position is going to naturally increase your return on capital. But you'll see the caveat, as there always is that you're going to cut your probability down. You go from, the 20 delta strangle at a 63% pop to a 53% pop for the iron condor. And that's, there's always going to be that trade-off in every scenario. And so, that's the $1 million question, which is better than the other. Well, they're way different positions, even though they're, kind of similar in what you want to happen with the stock, they're way different from a return on capital, pop, capital used perspective, all of that.
Yeah. Perfect.
So the next side here is
it's very hard to convert something, a strangle into an iron condor into a strangle. Either way,
it's not converting, it's doing one or the other.
Doing one or the other is fine, but to change it is
you can't change. You can't. Yeah, you can. That's a different story.
Okay. Fair enough.
So another approach is to sell an additional naked position to finance the risk defined position. So this is like, comparing a call spread versus a jade lizard. We do this a lot as look, or you could even use this in a similar light as a naked put versus a jade lizard, is going to give you a higher return on capital on the jade lizard than it is the naked put, because you're selling that extra spread. But again, with any strategy where you're changing from going naked to a defined risk position, you're going to inherently increase the max return on capital. You're going to decrease the probability of success. There's always going to be that give and take, and one is not better than the other. Like, I think a lot of people get focused on the return on capital and trying to maximize return on capital because that's like a traditional finance metric, and that's, it is important. But when you're maximizing return on capital, you're also going to be changing your probabilities. And so you have to sort of weigh those together. And there's no expected value calculation here. You can't just say X plus Y equals Z, and I want max profit, no losses, and here's what I get.
Right.
That doesn't exist because there's dynamics that change constantly. Time value, volatility, the market and the stock price. So focusing on like a specific metric, you're going to box yourself into a hole.
Good point. Nobody wants to box yourself into a hole.
No, of course not. So naked options can significantly increase buying power, which may not be suitable for traders with smaller accounts. To mitigate this, traders can sell additional spreads to reduce the risk on one or both sides of the position, ultimately increasing pop. So here we kind of outlined a butterfly versus a broken wing butterfly. And you can see, again, as you increase the return on capital, that butterfly trade is a very cheap trade, has a very high return on capital. So you have low risk, high return on capital. It's also a low probability trade. When you do the broken wing butterfly, you have a still high return on capital, a higher pop than you have return on capital, and you're going to use a lot more buying power. There's always a gimme and a gotcha here. But this gives you an idea of like similar positions, what your trade-offs are, and how you should be looking at these positions from a basic level.
Yeah, well said by the team. Well said by the team for sure. You like the butterfly? We haven't done many of those.
I mean, I don't mind them. I lean to the Dr. Jim realm of like doing them short term as like an all or nothing type trade. Mm-hmm. A cheap shot if you're okay with that. The other way that I like to trade them is just via ratio spreads and then buying in the risk. And so, I'm a little bit more comfortable there where, you can trade a high IV position via naked put call ratio spread or just the call ratio spread. And then if, time passes or volatility contracts, buying in that risk and kind of legging into the butterfly, I think that gives you a more dynamic position. You kind of get a little bit of everything in that you can start with the short premium. If it works, you can kind of change it into a long premium position. I prefer doing that sort of trade versus just straight up buying butterflies. I think it would be ultimately death by paper cuts if your core strategy is just buying butterflies every single day in certain equities, upside, downside, whatever, at the money. I think you'll end up just chopping yourself up to pieces.
Right. Maybe in short dated options, because the butterfly is going to expand quickly. But I agree with you if you're right, by the way, and contract if you're wrong. I agree with you. It's probably futile would be my answer. Be a hard way to make a living. Go ahead. I'm sorry.
Couple takeaways. So in order to increase the pop on a trade, your probability of profit, traders may consider increasing the risk on one or both sides. However, this leads to a decrease in potential return on capital. Here's your gotcha. It is important to find a balance between return on capital and pop. They're both very important. I think, one of the things we do really well on this network is, we talk about both sides of the coin, and we highlight that, there is no best, right? If we knew the best, we would do it. there's always that variance and that uncertainty, and there's always a push and pull with one thing versus the other. It's subjective. It's based on your capital and your risk tolerance, your directional assumptions. All those things go into which thing is or which trade is ultimately the best for you.
Yeah, it's not like a struggle between good or evil. It just is what it is, right? It comes down to, how much money you have in your account and what your objective is. It really is a pretty level playing field, other than the money you have in your account and how much risk you're willing to take.
For sure.
Let's take a quick 90-second break and come back. We got more Tasty Live. With the opening bell next. We'll be back in 90 seconds. Tasty Live.
Beautiful.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Just let me hear you say it back, 'cause you know that it goes, yeah, it
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the opening bell. Immediately following that, we've got Let Me Explain.
Mr. Vecchio.
Mr. Vecchio coming on. Always nice to see him. And then we have a market measure coming at 9 o'clock, top of the hour. Even the S&Ps right now are down 14 handle. They've been down all morning since we've been on the show. The Russell's been the weakest of the group, down around 15 handles, which is about half a percentage point. Not too much moving here, as volatility would indicate, just over 17, but as you can see, up 12 cents at the low end of its range. Dow down 144 and the NASDAQ down 47. Bonds 114.24. Maybe something to do in the bonds today. We'll take a look at that after the opening. Ivy rank is so low, you'd almost have to do a debit spread, I believe. Bitcoin down $740 to 88 and change, going sideways, a rudderless ship with the Ethereum down $37. Oil was higher earlier. It's down 9 cents right now to 57.92, but a tight range in oil this morning. Gold up $26. I normally say it's a decent sized move, and it is a decent sized move, but it is about 35 handles off of its highs made earlier this morning at 45.30 or so. The same thing with silver. Silver flirted with 71 at $70.79.5. New high there. It's $70.35 right now. You look at that ratio between the two. Let's just look at 5/8 and 5/8 is like 1 1/4 versus the 2.5 that silver's up or more. That ratio is collapsing quickly. We've got about less than a minute before the market opens here. You think a red day today? I mean, we haven't had too much two-sided action. If we've opened green, we've kind of stayed green and then just like drifted higher. You think we do the opposite today, or are we're gonna catch a small little bit?
It certainly felt like holiday trading yesterday.
It sure did, didn't it?
I mean, the most of the action happened in like the first 30 minutes, and then after that, you went pretty much nowhere. You had, I feel like a lot of holiday trading you see, like Meta, for example, was up like $10 or $15 in the first 30 minutes and ended the day basically unchanged.
Right.
I feel like a lot of holiday trading is like that. There's our bell. But I feel like it's a chop fest. It's a, I told Vecchio, I'm like, this is the week where they just vaporize premium, where bulls and bears get pissed off because, it's probably an inside up move, but not enough to really, get paid on calls. And, the bearish people are like, waiting for this big move and you just don't get it. It's kind of like a pain on both sides of the market where you just go nowhere.
And you go nowhere quick, right?
Yeah. Yes.
Yeah. I tend to agree with you. Let's see what is moving the market. You want to?
Sure.
We'll go to the downside. You've got Lilly down almost $9, $8 and change. Coin down 4.5. MSTR down around 3. CRM down around 2 and change. Robinhood down around 2. Even the S&Ps just turned higher, by the way. Higher by 3 handles. Tesla up 2. Gold up $1.50 and change. Adobe up $1.30. So pretty much an unchanged market across the board. Microsoft up small. Google up small. Much to do about nothing right now as we sit, right?
Yeah. Is there anything that's got any sort of volatility to it?
At this,
literally anything. I'll do anything. I've already got the gold silver pair that continues to just be a face ripper. I've got multiple positions on in Netflix. That's kind of like top of my list here.
Mm-hmm.
Oracle is on that list. JP Morgan at like a 42% IV, but IV rank at like 17. I mean, it's death. This is just it's painful.
Yes, I agree with you. It is, and I don't think I don't think you I don't
You
think
don't
you
want to
stretch.
force stuff. You don't want
Yeah,
to.
you don't stretch it here, right? Exactly.
Yeah,
That's exactly what I was going to say.
you got a pretty decent move in the metals right here. Silver just moved like 50, 60 cents. That was a big little 1 day or 1 minute candle, I should say.
Yeah,
And
gold.
my guy Patrick getting bailed out a little bit on that move. He's been
good.
We've been chatting about the gold silver ratio and just the commiserating with the pain together.
Misery does love company. Let's do it real quick for you. I'll do 44.82 divided by 69.80. We'll do that. 69.80. That equals just about 24.2 and change. So just right there at 24.25. About as low as it's been.
Yeah.
Gold's had a big move too. I mean, after trading 45.30, it's now 45.80. These moves make you feel like you missed the top if you have, longs. It makes you feel like, this is the crash scenario. And I just get the feeling that they have to open kind of stratospheric, and they didn't open stratospheric. Although, I mean, I guess a one in the order move is pretty high in silver.
Yeah, but you're getting it across the board. Like even, we talked about platinum going nuts, but even like copper was up. Copper's had, which is slash HG, was up pretty significantly over the last couple sessions. It's actually given up a little bit. It does seem like we've kind of gotten to the, it's hard to fill the space above, it seems like, but who knows? It can certainly continue here.
Yeah, who knows is right. The market itself, the S&P, is basically unchanged, down $1. NASDAQ up about.
Did you
15.
get filled on your Oracle?
On my Oracle, did I have a? Oh, now you're scaring me.
You got filled yesterday?
Hold on 1 second.
I don't see us with an Oracle position.
Let's take a look. If I did, I missed it, and I apologize.
Oh my! I'm gonna have to put that on your review.
Yeah, well, you can get filled better now if you want to. I mean, yeah, I got filled. No, I got filled on the 19th. I closed that at 8.85 on the 19th.
Oh,
yeah.
I thought we had that on for a while.
We did have it on for a while. I decided to let's take a look here. Let's take a look at Oracle. Yeah, I closed that on the 19th. Took a small little profit in there just to be done. Oracle is a worthy adversary.
Do we get back into that boat?
You can, down $2.70 something cents. Oracle down $2.72. Ivy rank of 43 is pretty good. It seems to be in no man's land over its last move here, right? It's not near its lows, definitely not near its highs.
You know what else I can do? I can probably scalp those IBIT calls.
Mm-hmm.
And obviously this isn't, I don't want to pat myself on the back on this because I'm losing 1-to-1 on the shares. So,
but you're increasing your
yeah, I'm dollar cost averaging essentially. The 40 cents that I'm making on the IBIT calls, or 30 cents, whatever, it hedges me this 1 day move. So I just closed out of those. I sold them at 81 cents. I just bought them back at 54. Again, please no applause from the crowd for this, because you've
hedged your overnight risk.
Yes. No, John. No applause for me. Yeah.
But at least you're taking advantage of it. I mean, you got to be happy about that.
Yeah. I mean, it's been a small consolation prize every day to scalp those for 25 cents while you wait for the move higher. Or at least hope for the move higher at this
alleged move higher.
The alleged move higher. Someday when it goes up again. Yeah.
Silver back under 69. Traded as low as 69 last night at 69.50 right now. Silver and gold kind of moving step with each other. Gold is up 12 after being up, 50 or $60 last night.
Yeah. What about, oh my God, Microsoft? You do something in Microsoft? It's like
It hasn't been the leader that it once was, right? I mean, Microsoft Ivy rank of 6 in there is relatively low too. It's been going sideways. It's up 80 some odd cents. It's had a range this morning of under 85 to just about 88, and it's right there under. Well, now it's 86. Sorry, 86 and change, up $1 and change. If you're going to do anything in Microsoft, I think you put it. You're looking to. You're not looking to sell premium Ivy rank of 6, right?
I was thinking about it, but it's just so junky. So I think
it's almost a $500 stock. You're gonna have to do something with defined risk. You're not gonna get paid a lot in there. I think it's a hard one to pull. When I look up here at the high option volume list and I look at Ivy rank, UNG, which is a tough product to trade, SLV already have positions in. Silver up 77 cents, but that has high Ivy rank of 91. And then you go through this list, it's other gold related products. Ethereum is another one with a good Ivy rank of 61, ETHA. Your beloved HUT is in there with almost a 60 Ivy rank. Horrible markets in there. You got to be really careful. And then you go down the board here. You really don't find any of your stocks until you look for a Netflix that has earnings in January 20th. Ivy rank of 35.
Yeah, I'm gonna get myself in trouble.
Oh, do tell. In what product?
In NEM.
In what?
I'm freezing up here. I was looking at NEM.
How about Netflix? You got a Netflix position? Let's take a look.
Yeah, I got short puts and a call ratio spread. I'm wrapped around.
So you're locked and loaded in there. Yeah.
I'm locked and loaded there. Yeah, I was thinking of like doing a ratio spread in NEM, but the markets stink. You see, this is the other. Not only is there no volatility, not only is nothing moving really at all, but holiday trading, you see those markets widen out.
Oh, like there's no reason to do anything in NEM right now.
Yeah, but that's a liquid product. Like on a normal week, you can do. I've traded it. I trade it, not all the time, but I would say frequently.
Yeah.
But holiday trading, you get nothing.
Yeah. I think you got to. I think you have to be selective with your trading right now. You know what I mean? Like you have to be kind of. I don't know. You can't throw caution to the wind. You gotta relax a little bit. In my opinion, sometimes the trades you don't make are equally as good as the trades that you make.
Yeah.
All right, beautiful. Are you ready to take a quick 90-second break? We can get the voice of reason in here. Mr. Chris Vecchio, we got Let Me Explain. Sound good to you?
Sounds great. Let's do it.
Sounds good to me, too. Let's take a quick 90-second break and come back. We got more Tasty Live immediately following these messages. Be back in 90 seconds. Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock, and short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock, like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the option's price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Nicky, we are back, son. You know what that means. Time for a little more Tasty Live with this man. Let me explain. Chris, what's up, brother?
Batman, you guys look lovely in your Christmas attire.
And I see you did the same. I have to give you the nod. I think yours is the nicest sweater of the three of us. And I'm doing that so you have a good weekend with your family this weekend.
Well, as you know, the Vecchios like to watch Tasty Live when they're home from school. It's important that we teach the kids early, Tony.
Absolutely. And, financial literacy is nothing more important than your own money.
I walked downstairs to refill my little Tasty Live mug, and I was questioned, "Where's your Christmas sweater?" So we did a little quick outfit change here before getting on the show.
Yeah, but you were questioned by your daughter, right?
Wife and daughter, asking me pointedly because they saw the two stylish men sitting on the screen, and they said, "Surely we're not going to let these guys one up our boy here in the house."
That's right. We're Vecchios. We overperform.
We try.
Yeah, we're gonna have to make you do the Christmas photo shoot too. You've somehow dodged that bullet. I don't know if you've seen some of those get posted. They are quite something. They are something.
And you know what, Tony? It's a real lesson out there for the young whippersnappers. When you do something foolish, silly that everyone is going to dunk on you for, you got to own it. Lean into it.
Yeah, there you go. Yeah, there you go.
You have taken away my power here. Like I was going to use these over the year and just for little pieces of blackmail. And you know what? They carry no currency around here because you've owned it.
My only regret in life is I haven't been able to find the similar picture of Nick when he was around 6 years old doing the same thing. So I would love to find that so we can do a little side-by-side presentation, but I'll find it.
Yeah.
I'll find it.
See, Chris, these actually, like those ones, they weren't that bad, right? Because it's family. Where it gets really weird is when you start going past that like little family boundary and you're, with your coworkers, hand to hand or locking hands, or, one is, kind of straddling behind you to take the pictures. That's where it gets a little, you start to,
you and Mike Butler are basically brothers.
Yeah. It gets to be like a little bit, like, wow, we are really close here. Physically and emotionally. I didn't see it going this way.
I didn't see it going this way either.
Oh.
Yeah.
Well, you win some, you lose some.
Yep. Well, what do you got for us today, Mr. Vecchio? What are we talking about?
It's our final Let Me Explain of the year, so I figured we'd talk about Well, some of the data that came out this morning that's obviously causing some people to throw some question marks into the air. And then maybe a little bit year in review and what we can expect moving forward, especially for gold and silver, which have been having quite the fun day. GDP came out this morning. It was a big one. Real GDP came in at 4.3%, which is a very strong growth rate by any historical standard. The more important number, and the one that I think we really need to focus on, is what's happening below the surface, because that's real GDP. That takes out inflation. If you were to add back price changes into the GDP component, nominal GDP grew at 8.2%. That is a rip-roaring economy. So the gap between real and nominal is key, and I think you're seeing it filter into the bond market here today, where volatility is maybe perking up, but more importantly, prices are moving a little bit down. Nominal GDP measures economic output in current dollars. It includes price increases. The real GDP strips out the inflation and tells us how much actual production and demand are growing. When nominal growth is running nearly double real growth, it tells you that inflation is doing a lot of the work still. So yes, the economy is expanding, but a meaningful portion of that expansion is coming from higher prices, not just higher volumes. And that probably matters a lot for the Fed, because from a policy perspective, strong growth says the economy doesn't need cuts. You know, over the past 2 weeks, we've seen CPI come in weaker than expected. We've seen non-farm payrolls come in weaker than anticipated. And yet you look out to January right now, and our friends over at CME, their FedWatch tool, telling us that there's only a 13.3% chance of a January cut. And that's down from 20% yesterday prior to today's data. So yes, Nick, you and I have been reaching for 7,000. We got to get the heck away from 6,850 and SPX. When you look at this set of data here, right, and thinking about, will we get a rate cut boost in our sales through the holiday period? Can we have a little bit of a better sentiment that the cavalry is coming, right? Gandalf's coming over the hill with the Riders of Rohan here in January. That's not something we can hang our hat on right now, because the economy is doing much better than anticipated, even if it's not for the greatest reason. So I'll pose a question to both of you here. I'm getting absolutely killed in my bond position right now, Tony, Nick. I was thinking that we'd have a little bit more directionality in ZB, so I'm long a put spread there. I was hoping for just something to happen in notes, so I got long a reverse iron fly. Just need to get away from 112. I'll go to the Batman. What would you do here now over the holidays, seeing what's happening in the bond market as we make our way into the final full trading day prior to Christmas?
Nick, you want to go first?
Sure. I mean, my biggest question is, okay, yeah, so we've taken January rate cut at least kind of off the table. We know the admin wants rate cuts. And we know that when Jay Powell leaves, it's probably somebody that aligns with that thinking. If you get that with an 8% GDP growth and the money printer turning on, you would think there's some big numbers in the future for basically everything, right? I mean, like, is that what we're seeing with the metals? Is that what we're seeing with equities? I mean, is that just because, you know, if we're trading 6 months ahead right now, is that what we're seeing?
Meaning we're looking into the future.
We're looking into the future of just printer, growth, all in one, and just blast off. Is that what the market's saying right now to you?
I think so. Right, directionally, monetary policy is getting looser. The U.S. federal government in the most recent budget report had spent as much money and then some as it did at its peak during the COVID years. Okay, so deficits are through the roof. We have these tax cuts coming next year for upper income earners, which, just thinking about how people spend their money, right? If the top 20% of income earners are getting a tax cut, the bottom 80% are getting a tax hike, all things considered. The top 20% don't marginally consume more. They're more likely to save, to invest. And so, the propensity to spend diminishes as you go up the income deciles. So giving rich people more money just means throwing it into financial assets, real estate, Bitcoin, gold, silver, in my view. So you have economy growing at 8.2% nominally. Interest rate cuts are coming, and the federal government is spending money like a drunken sailor, like it's operating wartime conditions. Yeah, asset inflation's on the menu, and gold at $4,500 an ounce. You know what I did last night, Nick? I bought $5,000 calls for April in gold.
I love it. Why not? Why not?
What's another 30, we're talking about 45 to 5,000, so 11% over the next 3.5 months.
That's Johnny numbers. You should be buying the 6,000 calls. Play for
I know.
double.
I felt like a coward last night when I was clicking
you guys got to pump the brakes here a little bit. I mean, you do have a $475. I'll round up for you $500 expected move, which does get you to that round number, of 5,000 that you want. There's probably a more intelligent way to do it with a little bit of a vertical spread or a diagonal spread or something.
He's watching, Tony.
Yeah.
I mean, I'm trying to use words that maybe your daughter who's watching won't understand. That her dad is wrong here.
No, never.
I'm trying to use words that I can't spell, so that maybe she won't understand what they mean. I mean, I hate that trade.
Of course you do. I get it. Look, the market is
now you've been in Fuego. I mean, I gotta. I've seen you on the follow page. You've been good. I mean, you've come up with some intelligent, arguments and some good trades to match those arguments. The market's cooperated, which it always has to do, and that's the foregone conclusion. You don't know in advance, but you have an assumption, and you've made it. So you've done well on the follow page, and that's all I can measure you by. So if that's your call, then you're making the right call for what you think. So I got to give you that, but you're completely wrong.
Sure, but thinking about gold and silver this year, right? I think it's a really important shift in seeing how financial institutions and central banks are thinking about risk management. Over the past few years, especially in emerging markets, monetary authorities have been diversifying away from traditional FX reserves like the dollar, but really it's been about the euro. And since 2022,
I'm going to go so far as saying your silver and gold has probably seen its highs, especially silver, maybe not gold, into 2026, all of January.
I can buy that. I was looking at
that was an era of Sosnoff. The prices are high, and therefore they can't.
No. Silver had this after-hour. Silver had this huge after-hour move. I wanted to see it.
That was Boomer shaking at the clouds right there. That was, oh no, you can't win this one. That was what that was, and I appreciate it. But
I listen to you guys, and you got gold over 4,500. You got silver flirting over 70, flirting with 71. You had a big move overnight. There's been all these rumors about so-and-so, JP Morgan or Goldman Sachs had a liquidate a position, all this other crap. The highs are in for 2025 and all of January at the very least.
Well, Tony, you just said it yourself. People have to talk about all this other crap to justify why. Yes. This isn't natural happening. There's an externality here causing this, and so prices will retrace because of this externality.
Sure.
That's not how the markets work this year. The markets work this year like, look at the silver to S&P 500 ratio. It's at like a 6-year high. It's nowhere close to where it was 2008, 9, 10, 11, 12, 13. Same thing for gold in the S&P 500, GLD to SPY ratio. Yeah. So I think when we think about the diversification away from traditional FX reserves, the euro mainly because of the Russia war, they ring fence all of these assets. You look around the world and go, what assets sit outside the global payment system and carry no counterparty risk? Is it Bitcoin? Maybe, maybe not. We still don't have the track record there. So the only answer right now is gold. And as far as I can tell, these central bank purchases, they're running at multi-decade highs. There's a desire to get the FX reserves in line with what other major central banks are doing. So when you go to Asia or the Middle East and it's 4, 5, 10% of the reserves are in gold, and you look to France, Italy, Germany, Korea, Japan, the US, you're seeing things closer to 60 or 70%. There's a lot of room above. And it's that central bank buying, gentlemen, this being a driver, it takes supply out of the market. It's raising the floor of the price of gold. And so silver is not a monetary metal. It's more of an industrial metal, and certainly central banks They don't treat it like a monetary asset, so it's not going into the reserves. But financial institutions and retail folk, they see what's happening in gold and they're taking the signal. Gold at 5,000 next year at some point seems to me like a fait accompli. And I know that's always the worst way to describe a trade, because then you always just you don't do any thinking, and you kind of it's a little bit dogmatic, right? It's less about the trade itself. It's more about the belief, the religious like belief in the price target. That's not what I'm getting at here. But when we're thinking about the conditions in 2025 that drove gold and silver and platinum and palladium and copper up to these multi-year, multi-decade all-time highs, why would that stop? So, guys,
because it always has to stop.
That's tomorrow's Chris's problem. Today's Chris's problem is the music's still playing and the punch bowl's still full.
Yeah. And don't you think it's a little bit of a catch up too? Because all those things have been kind of out of favor for the better part of like the last 10 years prior to basically this year. I mean, even during COVID, it wasn't like anybody was buying silver or gold or any other really metal moving like it is right now. It's kind of been a pretty swift catch up. And we see that like even like a Google that essentially doubled from the lows. You look back and you say, oh, well, that was obvious. But, it happens pretty quick. And it feels like that's kind of what is happening now, is that like, maybe just the metals were just generally cheap for a really long time. And all of a sudden, everything is kind of expensive now. And there's sort of a catch up where, maybe gold is at the higher end of where where it'll be. But it had some room to go where it was you could look at it and be like, okay, that's a little cheap.
Oh, it's all hindsight trading. Look, I mean, listen, we're all talking now about the metals, how they were cheap. I mean, you could say the market was cheap too, because it's at all-time highs. I mean, things are cyclical, gentlemen. Let's not forget that. Now, I made a statement. I was being half tongue in cheek. Plus, I have short delta in SLV, so I'm talking my book a little bit too. But things have moves that are not parabolic forever. The bloom comes off the rose eventually, and none of the narrative changes.
No. Well, I would point to two things to that. One, if you look historically, what happens when gold, and there's not many years where it's put in a performance where it's been up, right now it's up 69.8% year to date. You're not going to find many years where it's done that. 1979, it was up 136%. You can find a few others that give you north of 20% or so. When you have a year that's this strong historically, again, handful of sample size, you're not looking at great forward returns for the next year. So things do tend to slow down. But Tony, to Nick's point, we get to a high of what in gold futures, 1923 and 70 cents back in 2011, and we don't break those levels until 2020. You have basically a lost decade in gold and silver, in palladium and platinum and all these metals where nothing happens, where people think that we don't need them. And now it feels like there is a catch-up trade where, holy, for the past decade, I was selling this stuff. I should have been getting my hands on it. So whether or not that it's a fear-based trade right now. And those are always the most fun because they're irrational and markets can tend to run longer and you get these bursts of convexity. So I'm riding the bull until these things stop. I'm a momentum guy, bottom left to top right. Gold and silver have been oh so friendly this year for us. Until they break our hearts, we will stick with them.
Well, be prepared like a sixth grader to have your heart broken because it's coming quick, and it may have came already, and you don't even know it.
Before we hop off here, I was curious if we could do a little bit of a year in review. I'm curious if you had to sum up this year by a phrase, what would each of you guys say about markets in 2025?
Don't wait to buy the dip.
Trader's market.
There was no dip. There was no dip. I mean, it really has been a straight up market. I mean, I always said I hated V bottoms. I think, since July, we had probably, and I'm just going half the year kind of thing. So we probably had 5 down days a month so you had about 30 V bottoms because you only had a 1 day moves. I mean, legit, they really were 24 to 48 hours at best. Everything since April. It really, it really was. If you got in the way of this market, it ran you over. But this market made a lot of genius. This was a year of geniuses, is what I would say.
Oh God, that's another boomer take. I mean, just, so the kids did good. They can't do good. This is our market. This is we're the rich ones.
By the way, gold is going to be down in a second, and so is silver.
Oh my God, it's down. It's down $3. This is the Sosnoff influence that's on here. You take $3,000 of pain to the upside. You get $5, and you call it a win. I can't. Ugh.
What have you done for me lately? That's right.
This market, I think I will kind of echo what my dad says in a nicer way because I think people are smart and can do their own thing here. I think this market was a great market for traders. I think this was kind of as good as it gets in terms of, most people I think lean long and trade to the long side, but this year gave you opportunities to get in at better prices quickly. You've had some swift down moves. We've had some big moves in your, NVIDIA and Microsoft, and it's been a lot of two-sided action that has ultimately led to higher prices. And so I think this was an advantageous year for people who were able to trade around these moves.
It was definitely a year of believing. You definitely had to believe in the market, and I don't know. I think I think we really got spoiled. It was probably the least healthy market we've ever had. I mean, because it never had the traditional backfill. Even you as a macro guy. I mean, you and I'm talking to the gentleman in the middle there. That would be Mr. Vecchio. I mean, you like to see a little bit of stair step and retracement. We didn't really get any of that. It was just we're down. You buy them. I think that's a horrible setup.
Yeah, but for every one of those, the bull horns were out. Crash coming. Like this is it. That's what it was all year. Everybody's been yelling crash. It's over. It's a bubble. Blah blah blah. That's
totally agree.
That's basically where I'm going with my phrase. It's resilience in the face of constraint, because you have most of this year with investors sitting around waiting for something to break. If it's the labor market, if it's inflation spiraling out, if it's growth because of the tariffs or geopolitics, and nothing happened. It was all boy who cried wolf. And so the market just continues to move up and up and up. But
volatility under 17, VIX trading 14. It's
really
it's
is the story. Yeah, Tony, I can't help but think, because in 2017, I remember everyone freaking out. Paul Krugman's telling everyone the night of the election in 2016, sell your stocks, a crash is coming. And then 2017 and 2018 were some of the lowest volatility years that we have in memory. But that's not typical for people who are trading in the market right now. I frequently have to remind myself that the average trader's age on an institutional desk is about 7 years. And the average retail trader is typically 5 to 6 years, okay, in terms of longevity for people who make it past 6 months. Most people don't know the low volatility era of the 2010s. And so this action that we've had this year, this back and forth, really since COVID, this has been atypical, it feels like, at least in my lifetime as a professional. So going into next year, we got this wall of worry. We got all these things, crazy things going on in the world. Resilience in the face of constraint. Can that continue? Because if it does, Nick, S&P 8,000, these are just numbers at this point in time. Like S&P 8,000, gold 5K, Bitcoin, can it get back to 125K? Silver $100? Why not?
And just to put it out there, and people in the YouTube chat chatting this in, we did have our crash this year, and we had a crash for COVID. We've had many a crash. This has not been just a straight up move every day.
That's fair, but COVID was 5 years ago.
Yeah, but the one before COVID was 20 years before that, or 12 years before that. 2008.
Was April a crash?
April of this year, yeah.
Nah, that was a correction. That's not a crash.
Oh, I don't know.
You guys don't know what a crash is, and when it slaps you in the face, it's going to be like a mackerel. Do you eat mackerel? What do you do? Hey, by the way, are you doing 7 fishes? Chris, please tell me you're doing the 7 fishes.
So we do. The family does the 7 fishes. I don't eat fish. So
what the freak is wrong with you? I mean, you got this stupid macro. I hope your daughter's not listening anymore. You got this stupid macro view, and you don't eat fish.
Oh, yeah. Christmas Eve is probably my least favorite meal of the year food-wise. But my dad makes a mean aglio e olio, so I eat several bowls of that with the crispy garlic.
Wow, I'm jealous. I love families that do the 7 fishes. You know, it's hard to do 7 fishes when there's 3 people sitting around a table.
Yeah, they do eel, they do the calamar.
Wow, very nice. Very nice.
Whole thing.
Well, Batista's travel well. Someday we'll get an invitation. I appreciate you coming on, Chris. I'll give you the last word to wish everybody a Merry Christmas or something like that.
Technically, it's Festivus, Tony, and I'd like to air my grievances with you. It's been a wonderful year. I hope everyone's had a great year. I hope everyone had a nice Hanukkah. They're getting ready for a nice Christmas. We'll be on air today and then, of course, next week. So hopefully we see people between Christmas and New Year's. Other than that, Nick, please get away from 6850 SPX, although that may be the guess the market year end for someone here on camera. So it wouldn't be the worst thing in the world for their little sensitive ego.
I mean, you're right. We're 68.73. I mean, this is where we've been for the last, 2 weeks, basically.
Get away. Please get away.
Good job out of you. Let's take a quick 90-second break as the evening S&Ps are down 4, NASDAQ's down 46, Russell's down 21, Dow's down 40. Gold is completely unchanged, maybe up $1 now. Silver up 76 cents. That's a 1% move. And /PL, it is palladium, is still up 7%. That is not sold off with any other metals. Palladium would be my least favorite. Matter of fact, I probably wouldn't even have it on my watch list if we didn't support it. But we'll be back in 90 seconds. All you can do is trade futures there. We got a market measure next. Thank you, Chris. Merry Christmas to you and your family, or Festivus, or whatever it is you do because you don't eat fish. So
ashamed. Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this market measure sponsored by the SIBO. But before we do that, let's take a look at the market here. Even the S&Ps only traded 278,000 cars, relatively light volume. Light volume yesterday. We're down 5 handles. Volatility is not moving. It's basically unchanged. It's had about a 20-cent range. It's 5 or 6 cents off of its highs, but you can see here right down near its lows for the last couple of months or so. NASDAQ's down 51. Russell's down 18 or 19. Dow's down 23. SPX, as you've mentioned, is just sitting at 68.50 here. It's really kind of been going sideways for most of the last 2 weeks or so. We've had a bigger dip down, I guess, relative, but come up just as equally. Bonds are 114.30, about 6 ticks off of their lows. Bitcoin, man, that's been the biggest disappointment. That's the disappointing child, I think, of 2025. I didn't think we would say that after making all-time highs back in October, around 120 some odd thousand or so. That it would be the most disappointing, but I think for a year that everything is higher, Bitcoin's the most disappointing. With Ethereum, we'll throw that in there too. Oil down 14 cents, just under 58 to 57.85 and change. Gold now catching a small little bit, up $6 after turning red for a second there, and silver up 90 cents. That spread, that ratio is probably contracting a little bit more. I haven't done it in my head, but I will in a moment. Net gas up 7.5 cents. That's all I got.
I did. I just closed out of. I had these diagonal spreads. I did them with Vecchio on one of our last calls together in FCX, Freeport, copper play. I had some diagonal spreads there. I just closed them out for a couple bucks. They're basically full profits. They're diagonal spreads where the stock has gone well past the short option, so there's really not much left to make on them.
Which is a high class problem, right? I mean, you want that to happen, right?
Yes, it's good.
Yeah.
But I just figure I'd take the position off and take the money and run. And then I did a 1/3 ratio spread in Rocket Labs. This is the market that I'm in. This is my brain space right now. Yeah. I'm looking at this stock. I have this. Somebody put me in a call ratio. I bought in the risk, and so I have this like free butterfly that's right at the money at 75. It's a stock that has had just an astronomical move to the upside. You've got tons of call skew. It's kind of in the meme realm. It's in the SpaceX realm. It's in the government contract realm. Tons of call skew. So I bought the 80, sold 3 of the 90s. I did it at $2.35.
Markets are a little bit wide in here. It's showing
they're not great.
Yeah, 260 or 270. Sure,
we're reaching.
Yeah, you're reaching. Yeah, you're definitely you're trying to make something. You're trying to make something happen here. As long as you stay small, and 1/3 is not that small. I mean, usually you do something 1/2, which you probably could have done for a very small credit or even a debit if you had to, right? Mm-hmm. You'd have to go a little further out of the money.
Yeah. That doesn't get the juices flowing, though.
I get you.
Do we take this hut position off or you leave it?
Ooh.
I think you got to leave it. We basically have the straddle here at 50, so we're long shares at like 42. Stocks at 52. We're short 2 of the 50 calls in January. They've got about $1,000 of extrinsic value in them.
You're short the Jan 50 calls, you said?
Yeah.
Yeah, you don't want the stock to go too much higher. I'll say that much. You'd like it to sit for a little bit, or volatility contract. You're getting the volatility to contract. You could probably use it back down. I mean, obviously, you can use it back down towards 50.
Yeah.
January's got some time left to it with 24 days or so, and a couple of closed holidays in there. I don't know. I think you sit.
I think so too.
I
All
agree
right.
with the 55's coming in.
Yeah.
Good job out of you.
You want to do it? Market measure?
I'm ready.
Sure,
Let's do it.
sure. How much do we pay for every unit of Vega? An interesting discussion here. Do you look at
to get back to Hut for just a minute? I mean, you're up like 2.5 points on the
Yeah.
trade.
Yeah.
I mean,
That's all on the stock. The stock's gone up $10.
Right. The options you're down small, probably 40, 50 cents today, and you're up, $250 or so on every one by two that you have. So it's a good position.
Yeah. I mean, if you wanted to, you could probably sell a call out or a put out against it, but there's just the call skew is where you want to be.
Yeah.
That's why I'm leaning towards just holding it, because you have the static delta. It's different than like being short the puts and being tested to the upside, because those puts lose value and that hedge comes off the table. I've got 100 shares, static delta. My options, my two options with, about $4 of extrinsic value in each of them, it basically means that if you're below 55 in the next 24 days, you're really no worse off than you are right now. Like the position won't really change, because you're statically long those shares with $8 of extrinsic value on the table. So your break even is basically at like 55 on this, based on the value of the options right now.
Yeah, right. But the stock's 53, almost 53, and you got a $10 expected move. So you definitely have risk.
Yeah.
All right, ready to go.
Cool. How much do we pay for every unit of Vega? We're going to be talking Vega today.
Yeah, I got a lot of Vega discussions. Matter of fact, people talking about, buying year out options to the downside to protect their downside. And it does sound like, a sound market. Volatility is low relative across the board. But when you look at volatility, you're not alone in this. When you look at, December volatility or January volatility of 2027, you're up in the 22 handle, and front month vol is like 16. So, there is a big vol skew, 6 points. Remember, I like, if I'm doing anything like this, I don't want it to be more than 2 points. I usually do it, intra month, meaning like if you wanted to buy, May or I'll go May, 87 days out, you're paying 17 and a half versus February, which is 16. I don't mind that. When you go further out than that and you've got 5 or 6 vol points, it's huge amount of Vega you're paying for.
Yeah. And you really need that realized move, because they don't move 1-to-1.
That is right. Anyway, I'm sorry. You were talking about Vega, and it just reminded me about the emails I got.
That's okay. Don't be sorry.
Okay, thank you.
You don't have to say you're sorry. We love each other.
Love is never having to say you're sorry.
Yeah, it's okay.
That's right.
All right, let's do it. Vega. We're talking Vega today. Next slide, please.
My least favorite subject.
Vega measures the change of the options value when implied volatility moves up or down by 1%. This is looking at the actual implied volatility of that expiration. It's not the IV rank number. It's the actual implied volatility that you are trading in those options and that expiration. And it's just based on 1% move. Obviously, different strategies we employ have different Vega values, but most of them are short volatility trades. And so you are short Vega. When you sell a strangle, you are short volatility. You are essentially selling the market's expectation for price movement in that stock or ETF, whatever it is that you're trading. That is really the basics of what you're doing. You're saying, the market expects it to be this much move. I don't think it's going to be that much. And I'm selling that that value. So you are playing for realized volatility to be less than implied.
And this is exactly why we look to sell premium when it's high, for all of those factors right there. Because we want it to contract. Obviously, we want to sell it when it's high and not when it's low.
Exactly.
Mm-hmm.
Next slide here. So we're going to review some basic delta neutral short vol trades that we do constantly. Straddles, we're going to look at 30 delta strangles. We're going to look at 16 delta strangles. And we're going to kind of see if there's an optimal, again, this is kind of going to the discussion that we had for the option jive this morning. Like, is there an optimal spot, where you get the most short volatility and the least amount of risk? I think you know where this is going to go, that it's all going to be proportional. The most risk will have, the most volatility exposure, the most potential reward. That's all going to be kind of the story here, as we've always talked about.
Yes, very good.
So the study, we're looking at 2020 to present, so the last 5 years of trading action here. We're doing 45-day positions. So we the positions that we looked at on the last slide, the 16 and 30 delta strangles and the straddle, and we're going to manage them at 21 days. We're going to look at the volatility of the P&L and then just the Vega exposure of those positions.
Classic kind of tasty mechanics here that we're going over. We're not doing anything different that we wouldn't do in real life, right? So we're trying to look at real life examples here over a relatively good amount of time, 5 years.
Yep. And so with higher delta strangles, we get higher opportunity from Vega, but also higher risk. Goes to exactly what we said. You're gonna have your most vol exposure with more risky positions. And so, what strategy provides us the most amount of Vega per unit of risk is what we're kind of going to look at here. And so you can see on the charts here, as you have more risk, you're going to have more vol exposure, and so on. Less risk, less vol exposure on those positions. So it goes hand in hand, but we're going to try and quantify this and say, is there a perfect best spot? Do you think there is?
Yeah, I don't know what it's going to come out to be. I guess there's going to be a perfect best spot. You mean between the amount of volatility and how much Vega you're exposed to?
Yeah, risk and volatility. You think there's going to be a perfect spot, or it's all going to be kind of the same? Because options are priced for that risk. So it goes to the email that we get all the time of like, what's the perfect spot? If there was a perfect spot, it would be priced differently. Like if there was a spot
that would be the cheapest or most expensive, depending on what you were trying to do. Sure.
Exactly. Like if there was a spot that was optimal, that was priced cheaper than everything else, that would be
what you would want to buy, right?
Everybody would trade that. It has to, all prices and all options are going to reflect this idea. Like there's going to be no, you're not going to find a holy grail in markets. It's all priced in. There's no like special spot.
Good point. It's basically saying what I was reiterating a moment ago when I was looking at SPY, saying, yes, it makes perfectly good sense with volatility being so low that you would think about going further out of the money to do something with your further out in time to do something with your positions, kind of protect your Vega risk. But it's already elevated relative to everything else. So it's all priced in. Everybody's seeing the same picture. So
exactly. You see it, I see it, they see it, everybody sees it.
Yeah. Yeah. It's a very good point.
It's a beautiful thing.
It is a beautiful thing when you think about it.
Yeah. So getting on to the next slide here, it seems that no matter how wide our strikes are, the amount of Vega exposure we have that we're short per unit of risk we take is the exact same. So this suggests that the opportunity and risk are priced efficiently. Essentially what we're saying here is that, and this goes to harp on the option jive from this morning, less risk is going to be a higher pop, but going to have a lower return on capital, right? So you sell a 5 delta option, you get paid a lot less to take that risk, and it's going to be a higher probability. It's the same sort of idea here. Like, just because you're further out of the money doesn't mean that you have less vol exposure. You have all the same vol exposure. It's just a difference of where your risk is. Vol across the curve is going to act differently, which is a hindsight look back. The options that are closer at the money are going to hold value a lot longer than the further out options. But right now, when we're looking at it, the Vega is reflected in all of those positions. It's all the same.
Sure.
And so, the moral of the story is that there ultimately isn't a perfect spot. There's like the spots that we like to trade in where, you have a good balance of risk reward. You have a good balance of probability. You have the right exposure to volatility and theta that we're all comfortable with. That's where we live in, but there isn't a perfect spot. There isn't like, this is the best spot. They're all going to be a little bit different. And they, it comes down to your risk tolerance, your capital, directional assumptions, all that is where you get the variable of why you use one or the other.
Very good. Good job out of you. Good job out of the team for sure.
A couple takeaways. More Vega in hopes of volatility contraction is met with more risk. When you are short more volatility, you'll have more risk. That comes hand in hand. No matter how wide your strikes are on the strangle, the amount of Vega opportunity you have relative to the risk you take is constant. So, it just further reiterates the point of like, more risk, more reward. Higher pop is going to be less reward. Lower pop is going to be more potential reward. Those are just kind of the constants across trading.
So what is your takeaway from this whole Vega discussion that you have here? Like, what is your takeaway about Vega and its risk?
I think Go ahead.
Well, what I was trying to go with here is it all comes down. They mentioned with the strikes and everything else, it all comes down to size, right? I mean, your Vega risk obviously comes down to size first, and then strategy that you pick after that. Because the strategy you pick either accentuates the Vega risk or mitigates some of that Vega risk. So it really comes down to just size and then strategy. What everything comes down to in the whole totality of trading, it's really just about size and strategy.
Totally. And I think it just, I think people get fixated on like, should I sell this strike or this strike or this strike? And it basically tells you that whatever you're seeing right now is priced in. Right. So you move your strike up and you will have $1 extra of potential reward, but you're going to have more risk on it. Like there's always going to be a trade-off. Like there's not going to be the perfect spot. And I think that is the hardest thing for people to come to grips with, that there is a variable that you simply cannot measure. Which is, what happens in the future. And so I think this discussion was like, we want to be short volatility in stuff that is high volatility. And whether you do the 16 delta or the 18 delta or the 20 delta, it doesn't really matter. It's kind of all the same. It's just a measure of what your risk tolerance is, how your confidence level, do you really think it's going to be well inside that? Then you go to a tighter strangle. Like that's the variable. It's not, the variable isn't which strike is better. It's your own assumption. I think that's what this is really about.
Good job out of you. Let's take a quick 90-second break and come back. We got more Tasty Live after this with, Q coming in the house. We'll be back in 90 seconds. Tasty Trade World Headquarters next.
Tasty Trade's Money Match event, unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. But before we get to him, let's take a look at the market. Even the S&P's up around 7 handles, haven't moved. NASDAQ down around 2. Russell down around 11. Dow up around 65. Let's just call it a completely unchanged market across the board, as now you have almost 3 indices. There you go, 3 indices. NASDAQ catching a small little bit. Volatility in by 5 cents. Cancel, crash. Bonds are down 1. We really didn't get a chance to buy the dip in there. I was looking to do something all day in bonds, trying to buy them, but never really saw any kind of capitulation in the market there. Bitcoin 87.7, down almost 1,000. Ethereum down 56. Like I said, the 2 disappointments in the market right now, down almost 1%, almost 2% for Ethereum. Oil is down 16 cents. And gold has caught a little bit, up $6.70, and silver's up 75 cents, a 1% move, still well off of their highs in both of them. And I know I called this palladium earlier. I meant platinum. Platinum's up now over 7.33%. Some of the market leaders in the market, if we take a look at what's going on our high option volume list, let me do this for you one more time. Leaders, there we go. Google up $3 and change. JP Morgan up $2.90. Lilly up around $2. Lilly's had a $20 move from 1,060 and change to 1,080 and change, but it's an untradeable product. I wish the markets were a lot better than that. Nvidia up $1 and change. Microsoft, which you were looking to try to buy the dip in, up $1. 20 and change on the downside. App Lovin down $17. It was a leader yesterday. It's a lagger today. Coin down almost $8. Carvana down 5 and change. And Oracle down $4.60. Hood down $3 and change. I think their crypto exposure Hood is the one that what hurts Hood all the time.
Chop.
You're right.
This has been, this is holiday trading. This is just, you got to have something better to do than try and
try to push
a couple dollars out of this freaking market. It's tough.
Yeah, you reduce size, you do a lot of different things.
I mean, we've done 3 trades today, of which, one was a closing order, or 2 were closing orders. And, we've been averaging 30, 40 trades most days. So it's, you can't do much when you get a 10-point intraday range.
This is true. But somebody who you can do a lot with, you can mold this guy into anything you want, ladies and gentlemen. He is a beautiful piece of clay. Who do we have for the trade desk? And did I mention a good, handsome sport wearing the sweater? Q, what's up, my man?
Fellas, how's it going? That's got to be the best intro I've had since starting doing the show.
I try. I saw that Christmas tree on your head, and I was like, this man is a trooper.
Thank you. And then
he's got some incriminating pictures, too, with
he's got
him and Glenn.
Very nice.
We've got like a whole nice sweater today.
Look at that.
Those are headlights. You got headlights.
Yeah, shout out to Laura for passing this to me.
Very nice.
Beautiful.
They gave us these ridiculous headbands too, but I just couldn't get myself to do it. But you did, my friend, you did. So I'm going to show you solidarity. Q, come down a little bit lower.
I don't know where mine is. Mine's somewhere. It doesn't show up.
I feel like Vanetta without my bow not working. It's not showing up on Zoom. I'm sorry. I did try it though, Q. I wanted to be in solidarity with you.
Thank you.
You're welcome.
Okay.
Team player here.
And so here's what I've got for you guys today. So one, just go over some housekeeping. Tomorrow, we've got a half day in the market, so just your regular half day. And then Friday, full day. But Wednesday, tomorrow, is half day. So just wanted to let everyone know out there, PSA. And then also, even though it is Tuesday, we do not have a demo. But what we do have is 2 things. One, we've got the curve analysis mode and the risk analysis mode, both on the Tasty Trade YouTube. So if you're, I always say this on the desk, that everyone's like, oh, it's a slow day, it's because of the holidays. I'm like, if you're a real trader, you don't want to be with your family. You still want to be trading. So if you want to go check out the platform, things like that.
I get both. I get to be with my family and trade.
Look at you.
I am blessed.
At you. Yeah.
This is the unicorn situation.
Yeah, very true. Very true. And so, if you guys want to review the platform, while you're on an off day in the market because it's closed for Christmas, check out the Tasty Trade YouTube.
And that's a separate YouTube just for everybody. Tasty Trade on YouTube. So this is separate from I know people look for it on our YouTube channel. It's on a separate channel, so it's the Tasty Trade channel.
Yeah, so you can search up
subscribe and give it a like too.
Yeah, subscribe, give it a like. You've got some nice shorts on there for the 12 days of Christmas as well. Just some information from the trade desk that's been really good. And then just search Tasty Trade platform tutorials. That will pull up our YouTube channel, and then you can find it there. And then for some upcoming demos that we have, our next demo is on January 6th. So I've got the list here. We've got inside the IRA. So trading in an IRA account. That'll be really fun, I think, because you can do a lot of strategies at Tasty Trade. There's no minimums to trade spreads and things like that. And then if you want to trade the big futures contracts and trade short calls as well, we do allow short calls in an IRA, which is super unique. All you need is $25,000. And so if you have that in your IRA, transfer something over to Tasty Trade, and then you can trade all those active trading strategies in an IRA, which is super cool. And then after that, we've got Trade from Anywhere. And so that would be a mobile app demo the week after. And then we've got Earnings Essentials, just placing some trades for earnings, showing how to use the platform to see the different earnings trades. And then after that, we've got Order Chains, showing off one of our most loved features. You don't have to have a spreadsheet next to you when you trade. When you're a Tasty Trade, you can use the order chains to track all of your rolls and things like that. You know, my dad still uses the notepad regardless of whether we have order chains or not. He still loves using the notepad. But if you don't want to be archaic, you can use order chains. And then we've also got, of course, everyone loves this, the 0 DTE demo after that. And that's what we've got going until the beginning of February.
Good job out of you, my friend. Very good job indeed.
Yeah, and just to add on top of that for tomorrow, so half day for equities, ETFs, all that stuff like options. Futures will go the full session, so you'll still see markets moving, but it'll be just the futures.
Yeah, we also have this in our Help Center article as well for all the holidays. Just search like Christmas and then it'll show there. Search Christmas in the Tasty Trade Help Center and then it'll show what the hours are there as well.
Beautiful.
All right,
Good job,
let's go
my man.
into
Good job.
let's go into some symbols here. So we've got top 20 symbols going through the system and their IVRs. At number 1, we've got Tesla 4, SLV 9, Nvidia 0, GLD 53, Amazon 4, TQQQ 14, Google 1, Oracle 41, NVO 18, IBIT 40, Micron 31, Google without the L 2, AMD 11, Robinhood 7, MSTR 29, Netflix 35, Palantir 0, Apple 0, Rocket Labs 25, SoFi.
What are you noticing here? I mean, I think this is one of the few times where you're basically saying 0 multiple times.
Yeah. So if you've been selling premium in some of those underlyings, you've been collecting over the, recent past, like, let's call 2 weeks, something like that.
It's been a good trade. I mean, SPY IV rank at 7 and change, pretty much some of the lowest that it's been. It did raise its head up into the 20 IV rank just about a week and a half ago or so. So there was some volatility after that roll of the futures, but man, this is one of the biggest squashes I've seen, met by one of the bigger up moves in the market too, right? What was it, about 4% or so?
Yeah.
Recently. So big move in the market, big move in volatility, which usually, if you remember when we were going lower, volatility never caught a bid. It was really a great indicator of what was going on. I didn't take advantage of it as much as I probably should have. I was a little, sometimes you watch something and you don't believe what you're seeing, and that was volatility not expanding, but it really was a great tell this time.
Yeah, you guys are always scared to buy the dip. It's a sickness that you have. It's the old guys. I don't know why.
I'm not a big buy the dipper either. I'm not one of those.
I've done it right for myself. I'm happy with my.
You're just looking for that. No, it's going to be more. It's going to be more, and then boom, you miss it.
No, I will give you some props on that. You are right, especially being on air here. You want every trade to be profitable, but you're really held a lot more accountable with every trade that you make here on the follow page that people can see. And more importantly than that, a lot of times people, echo or do exactly what you're doing. And, it's one thing.
We're all thinking the same thing.
We are.
That's kind of the trader mentality. It's somewhat herd mentality. I mean, I think we are all seeing the same things in one way or the other. I mean, we all have our own opinions on specific spots, but every trader is looking at metals right now. Even if you don't trade metals all that often, everybody's looking at them. Everybody's looking at your Rocket Labs because those things are moving right now. It's just that's just how it is.
Yeah. And when markets are a little slow like they are right now, we all kind of gravitate to the same watering hole too. Like you just said, yes. Rocket League. That's something I would never look to trade. Now I'm looking to trade it. But you gotta be careful. Markets are a little bit wide in there.
Yeah.
My man Q, before we leave here, I want to wish you a happy, merry, healthy holiday. And everything that you deserve the best in life. You've been a great support over this last year and years that you've been with Tasty ever since you were 11.
I think 10, 11, so I don't know. something like that.
Ever since
you were born in the darkness. You were born in the tasty realm. You know,
for sure.
Shaped by it and molded by it.
Yeah.
You were definitely born in a cave. There's no doubt about that. You definitely were, my friend. I appreciate you. I know the firm appreciates you. I haven't heard a word out of Nick appreciating you, but I'm sure he does.
Hey, that's my boy. That's my boy right there. We go out together. We hang out together. We go to the same Hanukkah parties. Okay. You know, you don't even know.
Hey, Nick, you don't need to say it. I know you mean it, so don't worry.
Of course, you're my man, my brother.
my brother too. Nikki, I want to thank you for everything that you've done too. I mean, I think you've really stepped up and filled some big shoes with Tom. That's probably with Tom stepping down. That was probably some of the biggest and best Christmas present that I got. So, you know, you usually come to my house empty-handed. This year, you have filled the boxes. You've made my life very, very simple. So I appreciate it. No monetary gifts are needed, so it's all good there.
Yeah. Okay. Thank you. I appreciate that.
No, really. All kidding aside, you've done an excellent job. So
good job out of you, Dad. Good job out of you.
Yeah, I hear great things about you as well, Nikki, from like people that are calling in. They'll just, they'll ask their question, then make some comments about the show as well. They all say that you're doing a good job. And if they didn't trust me, I'd tell you. So
thank you.
And there's no replacing Tom. He was a force of nature. So good for him for building the infrastructure to support the show, so it can keep on going. Let's talk quickly about the markets, and then we'll go. Even the S&P's cancel crash. They're up 12. NASDAQ's up 22. Russell's the only one that's kind of knocking the market lower, down around 10. Dow up 94. Volatility in by 8 cents. Bonds are down 1. Bitcoin's a big disappointment, 87.7, followed by Ethereum down 56. Oil down 13 cents. Gold caught itself a bit again, back up $15. Silver down silver up $1.20. I'm sorry, silver doesn't go down. I apologize. And the rest of the market here on the downside, you're looking at AppLovin down 14, Coin down around 8 now. Oracle, Hood, Carvana.
We missed our bond move.
That's my biggest. That was my biggest. I didn't kind of shy. That'll happen when markets are kind of complacent and there doesn't seem to be a lot of action going on. Should have been more aggressive and tried to do something.
Oh, now they're calling me out.
And now, thank you to our production team.
Yes.
For the wonderful sound effects and making sure they accentuate when I'm wrong. So I really do appreciate that. We are going to take...
Really quick. Can I say something really quick?
Sure.
So just before we head out, I just want to give, a shout out to all the customers that we have at Tasty Trade. By far the best customers in the business, the smartest, the most responsible customers in the business. Responsible customer is a good customer, as we were talking about, like the cap rec risk analysis, things like that. I just wanted to give all of them a shout out. If you ever have any questions, please feel free to reach out to us on the trade desk. We'd be more than happy to help you out. We've got, plenty of knowledgeable people. I'm one of the least knowledgeable. That's why I come on the show. We've got all the good people in the back. All right. So always feel free to reach out, and wishing everyone a happy holiday season.
Well said.
Thank you, my friend. We're going to take a quick 90-second break. We're going to come back. We got more Tasty Live after this with Liz and Jenny next up. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Quiero una indecencia, por eso te quiero desacatar. Te estoy esperando en la fila, yo que tengo tanta paciencia. Contigo quiero una indecencia, por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. don't you tell me the rest of the line? Hey, hey, hey. Hey, hey, hey. I'll be right beside you, all I ever want to. Can't get a better view. Honey, spring and summer, right through all the way I told you. Can't get a better view. 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 Cruising upstate and cooling down, pulling over to fool around. It's high time to get out of town. Close our eyes and get lost in the sound, yeah. Hey, hey, hey. Hey, hey, hey. I'll be right beside you, all I ever want to. Can't get a better view, honey, spring and summer, right through all the way I told you. Can't get a better view, can't get a better view, can't get a better view. I'll be right beside you, all I ever want to. Can't get a better view, honey, spring and summer, right through all the way I told you. Can't get a better view, can't get a better view, can't get a better view, can't get a better view.
Hello, everybody, and welcome to the Liz and Jenny Show. It is the Tuesday before Christmas Eve. We are live in the SPX pit. This is Liz Deerking. I'm Jenny Andrews. It's crazy down here.
It is a lively bunch of people behind us today. There are no rules. They can be wearing hoodies, as you just see people walk by.
Normally not allowed. No dress code today. It's Merry Christmas to the traders. There's no dress code.
Frank, we tried to say Merry Christmas to you. We really tried to get your nephew on. He still said no. So that's where we're at right now in life, Frank. He still said no.
I didn't want to break it.
2026 is going to be the year where we catch Jeff on camera.
I did not want to break Frank's heart and say his nephew did not agree to our special Christmas spectacular that we were planning, but he did not want to be a part of it.
D9. Jeff, one of these days, 2026, we've got a full year to catch him on camera. He's like a leprechaun. We'll get him.
We'll get him. We'll get him. Anyway, we've got a special holiday show for you. Maybe they'll be singing. Maybe they'll be dancing.
All of it's true. You never know what's going to happen when you're live from the SIBO. You know what is funny? You never know what's going to happen during a live show. People spill. We have maintenance crews. We've got lots of things going on. They are a little bit busy. I was promised some caroling at some point, but I think that that's not going to happen.
Spoos up 16. Spoos up 16. So there was a little bit, when we just had that rally from like up 8 to up 16, there was a little bit of action. A little bit of action.
Yeah, but it's been, I mean, there was.
Yeah, it's definitely busier than I thought. When we got on the train and we were the only two people at the train station, I didn't know what we were coming into.
I didn't think the train was going to come pick us up. But yes. No, but the markets are open, and the markets are open tomorrow. It is a half day tomorrow on the SIBO floor as well. So
half day tomorrow.
Half day tomorrow. Then there's one day off because you cannot be closed for more than 3 consecutive days. They will be back on Friday.
On Friday.
We will not be. These two will not be back on Friday.
Two of us, but we'll be back next week. We'll be here. We'll be on Monday. We'll be live from the floor on Tuesday,
and then we have the morning show on New Year's Eve.
Yes, morning show New Year's Eve.
Yeah, we get to wrap up 2025 in a nice little bow.
Honestly, as far as the people on air, it makes sense for us to do the morning show on New Year's Eve because if I'm young and I'm going out to some New Year's Eve party, I'm going to be partying all night. I don't want to wake up at 5 a.m., 6 a.m. But if the two of us, my midnight is East Coast time. I play the East Coast ball drop at 11 p.m. I'm in bed. I don't need to worry about.
I'm telling you, and you know who I need to get back on this show? And when he gets back, where's the Swiss Alps? Where's he skiing?
Oh, Glenn
and his free JD. JD's being locked. He's gonna be locked down for life. I was up all night long with that kid last night. Yeah, free JD. No.
JD is not. He's in trouble.
He's in trouble.
It's tough. You know what? So JD, for those of you who don't know, is Liz's son. He's a freshman in college. When you go away and you're a freshman in college, it's
your first taste of freedom. You don't think the rules apply, but they still apply when you get home.
And then you come home for Christmas break after partying like a rock star, and the party continues.
Yeah, but it doesn't.
It does. And
he actually got in trouble for being a good kid last night. All night long we were up. Taking care of some other people. But yes, that's okay. Nonetheless, Glenn's in trouble for free JD, and so now Glenn's in trouble too. They're both in trouble.
Hope Glenn's having a wonderful time skiing in the French Alps. What do you have going on, Liz? What is your Christmas Eve and Christmas Day? What is it going to look like?
So, it's pretty standard. We do the same thing every year. Christmas Eve, we throw a big party at our house.
Yeah.
And then Christmas Day, I go to my in-laws.
Nice.
Yeah.
That'll be
pretty
nice.
easy.
Nice and relaxing.
Yeah.
Do you have...
Nice and relaxing.
Nice and relaxing.
I have 46 people coming over for dinner. It's nothing.
Well...
I'm making filet for 46 people. 43.
But at least you've got, so you'll have a good time. You always manage to have a good time.
I will have fun. It's just not relaxing, like you said.
Yeah. No, I know. I threw my party Saturday, and the aunts... You know what? I've taken a page out of Liz's book where you just keep walking around filling people's drinks, and then nobody knows what the heck is going on.
It's true.
Yeah.
It's true, all of it. But what about you? You guys are by yourselves on Christmas, right?
No, Christmas Eve at my in-laws, Christmas Day at my parents.
Oh, okay.
But Christmas Day at my parents, ever since COVID, it got real casual. So we all go in pajamas. It's very laid back.
That's awesome.
Christmas Eve is a busy day. Christmas Eve is a busy day. Party all day, midnight mass at night.
Yeah.
So come rolling in at 1 a.m. after midnight mass.
Yeah.
Busy day.
That's why everybody stays in my house so late because they're going to midnight mass. So it's never a relaxing
they stay
day.
until they go.
Yes.
Yeah.
And then they leave the house in absolute disaster, so then I have to clean for 3 hours.
I mean, it's kind of weird. It's like the only time of year you can go to church and everyone's hammered.
Yeah.
Like everyone goes after their parties.
I know.
It's an interesting concept. But
It's fun.
Anyway.
But yeah, so we're very excited. So we're taking live tweets with the hashtag LAZJNY. We've got the best of zero DTE studies, part 1, part 2 is next week.
Yes.
We're very excited about that.
So Tuesday, although wait, is Tuesday the morning show or Wednesday the morning show? Wednesday's the morning show. Okay, so Tuesday we'll be doing part 2. Wednesday's the morning show.
Yes.
All right, do you want to play some trades?
Let's do the SPX calendar.
Yeah, I know we have an SPX study, but we've been doing the calendar. I've been talking about this calendar. I'll do the 0-day, 1-day calendar. Ranges $8.90, $9. I would say $8.70 to $9.20 is what I've seen as average.
No, you've been doing the puts, right?
No, it doesn't matter. Doesn't matter. You know with the calendar, calls or puts, doesn't matter.
Ooh. It's more expensive now.
It is more expensive now. This thing, guess how much I paid? I did 2 today because the first one, what did you say? It was like $4. $4.
Literally $400.
So put that on for $4 this morning.
Yes.
When SPOOs were up 10. Then when SPOOs were maybe only up 5 or 6, guess how much it was?
How much?
$3.60. threw on another one.
Same strikes?
No, different strikes. But they were so cheap today that I thought, why are they so cheap today?
And one might ask, why are Liz and Jenny doing this in a day? We're on the last call.
You know why?
So we're on last call, so we can manage it. It'll either be managed during or on last call.
And honestly, you know why they're so cheap today? Like ding, ding, ding.
Half day
ding,
tomorrow.
Ding, ding, half day tomorrow. So
Yeah, I saw that on the train.
half day. So there's only a half day. So you look at the 1 day at the Money's, they're only $9 or $10. They only have a half day priced in, and the market is thinking we're not really going to move that much. That's why these are so cheap.
Yes, right. And I mean, I did this. I was just looking at mine. I did the 68.85, and I know you did the 68.
I did too. I did like one slightly up on the calls and one slightly down on the puts. I figured if my shorts cash settle at the end of the day, I got to straddle for the mayhem that's going to happen tomorrow.
For the half day that's happening tomorrow. We got to pick a direction here. So do we want to do the 68.95? I think we should go 6,900.
Yeah, 6,900. 6,900?
Oh, 69.00.
So you're thinking we're going to get a 7-point rally?
Yeah.
How much is it? If it's still like, yeah, sure.
I'm just picking a round number.
Everybody, get ready. Hollywood. We got Hollywood walking by.
Hey, you see, you guys might care about this.
I know you don't have a mic. You don't. Oh, yeah. This is breaking news.
This is yesterday.
Breaking news.
Look at this. June of 27.
Okay.
$92 call.
All right.
Paper bought 5,000.
9,200 call.
Yeah.
So someone bought
June 27.
June of 27.
All right. I'm going to the platform.
June of 27.
June of 27.
June of 27.
Yeah. The $92 call. 5,000 were bought yesterday. Oh no, 5,000 are currently bought today. Yesterday, Dece of 28, 11,000.
All right, he doesn't have a mic, but I'm gonna.
You probably care.
June of 2027, 9,200 call. How 5,000?
Look at this.
And
look
then
at this.
we
It's right
got
here.
Dece of 28, 11,000.
Okay, got it. Thank you. We got it. Thanks for writing this down. Thank you.
Thank you. We appreciate
love
it.
the market makers when
so
they help us out.
take a look at this. While you were talking, the 9,200. Did you say paper bought it?
He
or
said
sold it?
5,000. Paper bought it. So interesting that the open interest is only. So you're in June of 27.
June of 27.
5,000 were bought yesterday. So the open interest is only 1,000. I'm going to guess, could that have been a closing order?
It could have been open and closed.
Oh, it could have been, yeah. It could have been open and closed.
What's
like,
the
that's
December?
crazy. So December of 28.
Let me clear these out. Hold on. December of 28.
And this is insane, too. December of 28.
Hold on.
We got December 2028. I mean, come on. Yeah, you were.
Wait, I just want to see some. I'm closing up all these real quick. I want to go to the top. Because when he said December 28th, I was thinking December 28th.
No, December of 2028.
Okay.
December of 2028. Keep going.
Got it.
There we go. The 11,000 call. So Spoo's 11,000.
There you go.
And look at the volume. He said.
No, it's open interest because it was yesterday.
Yeah, the open interest. Look at
This
the open
was
interest.
today. That's why it's not on there. He said one was yesterday, one was today.
And the price. So it traded for $31.50. That's what he said they traded, $31.50. So that 2.5 thousand, $31.50.
Wow. And they bought it.
Interesting.
Sold.
Like, how do you pick
You get $1 5,000 times.
How do you no 31? I'm just looking. It's a wide market. It's 31.40 at 30.
Yeah, and 32.60 is on the bottom.
How do you pick that? If you're like, geez, I need to buy some calls in 2028. Let me see what one I'm going to buy. How about the 11,000?
Well, they're all round numbers. That's what I was thinking. I was like, why wouldn't you just buy? Because look at this. You could buy the 1,000, but it's going to be $85 instead of $32.
And we talk about implied volatility. Let's talk about contango. So contango is when vol is lower, short term, and higher further out in time. So even though VIX is so low right now, that vol on the 2028 is still a 22. So it's not like, oh, VIX is so low, I'm going to buy these options because VIX is so low. It's not true for 2028.
And look at this is what Jenny is referring to. If you just kind of look at, can they see my mouse? Yes, you can see my mouse. Okay, so this column right here goes 14, 15, and then the volatility keeps getting higher and higher and higher and higher. But it's 22 from January, March. In 2027, I don't know why they would go out to 2028.
I know. It seems weird, right?
huh. But you never know what they have.
Yeah, sure. Oh, right, of course. But it just seems interesting to go all the way out to 2028.
I just like that he's not afraid to talk to us, like the rest of the...
I love that he writes these notes down for
That's
us.
very
Like,
nice.
hey, big order's coming through. I'm going to give this to Liz and Jenny. Love that. Love that. So that was very nice of Hollywood to come and give us these big trades that happened on the floor yesterday.
Yeah. One was today, one was yesterday.
Okay.
I don't know which was which, though.
Okay. Well, I mean, some of it might not even be up there yet then.
It might not be up there
Though
yet
if
then.
one was today. That's crazy. So SPX 11,000, 2028.
Wow. I mean, if that wasn't written down, I would call BS.
Yeah.
Right? Because you're going to December 2028. And then I was thinking December 28th, like, of this year.
Yeah, that's what when I saw December 28th, I thought this year. But
yeah.
no, of December of 2028.
Yeah. So you know what's so funny is when I was on the trading floor, and I probably have some of them still there, every time a broker would come in, I would shorthand what they did. So at the end of the day, I had everything written down.
Everything written down.
Everything written down. And I had shorthand, like, if I did like a little loop, like a that was the straddle. And then like strangle is I would put like a little thing in it. Like, so I had everything written down. I wish I would have kept those.
Oh my gosh. If you would have kept those, the prices back then.
I know.
I mean, it was like SPY was probably 2 digits. You know what I mean? Like SPY 89.
Well, hey, I hate to say this out loud, but SPY.
Like, go back 20 years. Where was SPY 20 years ago? And that
SPY was created when I was down there. Remember the spiders? That's the spiders.
Yes.
That was a big to do.
I remember when the spiders were created.
That's the spiders.
And we were like, spiders, that's kind of weird. Why
Yeah.
are they calling it that?
Mm-hmm. SPY.
That's funny.
I mean, I predate, that's how old I am. I predate the SPY.
At least you don't predate puts. Guys, at first there were only calls.
We're talking to you, Frank. Sorry, but you do.
I'm thinking of, oh yeah, Frank, well, I don't know.
Frank was on there
I'm
when it was
not
just calls. Tom was on there when it was just calls.
No.
Yes.
When did put, okay, on Twitter, guess, what year did put start?
You know what I'm going to do? Hold on.
I think like put started in like, I want to say like, oh, Jeff, what year did put start? When did put start? At first we only had calls.
Yeah, that's what
I was
I'm
going
saying.
to guess like 79, 80.
77.
77. 77.
Put options started trading on the Chicago Board Options Exchange, because that's what it was called back then, in 1977. 4 years after the exchange launch, with only call options in 1973, following approval from the SEC for a pilot program to introduce them to the market.
We were just babies.
We were one.
All right, all right.
It's nice to have Google.
Yeah. Okay. Let me ask you something. And you don't have to, I want to ask you something. This is unrelated to the SPY.
I'm going to go back.
If you...
I got to put the SPX in first.
And I know this is different. This answer is different for everyone. But if you bought a stock, and someone said, you have... I people ask us, like, what's our profit target on a stock? And we say, you know, that's
it's a personal question.
It's a personal choice, right? Everyone could have their own. But if somebody said you have to pick your price target, you have to pick your profit target, you had to. What would be your profit target on buying stock? Like if you had to
give a percentage.
If you had to give an out time, what would be your percentage profit target on getting long a stock?
100%.
Doubled. So you want the stock to double? Okay. All right. I was just trying to get rid of palladium.
Oh. Well, here's part of the problem with this, though, Jenny, is we broke apart our. Oh, SPY's down today. Or I'm sorry, silver's down today, which is good.
No, it's up. It's up. See the up $1?
Oh, we're down in. We're still losing money in silver.
Oh yeah, I know.
So we broke
I know.
apart our on as a package, off as a package, and now we're not saying that silver's going to go down. That's the problem. We said it was going to go down more than gold went up.
It's what?
That's the gold silver ratio. Is you saying it's going to go down more than gold's going to go up?
Today is the day, Liz. Today is the day. I have not done it yet. But today is the day. Today is the day I'm getting short metals.
Today's the day?
Today's the day. Like, I haven't done it yet. I have not been short metals through this entire run-up. Today's the day I'm getting short metals.
So
I'm calling...
Gold, palladium, and silver are all up again. You know what else was up? Making all-time highs? Copper. Copper made all-time highs in London today.
So, I'm calling done. I'm calling done on this metal rally, and I'm getting short today. I can't...
We're already short.
No, we're not. We're long palladium and short. If you add up what we've made in palladium and made in gold and lost in silver, it's like a scratch.
Well, palladium was not with our gold-silver ratio. It was a separate thing for Tim Knight in honor of.
I'm just saying we made 30%. We made 30% on our 2 shares of palladium. I would take that, and today's the day I'm getting short metals. You could follow me or not. I'm doing it.
I'm not following you.
Wait till I control.
Not here. We're short silver.
Yeah, sure, fine. Leave it.
That's what I'm saying.
But
We
I'm
have
just
them
saying,
in together.
I would take off my palladium. I would have taken it off before.
You would have taken it off when we made $10.
No, but when we were like up 60, I would think we were up 64, and I was like, I'd take that palladium.
It's
on
hard
2 shares.
because they're.
Go to the palladium chart.
Yeah.
At this point, I'm calling done. Donezo.
So look at silver.
Yeah, I'm getting again. Today's the day I'm getting short metals.
We called that we were done here, and then we bought our gold back here.
But I haven't gotten short. I haven't gotten short metals yet.
Okay, I agree that your account hasn't. But here, when you take off the gold, then you're short metals.
Okay, you can't count like a couple shares of SLV short
And
metals.
you can't count this as short metals. But I'm just saying,
like
for
you
our,
can't count like a couple shares. I'm just saying, like today's the day I'm finally gonna use some options, use the premium, use some IVR.
So if you're going to get short, you
metals.
could do something with the premium in silver. We have.
Go to GL.
We also have this. Hold on. We have an iron condor in SLV that's also
we have
getting,
just a neutral iron condor
that isn't doing much for us anymore because it should be down. What did we get on it?
You know what? Buy back that put spread for 20 cents.
Activity. Hold on. Let me see. 30 days SLV.
We took in $1.28. I'd spend if we can buy the put spread back for 20 cents.
I just want to see what it's trading because it's so hard with the other thing in there. It's down very, very small.
Yeah.
But I don't know what that put spread's going to be. It's going to be 20 cents.
I think it's 20 cents. I think it's 20
So
cents.
then we'll have $1 in there.
Yeah. I don't know. I figured we made. It's only 20 cents. So then we just leave our call spread.
Yeah, because the call spread's a loss, so we wouldn't do that yet.
And I don't care what we do in this account. I'm just saying, making a statement that today's the day I'm getting short metals.
And I appreciate that. I like the chutzpah. Is that the right word? I can't. I've been long them for so long. I can't turn the cards over yet. I'm gonna be long until I'm wrong. How about that?
She's long until she's wrong. There are so many times where I'm long something and making money in it, and then I don't sell it, and then it turns around and I lose my profits. So I have a recent long Google position today, and when I put it on, I was like, I'm leaving this till the end of the year, waiting for that Santa Claus rally. But today I closed it. After yesterday and today, if you look at the chart, Google's had a little bit of a rally the last couple days, and today on the train, I said, you know what, he's gone. Even though I told myself I'd leave it till the end of the year. I took it off today.
I mean, this is basically the end of the year. You've done a good job.
I mean, I have too many positions where if I don't take it off, I lose the profits I had.
No, I don't disagree with you unless it's something you want to hold long term. You got to churn and burn. You have to keep. You have to keep taking your profits, or it's not your profit. But that's what I love about options is if you had something, you could be like, okay, well then I'm just going to take this off and put something very little in there that if it slides back down, then I'm not going to lose all my profits.
Yeah.
That's what I love about having the options there because I kind of agree with you. If you're just long Google, or if you're just short silver, so to that point, if you're long silver or short silver or whatever, you have to use options in order to lock in your profits.
Right.
Yeah.
Right.
Yeah.
Right.
And we would have done that with palladium if you
There were
could
no
trade
options.
it. It's closing only.
But my point is,
it's cool.
So Liz said she'd go wait for 100%. So we won't get out of palladium until it reaches 260.
Well, no, because that's not that you were just saying if you're gun to your head, what are you going to do? Like if I'm buying a stock, my profit target, I'm buying a stock. We bought palladium to keep an eye on it.
Okay.
Otherwise, we would have bought more.
All right. Long until she's wrong. Wrong.
But so here, you can kind of go Intel. We're down 574%. But I like it.
No, that's that goofy trade.
No, I know, but then the downsides too, all the ones that you're down.
That's that goofy trade we did that with so much open interest and so far out in time. Or no, well, yeah, look, we've had it on
That's
for
why
56
you can't
days.
say you can't just say percentage wise. If I'm buying a stock, I'm not going to buy a stock anyway. Do you know what I mean? I do have palladium. I have 100 shares of palladium.
So,
but I have silver, I have palladium, I have copper. It's been my saving grace. We didn't put the SPX in.
No. Okay. Well, I don't know because it was expensive. It was getting Like I had just bought it for one of them for $3.60, and now it was up to $5. There's just, I think, too much decay happening.
$5.10.
Too much decay has happened out of the 0 day.
And that's what you're watching, because when I sold the 0 day, I sold it for $8 this morning.
Yeah.
At the monies, and now it's only
Yeah, I think
$4.
it's too late. Like this, I like this trade early on.
Yeah.
I've been doing this on the open. I like it early. I think there's too much decay now at this time.
I kind of agree with you.
Yeah.
Do you want to jump into our study?
Sure. Yeah, we have an awesome study today. So today we are talking about the best of 2025 0 DTE SPX studies. And this is awesome. This is from our research team. These are many studies that they vetted from the year, and they're taking the best of.
I know, and this is part 1. We have a part 2 next week, which I'm excited about. We got a sneak peek into them. We did get a sneak peek, and my favorite is next week.
We did get a sneak peek, and we've got other studies coming. We still have new studies coming. So we've sent in a request to Jacob, and we've got some new studies coming.
I know, I'm excited for it.
Yeah.
Okay, ready?
I am ready.
This aired on May 22nd, 2025, the days of the week with 0 DTEs. Now, if you remember this study, Jenny, what was the days of the week that you're supposed to do it and not do it?
Double down Mondays, and don't do it on Thursdays.
I believe that to be factually accurate.
Double down Mondays, don't do it on Thursdays.
How have 0 DTE trades?
And yesterday, double down Monday would have worked.
It would have worked.
Like a charm.
Yeah. But keep in mind, so this is May 22nd, 2025. This is before we just started doing the put spreads.
Right. This
is Iron Condors.
This is Iron Condors, but it's always good to go back and look at old studies just for a refresh.
Oh, I love it. I do like these. And what I love about this is we've already gone through a couple of phases of this, because it says you enter the market open or at 9 a.m. So it's open or 9 a.m. We haven't established that 9 a.m. is better yet.
And later studies established that waiting till about 9 a.m. is better.
Yeah.
So yeah,
it is kind of fun to go through.
Okay.
So daily 0 DTE 20 Delta Iron Condors with $20 wide wings at market open or 9 a.m. And winners were closed at 25% of max profit. Others were allowed to expire.
Great.
Okay.
So here we're looking at a short 20 Delta option. So short 20 Delta call, short 20 Delta put.
At open.
At open, and it was $20 wide wings. So this is sold at the open. You're looking at a very high win rate across the board.
Except for Thursdays.
Well, 88% is still high.
No, high win rate, yes. But Thursdays, your average P&L is negative, which you were right on, because you said Thursday's the day you don't do it.
Oh, yeah. So you've got high win rate across the board. 88%
is the
win rate on
lowest
Thursday,
on the board.
but you have a loss on Thursday. So that tells me there must have been a real bad day on Thursday, or a couple of real bad Thursdays, which really drew down. Even you could win 88% of the time, but if you have some full losses, they mostly happened on Thursdays.
That's what it looks like, and this is sold at open. Okay, so then we're going to compare the two. I'm going to go to the next slide.
Wait, hold on. Go back to that one. I just want to. So that's on the open, but best case scenario here, Monday. Double down Monday.
Oh,
okay.
Yeah.
Double down Monday.
Yes. I mean, it's your highest percentage rate, it's your highest P&L, and your CVR is the same.
Yeah. Okay.
Let's go to the second one. Now, this is at 9 a.m. Wait, hold on.
So at 9 a.m. versus on the open, you're getting a slightly less, and that makes sense because on the open, well, go back, 76, 43, 43, and what was the other one? 83.
Oh, my God.
Oh, okay, so Tuesdays are terrible. Tuesdays were...
I didn't see the Tuesdays were terrible in the first one.
Right.
Because it was only $4.
So I think kind of across the board is waiting till 9.
And we went through this saying that if you have to pick one, if you have to do it on the open or at 9, it was kind of like we went through this whole process where we had study after study after study, and 9 a.m. is slightly better.
But again, sometimes I feel like sometimes Tuesdays. Here's what I know. Usually there's no news coming out on a Monday. Usually on a Monday morning there's not news. Tuesdays you can get numbers.
Yes.
You can get numbers. And so I think Mondays maybe it doesn't matter what time you put it on. Tuesdays if you got a number coming out, you would definitely want to wait.
Yeah.
And wait for the market to shake out. All right, so that sold at 9 a.m.
And I feel like we springboarded, and just take me through a walk down memory lane on this, and then I feel like we springboarded into being like, what are we losing on the calls or the puts?
That came later.
Yeah.
That came later. What are we making on the puts versus what are we losing on the call?
Yes.
Right. Where's our chunk coming from? If our average P&L on Monday is $76, what's coming from the put spread versus the call spread?
Yes.
Yeah.
And that was kind of a process of elimination. And this is, so it says CVR remained almost identical across the days and times
and
of entry.
And the CVR is a conditional value at risk.
Showing the tail risk exposure was extremely consistent.
Okay. Mondays were the strongest day overall. That's why we named it Double Down Mondays.
And Tuesdays and Thursdays underperformed relative to the other days.
Now, just because things performed this way in the past, it does not mean they're going to continue to perform this way in the future.
What is it? Future results are not it. Past performance is not indicative of future results.
We're just trying to cover ourselves, right? Because it does. Just because Mondays were the best in the last 2 years, doesn't mean they'll continue to be the best. We can't say that for sure.
No, we can't. But it is pretty interesting. This was a fun couple years, actually just this year study on 20
right.
on
yeah,
zero
we've had
DTs.
some great zero DT studies.
Okay, now the next one is the last 15 minute of S&P 500 performance.
So if you're trading these zero DTEs the last 15 minutes of the day, this is interesting. Sometimes
this is almost a year ago, January 22nd, 2025.
I know. Now, at the end of the day,
we didn't do this one.
I don't think we've done it, and I don't know what the results are going to be. At the end of the day, if we have a day where we're not moving at all, I have done like $5 right call spread, $5 right put spread, take in 90 cents and hope for the best.
And let it go.
I have done that, but it's kind of like I cherry pick the days on days that we don't seem to be moving.
And hi, my name is Liz, and I'm guilty as charged of end of quarter, end of month buying SPX.
Oh, end of quarter, end of month. Yeah, that's a little bit different than the selling premium the last 15 minutes.
That's what I'm saying, but the last 15 minutes, that's what I would do sometimes. It's the only thing I do. I don't really sell premium at the end. The only thing I do at the end, 15 minutes, is buy premium.
Well, but it's okay. So if I'm buying these options to scalp movement, I'll do that in the afternoon, but by like 2:15 I'm stopping that because the decay, you need such a move to offset the decay. The end of the decay is it's kind of crazy.
It is crazy.
Yeah.
It goes rapidly at the end of the day.
Yeah.
Okay, let's see. So the last 15-minute percentage difference distribution.
Normal distribution chart shows the range is generally tight 85% of the time, around 0.25% range. All right, next slide.
Take a look at this, though. Look at how that blue is shifted to the upside.
Percent diff histogram. Okay.
Right? Am I looking at that wrong?
No, it is shifted.
It's shifted positively.
Right.
Okay. Then here we go.
All right. SPY price movements at 3 o'clock. Is that at 3 o'clock versus 2:45?
I like the military time there, by the way.
At 3 o'clock versus 2:45, and all times are the central time, so this is the end of the trading day. So, and then the occurrences, I'm guessing that's like...
Okay, so then there's 48% of the time it's up, 50% of the time it's down.
And 1.5% of the time it's the same.
Okay.
Moving on. I haven't seen this. Are you surprised this made the best of?
Yeah.
Let's wait. I can't wait to see these takeaways.
Outlier moves happen most frequently in March and least frequently in July, January, and December.
But, okay, the last 15 minutes of SPY. But how long have they been studying this? Because zero DTEs have only been around for 2 years.
It's just, I don't know. I'm surprised we didn't get this. Okay, mean versus median move magnitude by trading day.
Tuesdays have the smallest mean and median percent move for SPY's last 15 minutes.
Okay, let's see these takeaways.
So if you're going to double down, in the morning on Mondays on those iron condors, Tuesdays are going to be the day for the end of the day trade. The end of the day.
There you go.
Today's Tuesday. I'll put it on at the end of the day.
That's a good takeaway. Okay, then tight and predictable range.
Hey, we're going to be on last call today. So we're on last call. Today's Tuesday. At 2:45 on last call, we're going to take a look at this.
Yes, we are.
Yeah.
And you notice they're going with SPY, not SPX. SPY stays within a very narrow band in the last 15 minutes most of the time.
Okay. Outliers are rare. Large moves happen less than 1% of the time, but can be big, used to find risk. So 2:45 on the show today. We're going to take a look at the SPX Iron Condor. You're going to see it's very, very tight, but you're playing for, not much of a move in the last 15 minutes.
It's almost like having that butterfly. You know what I mean?
Right, but you could do either way, right?
Because you're going to have to bring it so tight.
It's so tight. You'll see. We'll look at it today.
We're going to have to make it so tight because there's not going to be that much premium at 2:45.
Or you can try to just get you can make it a little wider and get 20 cents or 30 cents. Some people might say, oh, well, is it worth risking $470 for 30 cents? Well, if you're going to keep that 30 cents 95% of the time.
And it looks like this. High probabilities that price stays near its 2:45 p.m. level favors range-bound option selling in the last 15 minutes. Okay, I think I learned something new.
I do it sometimes, but only on a day where it's like watching paint dry with the market.
Yeah. Huh.
But
Today's kind
it's
of a paint dry
perfect that we had this study today, and we're going to be on last call. So if you are watching right now at 2:45 Central Time, we'll be back on again live. Well, we'll be on at 2:30 Central Time live today.
And somebody can go back and watch the original market measures. This is the power hour, the last 15 minutes of the S&P 500 performance. Pretty good.
Oh, nice. Loved
Pretty
it.
good.
Okay.
Okay.
All right. Well, that was it for the SPX study.
Yeah.
Yeah.
It's pretty good. I can't, like I said, that's one we didn't do. When did we start doing the 0DTs?
Not last January.
We requested it to be SPX. 0DTs.
Yeah, we did.
Because that was SPY.
I know, but I don't. At what point did we start doing those studies? Not quite sure, but.
So keep in mind. Let's keep this in mind too.
It's kind of nice seeing that. We've never done that one before.
But Jenny, if we're in 0DT, whoa. Oh, that just fell.
You're lucky that wasn't your water.
I know, no kidding.
If that was your water.
If we're, I know. But look at this. If we're in the 0DTs, watch this. We're in it currently right now. And there's still plenty of time left. This is not 2:45, and they were in SPY.
No, I think okay. No, but it was SPX studies, and I think sometimes they use SPY to backtest SPX and like
multiply it by 10.
Yeah.
Okay, so that.
Yeah, you're not going to get right.
Because I was like, if they're using SPY, that doesn't make any sense. But here's your deltas. If they're a 20 delta, $20 wide.
No, but you're not doing. At the end of the day, is not 20 delta, $20 wide.
That's what the study was, I think, wasn't it?
That was for the first study.
Okay.
And that's not. Well, at 2:45, you'll see. I'll show you just how I set these up. Sometimes I do them.
Because this is not bad when you looked at it this way from this perspective. So it's right now, but you're getting $1.90. No, you're out of the way of the expected move.
Liz, at the end of the day, we're going to be selling the $68.95, 16. Like you can make it. It can be $5. It can be $5 wide because those further ones are nothing. You know, so you're going to make it $5 wide. And you see $3 away, $2 away, $5 wide, and you'll be getting less than $1.
Okay.
But you gotta, if your market's in a tight range.
Just go like this. I like it. That's why I was confused when we were looking at SPY. I was like, you're not going to get anything for these because we've got 3 hours left, and so you have to multiply it by 10.
Yeah. Okay.
To get the SPX results.
So, I hate to break it to you, but how about? Someone wants a long silver position. Let's go to Twitter. Let's go to Twitter.
Who is it?
Punish Pixels. Hello, ladies. Silver is going crazy. How about an upside crab trade? Sell 2 lots at 70, buy 1 lot at 75, buy 1 lot at 65 in February. So I'm going to keep this up.
I'm going to go with this here.
We're going to walk through the crab. I would start with my long. So go to Feb.
So Feb.
And buy a 65. So you're just like, this is how you set up a crab. Buy one right around at the money.
Yeah, that's
Normally
fine.
it's at the money. This is a little bit out of the money.
But it's cheaper. So I remember setting these up with Nikki this way. So when we did it in Tesla, it's a little bit cheaper than buying this. You're paying $4.50 instead of $4.90.
Okay. So
there's our vinegar smell.
Then we're gonna go to January and sell 2 70s.
We have something.
I know we have something, but just sell 2 70s. So we're getting $1.35 twice.
Okay.
So we're going to sell 2 70s, and then we're going to buy 1 75. So here,
that's not bad.
Okay, let's talk about this. We're paying $2.50. We're paying $2.50. What's your risk here? We're paying $2.50. We've got that $5 wide between the 65 and the 70.
So if
and we're paying $2.50. I mean,
it's not. I mean, all you can lose is what you paid for it.
Not necessarily
well, I guess
true.
I guess you could
Not
pop up and go through
necessarily
it.
true, because if it goes through the 75, 70, 65, your short spread is $5 wide, your long spread is $5 wide, so you would make 5, lose 5. Yeah, I guess, so all you could lose is $2.50.
Yeah.
If you make 5, lose 5. I thought it would be broken wings, but it's not.
It's not. It's almost symmetrical.
Yeah.
because it's
Right.
65, 70, 75.
It's like a symmetrical butterfly. Typically, these crabs have like a more of a broken.
And that
broken weight.
might be why they put that on. So all you can lose is $250. If it doesn't go up, you're going to lose $250.
What are you hoping to make on this?
$100.
I guess what you're hoping for is silver to keep going up in Jan, and then all your Jan rolls off, and you've got that Feb long. And let's talk about this. If you have a Feb long in February, how many days do we have?
59.
59 days, and in Jan, how many days are left?
There's 24.
So, the 59 minus the 24, you're looking at 35 days. Look at an option with 35 days.
So Punished Pixels, I like it, but we already have.
Yeah, look at that 38-day option, and look at the one you bought, the 65.
Yeah.
So it's worth $360. So here we go. It'd be
$100.
If we stay right here, Jan rolls off. You've got an option with 35 days to go, and it'll be worth about $360, and you pay $250. So
about $100. Yeah. So
I would give you a high five for that answer, but I've learned my lesson.
But so that it's not. I like the setup Punished Pixels. I really do. I liked walking through it, but we have a bearish trade on there, so this would be kind of. We're going to win on one and lose on the other, and we took off the put spread, so we have a short call spread.
And
in
this
there.
could be neutral. If it doesn't move at all, you could make $100 as long as vol stays the same. But if it doesn't move at all, vol probably won't stay the same.
If it doesn't, correct. If it doesn't continue to go up, so silver has the pendulum swings both ways in silver. If vol goes up, if the product goes up, volatility goes up as well. It's a very counterintuitive. It's not SPY, right? So if it continues going up, metals do keep a high implied volatility.
And what you want is it to go up to your short strike.
Yes.
That's what that's what he's looking for here.
You could make more money if it goes up to your short strike. If it goes to it, not through it, to your short strike.
Right, yeah, if it goes to your short strike.
It's not bad, though.
But if we're going to sit here, I wonder what will happen. I wonder when vols start coming in on these metals. As long as metals keep going up, the vol is going to remain inflated.
It is kind of bizarre. If it falls out of bed, that vol will come in, too.
The vol will come in, and if we sit right here for a certain amount of time, vol's going to have to come in, too.
Yes. It's up pretty high, though. So, I mean, like I said, I don't mind this. I like it, Punished Pixels. I like the risk definition. Can you do a crab to the downside?
Yeah, I think so. Yeah. Try to set one up. See how it
So
looks.
let's do it exactly like we did there. So I'm going to buy the 62, because I'm going to go down a little bit. And then I'm going to sell the nearer term, January. If I sold the 62, then I'm going to sell two. You're not getting as much for the puts. There's tons of call skew in here. So take a look at this. It's trading, let's say, it's trading 63.50, right? It's trading 63.50. So if I go up to 67.50, it's $1.90, which is $4 up. And then if I go to 59.50, it's $1.50. So there's skew. It's just a little bit heavy on the call skew.
Right, yeah, for sure. There's a lot of call skew in these metals.
Yeah.
What can I do if I said, and again, I'm not putting it in your account, I'm not putting it in this account, but if today's the day I decide to jump in and get short the metals.
I would do a diagonal.
A diagonal.
That's what I would do, because it's a low commitment trade where you're taking advantage of volatility. So if you wanted to short the metals, you would sell the expected move, sell the 88 cents.
Yeah, let's see how wide this can be.
You can sell 88 cents in the January, and you're going to go out and buy, and I'm going to keep it right there, and you're going to buy, you're paying $4 for it. $4 for a $6.50 wide. $5.50 wide.
Yeah, $6.50 wide. I might just do a zebra. I might just do.
So that's not bad. I do like the diagonals. I think the diagonals take advantage of selling premium. The only problem with a zebra, Jenny, is that you're not selling premium unless you're going to sell something against it.
Yeah, you're right. That's the problem with the zebra, is that you're not selling premium.
You're not selling premium. That's why I like the diagonals.
Can you go to SI?
It is hard to.
Go to silver futures and the 35-day Jan and just sell like 73 and a quarter call spread.
It's big.
You know what? That's not bad. No, it's not bad.
Oh, no, it's not bad.
You're getting $485 and your max loss is $785.
That's not bad.
I think I'm just jumping in with something like this.
That is not bad, because here's what you're doing. You're taking advantage of that 88 implied volatility. And I like this way better. Jenny, this makes me feel way more comfortable than just going out and being like, I'm going to go short silver. Because this means silver can still go up and you can still make money.
Well, and you've got the risk. It's only an $845 risk to make $420.
That's a good risk reward.
It's not bad. It's not bad. So
35 days, silver can still
it could still go up a little bit.
It doesn't need to burn itself out immediately. Like you.
No, I mean,
you know how hard it is to call the top.
Go to the analysis and see what this looks like on the trade page. How far silver can go up. Maybe you need to zoom out. Maybe I think you need the. I think you need the. You need the. Yeah, zoom out, right?
The other way. No, I need to zoom in.
No, you gotta zoom out. Yeah, keep zooming out. Here we go. There we go. So you can see max profit 435 and max loss 815.
This is a big animal. You are getting
it's
a
like
lot of premium.
0.25 wide. This is 73.25. And it's aggressive because it's the 44 delta.
I'm going to go throw one curveball at you.
Sure.
Look at the bottom. 34 cent credit at 138.
We'll see where I can get filled.
Yeah, that's the only curveball I can see in this plan. Other than that, I give you a gold star because I would rather you do this than go out and say I'm calling the top. Because this isn't saying you're calling the top. This is I'm taking advantage of volatility.
No. I wasn't saying I was calling the top. I just said today's the day I'm getting short silver.
I like this.
Today's the day I'm getting short silver. That's all.
And that's not a bad. That's a trade I could sink my teeth into. I don't mind sending this. It's got $700 in risk.
Do it.
You could even. I think we should close the other trade though. Then.
Yeah, sure. Then close our short
Condor.
silver. Yeah, or close our Iron Condor was like a $20 loss.
Yeah, that's what I'm saying. I would rather close the $20
let's
loss.
close the Iron Condor because that's already underwater.
I'm gonna see if we can get filled in
Close the Iron Condor, $20 loss, and move to.
I've got it working. We'll see if this is gonna work.
All right.
87. I'm going to tick it down. Let's see how much
your tick is. So 440 to 435. $5 a tick. It's not bad.
I'll go 86.
Filled.
Do it.
No way.
Come on.
Wait. Okay, you hold your hand up there, Liz.
Okay, I'm going to close our other silver position.
Okay, and I'll get everything pushed out because so far the only thing I pushed out was buying back that short put spread in our SLV. But I kind of like replacing our little baby SLV call spread with the big dog SI.
Done.
I can't believe it. Liz.
That's not short silver. That's selling premium.
Cannot believe it.
Premium selling is because silver could go all the way up. Like it can go up $3 more, which is great. Like if you look at that on SI.
All right, so everything is getting sent to the follow page, which then you could show people how to use the follow page because the follow page is an amazing tool.
Our break even is 73.
Like if someone wants to see this trade, if they're like, hey, what did they do?
So look at this. This is where our break even is. So it can silver. This is what I love about options is that I'm bullish silver. She's bearish silver. Silver can still go up, and we can make money.
I just like my question is how long is this rally going to go on?
I think it's going to 100. But I don't think it's going to be in the next 26 days. How about that?
Yeah.
But I don't think it's going to be in the next 26 days.
This is a defined risk strategy. If silver gets to the middle of this spread,
we keep rolling it out in time.
We keep moving it. You move it.
But I like this way better than just being like, I'm going to put a zebra in.
Next week when I come on, you're not going to recognize me. I ordered I can only wear these glasses here, the progressives that I have, because I have like so many things I have to see.
Yeah.
I ordered brand new progressives.
Ooh.
They'll be in a week.
I can't wait.
Yeah, they're very different.
Did you get colored ones? Like Sally Jesse Raphael?
No. Well, okay.
I can't wait to see them. Okay. So that's in. Silver's pushed out. We have our first SI trade.
There it is.
We closed 2 SLVs. And we got into SI. Did we
so click on SI just to show how the follow page works. Like you can click on it, the trade's up there, the pop's up there. It says exactly what we did, and if someone wants to duplicate the trade, and our trades are not trade recommendations, but if someone wants to duplicate the trade, they have that button right there, duplicate this trade.
And I'm glad, yes, and we've done that before with some of Fauzia's and things like that. But what I love about this is that we do the live show. So if somebody wanted to see us talk, and we talked in depth about silver today.
Yeah.
Look at the date we put it on. If you want to go back, this is archived.
Mm-hmm. Right.
Yep.
Right. The date's on there. On this day they did this trade. Then you go to that show and you'll see us do it.
Correct. which is kind of nice. Okay.
Okay, so that's pushed out.
We'll go to the trade page. That's all we've done today, right? Is those 3 silver trades?
That's all we have. That's all we have done. As far as things in our account, there's nothing we need to. And honestly, if we have those few shares of short silver, and silver keeps running up, maybe the credit on this can help offset the loss on that.
Yeah, there you go. I like it. Okay. So we're in. Nothing else needs to be managed.
Nothing else needs to be managed. No. Nothing. We have 10 minutes left.
I'm going to go back to Twitter because we have a
Jeet. I was going to say, Jeet came in.
Poor Punish Pixels. He gave us a bullish trade and we put on a bearish trade. Okay, Ajit comes in with SPX short iron condor. So let's look at this. He's got a 0 DTE. Thank you very much, Ajit. So he's looking at expected move of $16. He's got the 55.70. $15.30, so it's pretty far.
Yeah.
$3, so it's $15 wide, right?
Well, we haven't moved too much. I mean, we opened probably up 10 and we're up 18. Like, we've been staying in a pretty tight range. So
yeah,
Ajit might be out already.
You're good.
Ajit might be out already.
Ajit might be out. And then Frank Walsh, Frank the Great, comes in with all of our.
And you know who's. So. Mikey's not here. Mikey's not on Twitter today. He has.
A lot of people aren't. It's Christmas.
Oh, yeah. Tomorrow's Christmas Eve. Everyone's busy. They're busy shopping and wrapping. But he has the cutest litter of puppies.
10 of them.
10 puppies. 10 cute little puppies.
If anybody's interested, they're not his.
Oh, they're not his?
No, I think he's trying to home them or get them. He's like, if anybody's interested.
Oh, okay. I thought they were his.
No, they're his, but he's trying to.
Yes, but like, are they like puppies living in his house?
Puppies living in his house, correct. But I think he's trying to be like a good Samaritan, find homes for them.
So we raised puppies once.
You did growing up, didn't you?
Yeah, growing up we raised puppies. We had 8 Airedales, and it was
so cute.
It was crazy. It was crazy because puppies would fight. Like they're,
would?
Oh my gosh, yeah.
I don't think like that. I just think puppies are so cute. They like laugh or they like roll all over each other and they don't fight.
Wait till they're trying to like show who the alpha dog is. And
really?
So they will definitely fight. I had many punctures in my hands and trips to the vet with the puppies getting injured from them fighting each other.
No way.
Yeah.
Every time you see a group of puppies, they just look so cute.
I don't know. It's fun they are cute and cuddly, but the boys do fight.
And it can turn. Did the girls fight too?
I can't remember. It was a long time ago. I can't remember if it was just the boys who fought or the girls who fought too.
That's a new revelation. Just because all my feed is puppies and babies. That's it, puppies and babies, and they all get along real well.
You get a litter of
feed.
puppies, and if you keep them until people don't. If you keep the puppies with their mother until they're 10 weeks old, 12 weeks old, those puppies start fighting each other. It's mayhem. And then trying to break them up. That's how my hands were just all scars from getting into the middle of the puppies and trying to break them up.
How old were you?
7th grade.
7th grade. With a puppy ring.
I don't know. It was crazy. They were crazy. They did fight a lot.
What kind of puppies were they?
Airedales.
I don't know what an Airedale is. Is that kind of like?
They're big.
They are.
Yeah.
Cute.
Anyway, yeah. It's not all
puppies and kittens.
Yeah.
What does Dr. Jim say? It's not all puppies, rainbows, and kittens.
Funny. All right, we have 5 minutes to go. Are there any trade? We're on last call, so we'll be looking for trades again on last call. But is there anything you want to do in the last 5 minutes?
No. I wanted to look at, so we put this on yesterday. Let's take a look at our SPX. So let's pop into this real quick.
Okay.
So we put this on yesterday, and this is working according to plan. This is a longer term broken wing butterfly in here. I'm going to go to the SPX page all the way down here. We've got February with 58 days, and we did the downside, didn't we? We did the downside broken wing butterfly. This is going to have to be on for a while. What we were talking about is maybe trying to move it. We wound up just paying. We actually don't have to move it because it's a butterfly. We paid for this. I was thinking we broke the wing.
No, we paid.
That's why I wanted to keep an eye on it.
No, we only paid 30 cents for it. Okay, here's something to look at. Core weave, we've been into and out of. If you go to the chart in core weave, CRWV.
I'm sorry.
CRWV. It's barely. No, wait, what are you?
I'm zoomed in.
Wait a second. You're not updating. Can you update your last? Can you update? You can just type in CRWV again. Just see how the pricing is not. There we go. There we go.
Yeah, it wasn't updating.
Okay. So CoreWeave had that kind of skyrocket up a couple days ago.
There you go.
And slightly coming down. I know we don't always like strangles.
I don't mind a string.
Or a jade lizard.
The buying power here is amazing.
No, because if just look at this. Just take a look. In the January 24 day, 110 call and is trading 82. 110 call and is trading 82. And the 60 put and is trading 82. You can get $1.50 in 25 days.
That's pretty good. You're using $800 to do it. I don't mind it.
No, normally I shy away from naked calls in some of these products, but you could bring it in and do try the 95, 97.5, like a 250 wide.
So you're getting 50 cents. That's not bad for a 250 wide.
No, it's not terrible. And then just don't cover it. You don't have to cover it all.
No, it's close enough. You're getting 50% on the top.
Yeah. 60 put.
And so there is risk to the top, but I'm okay with it.
This isn't bad. It's just an extra $1.25. I hope we come back from the holidays and this comes off.
So that's shipped. It had a little bit of wide markets too. Let me look.
SPOO's up 20.
So what do you think is going to happen the rest of the day? We've been just slowly grinding higher.
Grinding up. We're almost at 6,900.
I know, that's where I wanted to put the calendar in.
So if go down 10 points and see what the 68.90 calendar is, just to see like how much of a loss it is if it's $10 through. It's still trading 480.
Yeah, that's not moving.
Yeah, it's not even a loss.
No, it's not even a loss yet.
It's not even a loss.
Well, I don't think they will until the end of the day.
Yeah.
Because when you first put this on, if you were at the 68.90, you collected about $8 in premium in that short.
Right.
So you can move.
You've got $8, and it could go $8 higher or $8 lower, and it's still break even.
At the end of the day.
At the end of the day.
At the end of the day, that's what it was.
At the end of the day. Okay, so we're working CRWB. Maybe take it down a couple ticks just to get another trade on today. And you can walk through it or show it on the analysis page. It seems very wide, doesn't it?
It seems very wide. Here, I'll go on the curve analysis.
So not necessarily on the upside because we brought those calls in to do...
Where is it? I don't know if they can hear that. Everybody's gobbling like a turkey.
They all gobble like a turkey, and I don't know why.
I don't either. It's somebody who sounds like that.
Someone who laughs like that. Someone who laughs, they sound like a turkey. So when they laugh, the whole place gobbles like a turkey.
Where is? I don't think I'm updating because look at this.
Okay.
I'm working it and it's not there.
Oh, because we're not filled, because we're just working it.
Yeah, but even when you're working it, you can look at it on the analysis page.
So, did you take it down a couple ticks?
I did.
CoreWeave.
It's got a wider market. I'll go 120 my final offer.
Still working. Now,
I did. I absolutely did. And there's no earnings or anything this week, too, I don't believe, unless somebody's trying to really throw us off by doing one on Christmas Eve. Earnings on Christmas Eve.
No earnings this week. No earnings. What, does the party start tonight? Are you done wrapping? Or are you going to pour yourself a drink and start wrapping?
I am going to start cooking as soon as I get home. I have lots to cook.
Good luck.
And then what's great is I'm just going to put it all outside.
Oh, because it's so cold.
Yeah, because it's cold. It's cold enough outside where I can do everything and put it outside. That's my plan.
That's the good thing about living in Chicago. You're outdoors as a refrigerator.
It is a freezer.
All right, on that note, everybody have a great afternoon. I'm not going to say have a wonderful day because we'll be back at 2:30 on Last Call.
We'll be back at 2:30 and we're going to talk about, on Last Call, we're going to talk about our 12th day of Christmas and the...
the big reveal.
The big reveal.
Big reveal. All right, everyone have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Johnny Show. See you in a couple hours.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
On a stroller, kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, to see waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. Laughing with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck, whirl out, yeah, we all chasing. Pockets on lead, but the vibe still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam out here, raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke is a spot. Fun on the block all day, all night. I feel with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Yo, we just living it up, yo, that's real life. Yeah, we just living it up, yo, that's real life. We just living it up, yo, that's real life.
But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. But they kinda. Gotta level up.
What's up, Tasty Nation? Welcome back to the show. This is Option Trading Concepts Live. My name's Mike. I'm here with Jamal and, of course, Thomas Westwater, as it is Westwater Tuesday. Thomas, how's the fam? You doing anything for Christmas? The holidays? All of it?
Yeah, fam is good.
Love it.
We're busy, as parents in the holidays. It's pretty crazy. So just wrapping gifts, getting last minute gifts. But we're just sticking around here, just gonna relax, put on Christmas Vacation on the TV, and
that's your favorite one, right? That's your favorite Christmas movie, right?
That's my favorite one by far.
Which one?
What is it? National Lampoon's Christmas Vacation.
Chevy Chase.
Yeah.
I'd actually never watched the whole thing until recently. I'd seen bits and pieces, but I'd never watched the whole thing.
The uncle, where he's like basically completely naked, but he's wearing that hat.
yeah.
So ridiculous. No, that's a good one. I still stand by Bad Santa. That's my favorite
Christmas movie
because it's just so insane.
I mean,
it's like it's the tail. It's the extreme Christmas movie. So I like it.
I got it's probably Die Hard. It's Die Hard. I guess it is. I mean, just the music, just the time, just the ding, the bells, and every now and again. Yeah. Are you guys good at wrapping presents?
No.
Okay, so it's not just me.
It's like a war zone out there. It's just anytime I try and do something nice and neat, it's like the tape gets caught, and then I see red, and then it's just aggressive wrap.
I don't know why I'm terrible at. I'm just terrible at it. My wife, though, dude, you could give her a sheet this size, and she could wrap a big ass gift somehow. I don't know how she knows how to do it. I'm terrible. I am terrible at wrapping gifts. I don't know what it is. I didn't learn the skill or something. I don't know. I am terrible at it. I just don't know how to do it.
I'll give you a run for your money on that.
See, I knew it. You're good at it, aren't you? You're pretty good at it. See,
I'm saying I'm worse than you.
Oh, you're worse than me.
Yeah. I'm bad. I'm really bad. So
I can't. I don't know.
Yeah, I can't draw. I can't wrap presents.
Same.
Something wrong with me.
I know, same. And it annoys me because, speaking of drawing, my youngest son, he actually still is. He was really good at drawing stuff. Really, he's like just got this artist thing. He used to make these little clay figurines. I mean, really like detailed. I could bring some of them into you and you'd be like, it's like a Nike shoe box. He knew how to and he stopped doing it. I'm like, dude, why'd you stop? Why you stop doing it?
Yeah.
He could play piano. He could play on his own. I'm trying to convince him. He's 13. I'm trying to convince him, dude, just keep that going. Don't let that go. Like, you have a gift you don't even realize.
Yeah. That's the problem with young teens is like, when it comes easily, it's just like, whatever.
Yeah.
And then later in life, you're like, wow, I could have done, but so good on you for pushing him to keep doing it.
Yeah.
But yeah, musical talent is always something to keep in your back pocket. That's for sure.
Well, since you mentioned this, Mike, I can bring it up. But I mean, I was told I could sing a little bit, actually. No, seriously though, my mom used to take me to music classes. I used to hate going. I used to make every excuse not to go. I was a pain in her ass and she was driving me to these things. And I just would say I was sick or I always come up with something. And then, later life, you sing a little bit around people oh, you can sing. And I'm like, really? I was like, yeah, I guess I can.
I mean,
let's hear something.
Yeah, I'm sure we have the video, but I'll never forget when you got on stage during the Chicago Tasty Live event and you started singing "Don't Stop Believing." And I thought it was going to be just the first 10, 20 seconds. You sang the whole damn song.
Yeah.
I was like, oh, he's still going.
Yeah. I mean, it's funny because it started, it started with that. I wanted to obviously get to the chorus. You can't just sing that song and not get to the chorus. So that was the thing. And where do you pick up? Do you just start with the chorus? No. And so, that was one of the longer ones for sure. Yeah.
It was good though.
Yeah, thanks.
Very well done.
Thanks.
Oh,
for the people. It's for the people.
Yeah. That's what someone needs to buy him a karaoke machine for Christmas. That's what you need. But yeah, kind of a dull market here. We got E-minis up 20, NASDAQ up 78, Dow and the Russell kind of flat, Bitcoin, Ethereum kind of flat. We got the futures watch list pulled up here. Seeing some big moves in Natty Gas up 4%. Silver will not stop believing. That's up 3.9%.
Did it just cross a new high?
I mean, yeah, it's just ripping. It's crazy.
Yeah, it just did. Oh my God, bro.
And when you look at this, what's crazy is so we've said this before, but sometimes you get these moves that are so extreme that you have increases in implied volatility. That's what you're seeing in gold and silver. Silver is just rocket shipping to the moon, and the implied volatility of silver has increased 6% over the last 5 days. So definitely seeing a big move to the upside. And we're talking about maybe taking a short stand here. Yesterday, we talked about how we wanted to see a little bit more of a rally before we did that, and now we're getting another 4%. So I think it's getting close to being time, especially for a longer term position. We were looking at some. We'll throw them up on the trade page in just a little bit, but there are certainly cheap ways to get involved in silver and gold. So we'll explore that in just a little bit. Everything else kind
Painful.
of, oh yeah, it's insane.
Painful to watch me being out of that.
Yeah. Everything else kind of within that 1% threshold. And to the downside, there's nothing on the CME futures watch list that is down more than 0.5%. If we expand that to all futures, let's see, do we have anything? No. Nope. VIX is already dead, so can't go any lower. Down to 1380.
Wow.
This is definitely the low of the year. I think, did we actually close at the low yesterday?
I mean, I'm pretty sure we did.
I think it actually caught a bit at the end of the day, it looks like.
Closed at 1408. That was definitely a low of the year.
Oh, it did.
But now we got a new low.
Yeah, 13 and change. This is troubling. This is where we get into the troubling range of just nothing going on. But it was, we're staying within what was expected. We looked at the expected move for the rest of the week in SPX yesterday, and it was like 40 points at this time. Now it's 27 points through Friday. That is nothing. That tells you that every market maker in the world is just going home.
Yeah.
Hanging out.
Pretty much. I mean, that's really, really low. We haven't seen that all year. Even on holiday weeks, like 4th of July, whatever you want to call it. We have not seen that.
Yeah, 7% IV, I think it might be the lowest I've ever seen. I don't remember seeing lower than like 9%. So 7% for this week, extremely low.
Yeah, single digits is crazy.
I haven't done anything in this portfolio. I'm just watching things fly around here. The SPX positions we've got are now both in the green. Love to see it. So I've got this Super Bowl, aka the stupid, aka not the stupid, because we're going straight to 7,000. 6,867.90 put spread to finance a 5-point call spread. That's up 90 cents, 8 days to go. And we're about 50 points from being in the money on that call spread. So I'm going to leave this on because I'd rather take a shot here if we continue through next week to the upside, because this could be a $500 winner come next week. The Iron Condor sitting around 50% profit, but on the same notion, I mean, we've got 8 days left in the year, and this Iron Condor is not even close to being tested on either side. It's actually right in between the range. So I have plenty of wiggle room here, and I think given the low implied volatility and given the lack of implied volatility even through next week, I'm just going to hold on to this through the end of the year, and I'll just close it at the end of the year and see if I can get another 50, 60 cents out of it. I don't want to put a new one on now in this really low implied volatility environment. I'd rather just try and get as much as I can out of this one.
Yeah, completely agree. It makes sense.
But yeah, we'll see if there's anything else that comes up here in terms of trade ideas. But if you want to join us on the YouTube channel, we're streaming live there. Just head over to Tasty Live. I've got the referral program pinned to the top of the chat. If you're going to be hanging out with your friends and family over the holidays, you both get $100 if the person you bring in opens up an account meeting all those qualifications. So check that out, tastytrade.com/referral. But yeah, throw in your trade ideas and questions along the right-hand side chat as well. We'll get to them in just a little bit. But Thomas does have some slides for us. Why don't we pop in there, and we'll get to the trade ideas and questions right after that.
Yeah, I have one slide, and this is a pretty simple thesis from me. I've sung this position before all throughout the year, especially the past few months, since that big drop off in copper. But it's staying long copper. So Personally, I'm in a put spread. My position, it's 35 days out, but it's at 75% of max profit. A put spread, short put spread at 512, 515, and HG. I am rolling that up right now. I'm just waiting for the order to fill, rolling it up to 5.25, 5.3. And, we're in a really nice trend right now. The chart's going from bottom left to top right. It's orderly. It's not too crazy. We're getting a steady price movement day in, day out. So it's looking really good. And, let's just go to the slide and we'll start talking about it. But it's pretty much stay long. The answer, I think, is yes. This is from Bloomberg. It shows the surge in U.S. copper imports, and that is, earlier this year was because of the U.S. tariffs. So, all these traders in the U.S., these firms, they started importing a lot of copper. That is now cooled down because the threat of the tariffs is over. Well, it's not, I guess it's never over right now, but it's past for now. So overnight, copper on the LME, the London's Metal Exchange, it surged to a new record high. It's above 12,000 right now. And U.S. prices aren't there yet, but that's because we brought in a lot of supply to the U.S. So, U.S. pricing, it's not at a record high because we've, increased the inventory so much. But there's a lot of things happening in the market. We had a good GDP number just recently. That's going to help it because, as they say, a lot of traders, especially, back in probably like 10, 20 years ago, I don't think it's used as much anymore today, but it's called Dr. Copper, and it's kind of, used as a proxy for the economic health. If copper is going really low, it's the same thing as oil. If oil's crashing, probably means the economy is not doing that well. If it's going higher, it's probably because the economy is doing better. So there's been a lot of stuff happening. So on the supply side, we had a few mines. Freeport, they had a big mudslide at one of their biggest mines. Rio Tinto, I think, was another one that had a collapse in one of their mines, killed like 5 or 6 miners. These mining accidents, it's hard to recover these mines once there's a major accident. It's not just like, you go in there with a couple excavators or something and it's over in a week. It takes months and months. And what they're saying now is probably over a year to fix some of these mines. So you have a supply shortage coming. There's other groups like the International Copper Study Group, which is one of the big ones, saying that the market is going to go into a deficit this coming 2026. So there's a lot of things happening right now. But, the U.S. GDP number, the economy looking a little better, if we could, avoid a labor market that crashes or something, which looks like it's less and less likely as we move forward. I think, this copper price action is telling us, we're recovering from this big sell-off in late July, where the tariffs happened and then they were rolled back. We've retraced about, I think 60. We're right around the 68 point something Fibonacci retracement. So, retraced about 70% of that moved. It looks like we're closing that gap. So trading at 5.55 right now. The high before that big drop off was at 6.043. So, we're not too far away from there, but there's a decent volatility. If you want to look at IVR for copper, you can go to CPER, which is the United States Copper Index Fund. That's at 37.6, so not bad. The way I've been doing it, I've just been selling the put spreads, I've been doing that. I think this will be my third roll for this position since copper plunged in July. So just, going 45 to 60 out, the typical methodology. And then when we get to around 21 to 25, I'll just roll those prices up. Yeah, it's looking good. I mean, the chart looks good. The technicals look good. These mines aren't going to come back online to full capacity anytime soon. The economy's looking better. It just like, it's a simple trade, right? It's a simple thesis, but that's the ones I like the best. You could simply explain it. Copper is used in anything electric. Anything that uses electric, copper needs to be used in. So you got all these data centers, electric cars, whatever angle you want to put it at. We use copper for that. So, it just looks like copper is going to be one of those assets in 2026 that I'm pretty bullish on. And that goes along with precious metals. So copper isn't a precious, right? It's an industrial metal, but, rates coming down from the Fed, what do you want to own? Commodities, hard assets, copper, gold, silver. A lot of the movement, it's been shared. It's not individual to each metal. It's just that the environment is looking good for it. Copper is a big product, but it's pretty tradable. There's also the micro, the MHG. If you want to get a little smaller, no options on that. So I prefer to stay in HG and just do defined risk positions. You got to have a pretty big account to just take an outright, options position in a HG future because it's just a big product. Yeah, I mean that's it. Like I said, it's a pretty simple outlook on the metal. It's everything makes sense. I think it's hard to argue, hard to do a bearish argument for copper, given that there's mining disruptions. The economy looks like it's perking up a little bit. Like I said, simple, clean. I like it.
Love it. Are you in the 60-day or the 30-day still for the short put spread?
So I am rolling to the next one, the February 24th, so 63 days. Right now I'm in the 35, so I figured right now before the holidays, I'll go ahead, roll this up. The position, 75% max profit, makes sense for me to do this. So rolling up to 5.3, and that still gives me, it gives me good duration and some wiggle room in the price there. I could, pull back, an orderly pullback that, it makes a higher low like it's been doing. That'll be perfectly fine for the position. I won't sweat that at all. And I have 63 days out, so that'll carry me through the holidays, come back mid-January. Hopefully I'll be doing the same thing and rolling the prices up again. Until we get to this gap fill, once we get to this gap fill, then it might become a story where, all these traders got long after this really big sell-off, and that might be a big profit-taking pullback. Everyone starts getting out. They said, we've been on this ride for a few months. Let's get out.
I like it. Yeah, I'm working in order at 525.52. So it's a $400 credit, $800 max risk, $600 buying power thanks to span margin. I was also looking at upside calendar. It's just a little bit too expensive. I was just looking at just an easy 6 strike calendar, getting back to highs, buying Feb, selling Jan. Both of those settle to the same contract, so it makes it easy in the sense that you're not long one contract and short another. You're long and short the same settlement HGH6 contract. That's $1,300 though for that calendar spread to get back up there. Could be a home run if we do go all the way back to 6. But I like the idea of the short put spread in the 60-day cycle. You have plenty of time for it to work out. High probability setup and 50% profit could be had pretty quickly if we continue the rally here.
We had that similar trade on, what was that, a month ago and change.
Yeah.
Worked out well. I actually looked at this same spread maybe last week, and I decided to pass on it. It was like $850 at the time. So yeah, it's already obviously been climbing more recently.
Yeah, we've actually had the 6 strike on a couple of times. And we've done some put spreads here too, but this has been a great trade. Just trading copper to the upside exclusively this year has yielded 5 or 6 winning trades in a row. So yeah, let's see if we can keep it going. And yeah, I mean, it's been after this big crush, thankfully we weren't long during this period, but afterwards it's been a really clean gap fill, almost near where we dropped from. So I like it.
Yeah, definitely. And, there's also Freeport McMoran. There's, the symbol FCX that has pretty liquid options, good volumes in there. So, if copper's, you're just intimidated by it all, or it's a little too big for you, there are options on FCX and FCX has been, doing very well, following the price of copper generally, because they are a copper miner. So it's just one of the proxies you can use to get exposure.
It's also SCCO. I remember trading that back in the day. All these names are coming back.
Yeah. It's interesting that FCX is hitting higher highs than the drop. What do you make of that?
I think they're just positioned a little better going into the new year, maybe against competitors that have suffered more disruptions. So that could be one of the things that is helping them out. But overall, they're a pretty strong company. Pretty well managed overall. Their financial metrics all look pretty good. So. I think it's just investors are confident, and that's another way to say that the market is bullish on the copper outlook for 2026.
Agreed. Beautiful. Let's see if we can get filled here. I'm just going to leave it where it is. $400 credit on the 52552. Are you looking to get in, Jamal?
Yeah, I was looking at the same thing, that same spread. So I'm going to try and put that on as well.
Cool. Thank you for that. Love to see it. Let's see the gap continue to fill. It'll benefit all of us.
For sure.
Have you done anything else in the portfolio?
I haven't done a thing. Much like you.
Yeah.
I mean, there really isn't much outside of looking at metals trade. There really isn't much to do on the equity side, honestly. It's just kind of quiet. There's really not much ball. I mean, the directional plays that I want to take, I kind of already have on. I mean, in spades to some degree, right? SPX, some of the same directional plays that I've had on for a while. One in CoreWeave, one in MicroStrategies. Both of those are down, by the way, today. AVGO is another one. But yeah, I mean, most of the long plays that I want on, the setups are already kind of in play, and there's really not much to add to it. So the only thing I've been really looking to do is possibly metals, as we talked about earlier. I mean, I said it yesterday. Here's what I really want to see in gold and silver. Look at platinum today. Like, that's what I really want to see. I would love to short this thing right now, but that's way too expensive. This thing is way too expensive. I mean, I can't justify for this portfolio putting on the size. This would completely dominate my every single day if I put on this short in these futures. But I would like to see that type of extension right now. And I would actually get an MGC. That's a pretty decent price point. But honestly, I don't feel like MGC is that extended.
Yeah.
To be honest with you, I feel like gold could go higher. I would like to see a huge bar. Then maybe I think about getting short. But as of right now, not really. Silver is kind of there. I mean, it is there. But we were talking about this. I don't really see any vehicles that I love right now to get short. I mean, again, you talk about SIL. SIL is that price on that future has gone nuclear as well. Also like 7,000 and change. So that's a little expensive for a $25,000 portfolio. Could do some SL. I mean, obviously SLV is one of them. Again, SI, I mean, risk reward is basically 50-50 no matter how you slice it on most of the option positions. If you try to get a put spread or some type of, I doubt you could probably pull off a diagonal for any decent price. So it's really going to have to be SLV. And then even within that, I guess I'm being greedy is really what it boils down to. I mean, look, I want to put on something that if I'm going to outlay like $1,000 or $1,500, I want to at least make 1-to-1 or 2-to-1. And that means SLV has to drop like probably, I don't know, 5 to 10%, somewhere in there, let's call it, to make real money. So this is like the thought process I'm having right now and like the best trade I want to do.
Yeah. Apparently a diagonal in silver is a $22,000 diagonal spread. So that's going to be out. That's going to be a no from me, dog. But
exactly
65. This is the one I had pulled up earlier. The 65.55 long March short Feb. It's the same cost as being long Feb short Jan. And this is how I would attack this thing. Like if you're trying to short this, I'm not selling a contract or selling a call. I think it's we're seeing massive moves to the upside. Platinum, gold, silver all up today. Platinum leading the charge, but this is a really digestible long-term diagonal spread where you're putting up $500. If at any point in time silver drops back down to 55, you can make $100 or $200. Max profit here is $500 if you're at the expiration of Feb and you're below 55. So this, I don't mind throwing on it. I think I actually want to throw this on now and just see if we get any kind of reversal. Because if you get a 3, 4, 5% reversal, you can take $100 out of this thing and just get out. And you have a lot of time for that to work out. So I kind of like this in terms of taking
these are momentum plays. These are momentum names. When they turn for a few percent at a time. I mean, like 3 to 5% quickly, and that's exactly what Mikey's talking about. That's the kind of plays that we're looking at to try to capitalize on the quick turnaround. You feel like you sufficiently made some money on a 3%. You got to think about it like this: if it falls 3%, you want to be able to make the money that you made because there's no guarantee it's going to drop to 5 or 7%. There really isn't. It might just be a quick 3%. It might be overnight, and the trade is kind of done, and then it starts bouncing back, right? So. That's when I say I'm having a little trouble finding the setup that I want. It's because I'm thinking like that. I know it's going to happen like that.
Yeah, it's going to be quick in, quick out. I would say if you're not going to be around the platform for the holidays, if you do a trade like this, just set a GTC order to close it for like $100, because $100 would be very attainable if you get a reversal of, let's say, today's move and yesterday's move back down to like 61-ish.
Yeah.
This spread will be trading for $100 profit. I would imagine.
It's not like we're trying to like set up for like to drop back below 50. Like, no, that's not. I don't think that's happening because it's been orderly. Honestly, this has been an orderly, technical, strong move.
Yeah,
we're just talking about a little bit.
The gold silver ratio. It's been dropping again this week. It's down, but we're only 84 cents above the 2021 low for the gold silver ratio. And if we go below that, you have to go all the way back to 2014 until the gold silver ratio was that low. So, silver's been outpacing gold. That's why this ratio has fallen so much. But, if you're playing for some kind of mean reversion where the gold silver ratio is going up, it might make sense to do something like, of course, buy gold or maybe buy gold and short silver, some kind of pairs trade like that. But this ratio, it could stay, overextended in either direction for quite a while. But when the retracements do happen, they look like they are very quick, occurring over maybe just a couple months for that ratio really to go, 40, 50 points another way.
Yeah, we're seeing some crazy moves here, some adjustments in the pairs to be sure. But yeah, I'm going to leave this at 518 and just let it sit. If we get a continuation to the upside, it'll fill. But yeah, if I don't get filled and then we're up another 3% tomorrow, so be it.
You're buying the 65 in Feb, right?
Yeah. No, sorry. 65 in March, short the 55 in Feb.
Oh, okay, nice.
Yeah, so a longer term one because it's the same cost, so I might as well get the time. All right, popping over the YouTube chat now. If you want to join us there, just head over to tastylive. Let's see. Since Ivy's at the low of the year, would it be better to just wait to put on the year-long strategy for SPY or the Qs like Jamal's in? I chickened out and did not put it on yet. So yeah, I mean, to your point, like I put this on when we were down 50 and there was a little bit of a vol spike. You can see right now, I've already made $140 on this thing, into this vol crush and rally. So yes, objectively, it is a worse time now to put it on than when we put it on. I think Jamal, you put it on like maybe a week before into the same sort of thing, like just a sell off.
Sure did.
So yeah, if you want to wait for the new year and see if we get some volatility infusion, by all means, go for it. But at the end of the day, like I am not hyper focused on the individual entry points, because this is a year-long trade and I will be in this trade for a year. And as we showed with the IBIT position, which I've already done, I've made 14 adjustments on this position, and that was a light trade. Like I just set it and then nothing happened, and then I would roll a month later. Like I really didn't adjust this at all, the IBIT position. So there's going to be plenty of times to adjust the position in MES. So I'm really not concerned with individual entry points and like really timing it perfectly, because I know I'm going to be in it for a whole year. And I think that's the mental difference between knowing I'm going to be in a trade for a whole year, regardless of what happens, versus trying to get into an SLV trade where I'm trying to just hit a reversal and get, selling pressure in there for a quick day or two and then get out. So, yeah, I think if you want to wait, totally fine. If you want to get into it now, also fine. It's just obviously not going to be ideal if you get into it now or tomorrow and then you get a sell off on Friday. How about a Friday short SPX calendar? Bearish calendar? I mean, yeah, vol's so low that if you're trying to buy a directional move in SPX, it is very cheap. Or XSP or SPY. We like to go with SPX just because it's cash settled, so you don't have any issue of getting assigned on anything. But yeah, I mean, this is sub 10% implied volatility. It's crazy.
Yeah, I mean, it's just low, man. I mean, I wouldn't do it. I wouldn't do anything. I just wait on that one for sure. If anything, do something directional, honestly. I mean, that's probably your best bet, but I don't know. Sell any ball in the SPX right now? Single digits, man.
Yeah, it's tough out there. It is tough out there. Rivian? How about a short put credit spread? I'm in at 15 for Feb 20th. 15 strike. Oh, a cash secured put, not a credit spread. Cash secured put, 15 strike Feb. I mean, you've already captured a lot of this value. If we just look at where this was trading, it was trading at $2 beginning of December. It's now at 30 cents. If you got in anywhere around here where you've already made $100, I might just get rid of this position, considering it's 60 days to go and it's not trading for much. But yeah, for a new position, I don't mind getting in closer to the current stock price, like the 20 strike. I wouldn't go lower than like the 18, just because I want to collect $1 for pretty much anything I do. But yeah, I don't mind this. Sitting at highs though, which is a little tough.
I know. Exactly. And again, I'd love to believe the story that Rivian's turning around or something. I mean, that's what it seems like the stock is doing recently. I just don't know what's changed in the landscape of EVs. I really, obviously it's heading towards fully self-driving vehicles, right? I mean, that's kind of where they're headed. I don't know what Rivian is, what the deal is here. Not sure, but.
Yeah, it's had a massive move to the upside. Tesla also sitting at highs of the year here. Kind of crazy to see. The VIX. Given the fact that the VIX is low, is this a time to get long? So I think it's the hardest trade. It's the hardest trade to try and do, because one thing that we do know from research is that when the VIX gets low like this, it has the ability to cluster at these low teen levels. So you can see it all the way from May to October. Like, we had some spikes to 20, but they lasted one day, and then we're back in the teens. For you to see elevated VIX levels, you're gonna need like a COVID situation. Like, I don't see that happening again unless we get a COVID situation. Like, that was the only time in my whole trading career where we had an entire year plus of VIX at 20, 25, 30. And that's just like where it was. And it's going to take something to get a big VIX pop that doesn't last, or that lasts longer than a couple days. So if you want to take a shot, it's cheap to do. I think the only trade to do in VIX is just to buy a call by itself, simply because you know that if you time it right and you do get the pop, when the VIX rips from 13 back to 20 or 25, the volatility of the VIX is also going to expand, and you don't want to have a short option against that, offsetting your potential gains. So I think literally the only trade I would do in VIX is just buying an out of the money call, or at the money call, something like that. And once you get the pop, you just sell it for whatever it's worth. And you got to do it quickly, because historically they haven't lasted more than a day or two. So you can't expect that to change based on nothing. I think the easier trade, much easier trade, is to wait for the pop in the VIX, and then you get long SVXY. SVXY is an inverse volatility product. So anytime the VIX pops, here's your April VIX pop, SVXY went from 50 all the way down to 30. If you were buying on the way down and you held till now, you have a profitable trade. If you look at any point in time where SVXY dropped due to a VIX pop, split adjusted, this was the Volmageddon here, 2018. SVXY was one of the only ones that survived. But there were other products that went kaput. XIV was one of them. But if we get rid of that, you can see anytime that the volatility popped in a big way, SVXY dropped. Same thing here. Here's COVID 2020, went from 35 to 15. And then as volatility collapsed, SVXY trickles higher. Then you get another big VIX pop, you get a sell-off, and it trickles higher as volatility collapses. Same thing here. Here's your April sell-off, goes from 50 to 30, and now VIX is at 13, and SVXY is at 54. So I think if you're trying to play volatility, it's so much easier to wait for the big pop and get long SVXY if you're trying to have a high probability trade.
Yeah, I agree. The only thing I'll add to, for those who are looking for upside, look, I mean, this is like Mike said, it's probably one of the harder trades to try to play VIX to the upside. I mean, you just never know when the pop is going to happen or what's going to be the reason or the catalyst. But you can obviously buy a call. Those are pretty. It's hard to say they're cheap. They're just as low as they're going to be probably right now. Always pay attention to what expiration you're using and what future. And in this case, you could also just do a micro, or what really they call them mini VIXs /VXM. You could do that one right now, obviously. I mean, and it's funny because even as I look here to do it, I'm like, why should I do it right now? I could do it tomorrow. I mean, what's going to change? So maybe I'll do that. If I remember, I'll do it tomorrow, just because I don't think anything's going to change between today and tomorrow. And you probably drop another, 20 cents or so.
Yeah, and to your point, if you look at the VIX, like even if you're trying to inventory a long option far out in time, like if you're trying to buy something for middle of next year, you have to look at where these prices are the same. So on the call and put side, this 175-day contract isn't looking at a 13 VIX. It's looking at a 21 or 20, between 20 and 22. Like this is your at the money price point, because this is where all the options are trading for $3 or around there. So if you're trying to buy an out of the money call, given that information, you got to go like way up here, like at 30 or higher. And all of these are trading for $1, or around there. So totally possible to make money on this. If we look at a chart of this, like this is the lowest price point it's been for a long time. And you do have your pops. Like you get these pops from 2 up to 3, but that's pretty much it. Like you need a huge VIX move for you to make multiples on this kind of trade.
And, again, you can look at selling puts too, but I mean, you got to pretty much go in the money on those. And they're not it's not as cheap as you would think, as it should be. But the one thing is it's cash settled, right? So you don't have to worry about, obviously you're not going to take delivery on volatility.
Yeah.
So yeah, you could do that too if you wanted, but.
Yeah. And the reason why a lot of these charts, like if we go back to this 30, the reason why these aren't multiplying is because the longer you hold this position and VIX is in contango, the VIX futures are in contango, the more that futures contract that's the at the money price just drags down towards VIX. So right now, with this 170-day option or the 170-day expiration, the at-the-money price is between 20 and 22. The VIX is at 13. So over 175 days, the at-the-money price between 20 and 22 is going to drift lower or drag lower towards 13 if nothing changes in the VIX. So you have this constant drag against you, which prevents you from getting that multiplication effect. Where if you're in backwardation, the opposite is true, where any pop in the VIX, you see these things really explode. But if you're willing to take a shot, that's kind of how I would do it. Let's see. Anything else here? Anything else? Any futures trades we're looking at? Thomas, you looking at anything else other than copper?
I mean, I rolled my prices up on my long call spread for gold yesterday because this has just been working out. That's why I prefer to be in for gold is long call spread, since volatility usually expands on up moves for that. Otherwise, I haven't been doing much, and that's been intentional because I've wanted to lighten up before the holidays. One trade I've liked a lot recently is getting long a company called Rocket Lab, RKLB.
I bet you have.
And, yeah.
A lot of people have been talking to us about that name.
Yeah, this is so I wrote a piece that went on the tastylive blog last year about the top 3 space companies, and Rocket Lab was my number 1. And then I updated that piece back in sometime around August, and I kept Rocket Lab as my number 1 piece. So I have a good amount in my retirement account, but this is one I've really liked when it pulls back to buy long call spreads, like pretty out of the money, because this stock, when it moves, it makes big moves. I mean, 10, 15, 20% in one day. And, the space industry overall, I feel like we're right on the crest of like, people are going to get very enthusiastic about these space companies. Elon Musk just the other day said SpaceX could become, $100 trillion company or something crazy like that, which might be out of the realm of possibility. But, space, I think there's going to be a lot of investment, moving forward. There already is, especially with these launch vehicles and everything like that. But Rocket Lab is, catching up to SpaceX. They're doing a little bit different in types of payloads and how far they could go. But there's a growing need where SpaceX alone can't service the need for getting satellites in space. So they're in a really good position to fill a lot of this gap there and take a lot of that market share. And they've recently moved their launch schedules forward, which is a very optimistic thing because it's saying they're on schedule, everything they're doing is working out, the company's managed well. It's a pretty exciting stock when you look into it, and of course the price action, if you look at that chart, it's exciting as well.
Is that the new bullish thing for 2026? Space? Final frontier?
I think so.
Would you guys go to space?
Yeah.
Hell no. I don't know. I don't think so, man. I don't know, man.
Hell no.
Look, I don't like roller coasters, okay? So that ride, going on the way up, that feeling of your pit and your stomach dropping, I mean, I don't think it probably happens as much because I think the cabin is a lot more pressurized. But still, I don't know.
Well, yeah, you have to go to like G-force training if you're going to space.
Yeah, for sure. I'd do the training. I'd do all the training stuff. I'm cool with that. It's like workouts. I'd do that.
I'm with you, Thomas. I'd go to space for sure. If I'm going out there, what happened to that Mike guy? Oh, he blew up on a rocket going to Mars. That's pretty sick.
So that's a risk you take, but my son keeps looking at the moon. He always says it's too high. Like when he tries to reach for it, he says too high. And I've told him only rocket ships could get there. So now he says only rocket ship when he looks at the moon. And I'm like, you just have to keep reading, man. Like if you want to go to the moon, just keep reading and doing that kind of stuff.
You know what's a good movie? This could be getting pretty close to that time, but October Sky. You could show him October Sky and then get him some little rockets and be like, look, this is from the movie.
I never heard of that one.
Oh, yeah.
Oh, right. October Sky is great. Incredible movie.
That's like a forgotten movie,
Oh,
it's a hidden gem now.
Yeah. It's with what's his name? Jake Gyllenhaal, right?
Okay.
Yeah.
That one.
Someone looking at SPX doing a little straddle strangle swap. Buy the calendar. Buy the calendar, sell the straddle.
And SPX?
Yeah.
What?
They've worked well all year, basically. So yeah. Actually, it looks like a straddle the weekend, sell Friday, buy Monday.
Oh, selling the straddle on Friday and then buying Monday straddle?
Buying Monday strangle, I think.
The strangle? I feel like I definitely.
I think it's something like this. You sell the 3-day.
Yeah.
And then you buy the 6-day 30 delta. If I'm not mistaken, correct me if I'm wrong here. But if we go to the analysis and just isolate this trade, yeah, if we fast forward to Friday and don't change IV at all, since we're sitting at 7%, a very low 7%. It can be a nice neutral trade. You get all that premium out of the shorts. You have defined risk with your long options here that will decay less, which allows you to sell out of them if you get this chop here. But yeah,
big move come Monday.
Yeah, these could certainly work. These were probably working well during like Fed announcements and like CPI, PPI reports when they were driving more implied volatility than they are now. But yeah, still a $2,000 buying power. You're picking up $500 in extrinsic value, collecting a credit, but you know, to close the seat, you have to pay a debit. So definitely possible. What else we got here?
Gold and silver.
Gold and silver.
Gold and silver for Christmas. I bet those dealers are like, I mean, I bet it's like
pawn shops, pawn.
Right now. Shop, oh my god,
it's nuts. I wonder if they stop
silver watches to the pawn shop. Like, how much can I get for this?
Yeah. I wonder if they're putting a cap on it because they can't just like shell out all their cash at highs.
Well, first of all, you know they're not giving you real value.
Yeah.
First of all,
last I checked.
Let's just get that out the way.
Yeah.
And they take like 10%.
Yeah.
Yeah. And if you take it, you guys, I think most of our viewers are pretty smart and they know this. But if you're taking your stuff to a pawn shop, they're not giving you good value. Let me just tell you right now. or these dealers, honestly.
Yeah.
Well, the dealers are going to give you a little more fair value. They're going to take advantage because they're going to assume that you don't. That's the one thing you can do. You do know the price of where it's trading right now. So that's the one thing you should pay attention to. You actually know where the price is based on what we do day in and day out. They think you don't. So.
Yeah, a good broker pawn shop, they'll have the price on the screen, the market price, and then they'll tell you their commission. So, you know, but they have to do things like they have to hold it for 30 days. So they have to account for some volatility, things like that. So, you know, they got the cost too, but
storage
costs.
Costs.
Usually pawn shops aren't the best. Need quick cash.
Question about another product to do the year-long trade in. SPY is $600. You can find other products that are somewhat correlated. I'm blanking on ones that would make sense, but like XLK, tech sector ETF, it's $145. Similar IV. So that might be one that's possible for sure. But yeah, I mean, there's other products that you can find that are cheaper in price point that are going to track the S&P at a pretty high clip.
I mean, I gotta give it to you. You know, using MES and MNQ, the amount of premium that you get and the amount of margin that the amount of margin that you're only using.
Yeah.
I mean, it's like I don't know how you beat that.
Yeah, that's why I went with MES is just because this position, like I put this on for $500. It takes $1,400 in buying power, And from a downside max loss perspective, it's 30K. So it's half the size of SPY, and you get way more buying power relief than SPY. So maybe MES is the answer if you're looking for a product that's 32K notional. But yeah, I'm only doing one contract. I can hold the whole thing. If we get a big vol expansion and buying power expands in MES, which would happen, it's not going to matter because I can hold this perpetually, but just something to keep in mind. The difference between MES and equity or ETF product is you'll have a lot more volatility and buying power requirement because you have span margin benefits.
And then for whoever's listening, for 2026, can we get futures on the Micro E-mini Russell 2000 and the Micro E-mini Dow Jones? You guys are missing out. I'm telling you, people will be trading this stuff for sure. Like, just get some options in those for 2026. Let's do it.
I would love it.
Talking to you, CME. Do it.
Last one here, looking at SPX. A put butterfly. Since IV's so low, would a Feb SPX put butterfly work as a vol expansion play? 6,600, 6,700, 6,800. I wonder what the cost on that is. 100 points wide. Feb.
I don't know. $5,800.
Ooh, $500?
Wait, what?
For a 68, 67, 6,600?
Oh, really? Oh. Wait, what? Oh, all the way up.
$500, huh? For a Feb downside play? This is screaming at me.
That's pretty cheap.
Yeah, definitely cheap. If we look at Theo, yeah, you can make a couple $100 on this trade. It's not going to be anything too crazy because it's a longer term trade. And you can see, like, anytime you have a $500 debit and then you look at the actual value of these options and it's 9,000, 7,000, 5,000, it's going to be a slower moving trade because your debit is a fraction of the actual cost of these options. But this is a real time look at the 26th. So 3 days from now, if we do get a sell-off of 80 points closer to 6,700, you can make a couple $100 on this. And this is a long-term trade. Like you can hold this for a long time. I'll throw this on. I mean, if not now, oh, instantly filled. Hate that. And on that note, we are out of time. Yeah. I guess I can kiss that $500 goodbye. Because the market said, "Oh, you want to do this? Sure. Here you go." Beautiful. Still working that order for copper. I've got the 525, 5.2 short put spread for Feb, but we will keep an eye on that. I would assume I'll get filled sometime here. It's really close to the mid price. Still working that SLV short, which is selling off a little bit from the highs. And then instantly filled on SPX Butterfly. That's going to go to zero. Instantaneous. Just kidding. It's a cheap way to get some downside hedge. That's for sure.
Yeah.
But yeah, if you want to follow us on Twitter, if you have any further questions, you can reach out to us there. I'm at Trader Mikey B. Jamal's at Jamal Chandler. And Thomas is at FX Westwater. Thank you again, Thomas. Enjoy Chevy Chase and the Disgruntled Uncle whenever you watch that. And yeah, maybe we'll all watch October Sky.
Yeah, I've checked that out.
Yeah. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Check out the tastytrade.com/referral page pinned at the top of the YouTube chat. You and a friend both get $100 if they open up a new account with us. So check that out. But yeah, have a great rest of your trading day. We will be off tomorrow. We're ending shows at 10 a.m. And then Christmas Day, I will be watching football. But we'll be back Friday. So we'll see you then. And hopefully everyone has
Friday, right?
No show tomorrow.
Yeah, no shows Friday.
No show tomorrow.
Right.
No shows
Friday too, right?
Correct.
Yeah.
Great. So everything I told you, just forget about it. Go watch October Sky instead. We'll see you next week. Goodbye. Happy holidays.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I got a good feeling. I got a good feeling.
Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad hatter, call me one of a kind. I'm a true believer.
I got a good feeling. I got a good feeling. I got a good feeling. I got a good feeling.
Yeah, I'm up with the sun, soaring high as a kite. Call me an overachiever. Leaning off of that edge, don't need a green light. I got that fever.
I got a good feeling. I got a good feeling.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday, a couple days before Christmas. Is the Santa rally going to come to fruition? We will see. We got a couple positions on. We're going to get another one on today. Talk a little bit about how we're going to be positioning into the year end and just some thoughts getting into the new year. So I hope everybody else is doing well. Let me know what you're looking at, what you're trading today. I know volatility is a little low this week, especially with the holiday season, but still nonetheless, there's enough volume to be able to manage these trades, keep an eye on the market. We'll take a look a little bit at NASDAQ at the same time. It's looking like we could inch towards all-time highs. I don't think 7,000 on the S&P 500 is too out of the question. So with that being said, let's pull up the platform. Let me get this up and we'll just do a little tour to market, kind of see what's going on, get a little bit of an update as we wrap up the trading session for today at least. Yesterday we had a little bit of a talk on your favorite dish for the holidays. So I'm not trying to instigate right now, but green bean casserole, if you weren't here yesterday, least favorite. Again, anybody wants to vouch for the green bean casserole, that's fine, but I'm not a big fan. I thought it was one of those things I'd like a little bit better as we get older, but I cannot come around to it. So with that being said, just give me 2 seconds. We'll get back to some of these questions and then we'll dive into this platform right here. Tuesday. Yeah, no, happy holidays, guys. Happy holidays. As you can see, I was looking at Netflix not too long ago. There was a little bit of news on Netflix with the Warner Bros. Situation. And pretty much, Paramount saying Paramount's new offer for Warner Bros. Is not sufficient, major investors say, which is really interesting because they tried to do a little bit of a hostile takeover, Paramount to come swoop in on Warner Bros. Over Netflix. And they offered a higher cash amount. So there were probably other contingencies that they didn't really like, or maybe they valued other things that, Netflix valued a little bit more. Another thing that I was thinking about this whole Paramount deal with Netflix and Warner Bros, I'm thinking too, like the owners that are selling off to another company, they probably, want to like the company, maybe like the management, maybe running the company, and a whole lot of other details that probably go into it than just the sticker price for the sale itself. So we'll see what goes on there. But with that being said, Netflix has been on the radar. We've been getting a lot of movement to the downside. And I mean, over the last week or two, we haven't really moved anywhere. It's been really quiet, at least. And I was looking at the trading platform, and as you can see already, I was looking in the February cycle. I started a little bit sooner. We got earnings. Earnings is going to be January 20th after the bell. So that's something to consider with the expansion and volatility that we could see in some of these contracts too. But nonetheless, I don't want to wait too long to take this trade just because I like the credit that I'm receiving on this one. If volatility expands a little bit more and, in a week or two, I probably could have got these contracts for a little bit more. That's fine just because I'm getting the sufficient amount on order entry right now. And most importantly, I like the risk on this trade, right? I want to get long some Netflix right now. I don't need to buy the shares outright. I'm not going to do the zebra right now, which is an option too. If we want to get really directional, because we trade a lot of futures on here, we could utilize the zebras, but I don't really want to time this directional move. I just want to have a little bit of delta in Netflix. So I'm looking at selling the 90 strike, buying the 85, and that's going to be about $1.65 in credit. So just a penny below exactly a third of the width, which would be about $1.66666666. So $336 of buying power. Max loss is going to be $335. Max profit $1.65 on that one. P50 sitting at about 75%. And then the pop is at 62. So this is a trade I feel comfortable in. The only caveat, again, is just the earnings. Keep a lookout on that for January 20th after the bell. But let's send this one through. Let's see if we can get filled on this one. On a nice little Christmas Eve fill on Netflix. So let's see if we can get filled there. Instant fills. You got to love it. Instant fills. What's going on, South Coast? Got into a call spread yesterday, and I added to the position this morning in IWM. Love that. Was that call spread? Did you buy or sell that call spread? Are you getting a little short on the market? I know it's been a tough position for me, right? As you guys know, I lean bearish on the overall market. I've kind of had the standpoint that the market has kind of been in like a melt-up phase. The market, in my opinion, has been in a phase where it just doesn't make too much sense. But as we know, the market can stay irrational longer than you can stay solvent. So I'm not going to try and press my bias as much into the new year for 2026 because, again, the market can stay irrational as long as it wants to. But with that being said, contrary to the positions that we've been putting on, we got a put spread that we sold on SPY just to let that Santa rally, kind of sentiment play out a little bit. And I mean, it's been working well so far, more so not that we've been getting the direction right, but more so that price has kind of been stalling. Like volatility has been pretty dead. Volatility last week wasn't anything crazy. We had some directional moves last week, but at the end of the week, volume kind of tapered off. This week, the beginning of this week, volume has already pretty much tapered off and has stayed low. So with the lack of movement in the underlying, we've been able to capitalize on the theta decay in this position. But again, that directional move, we haven't gotten it yet. So all that to say, getting long this put spread wasn't the most comfortable position to just sit long in, but it's working out in our favor right now. So to your point, South Coast, I think I'm going to be looking at QQQ and SPY, definitely leaning a little bit more negative delta into 2026, especially if we continue to rip to new all-time highs, right? Market can continue to do whatever it wants to do, but I know that's how I will be kind of perceiving the market into the new year. With all of that being said, we got filled on Netflix, 59 days left till expiration, $5 wide. And then we've already been filled on SPY from last Friday. I think it was last Thursday or Friday we got filled on SPY. Now we have 38 days left till expiration. And we'll see if we can take this one off by the new year. It'll kind of be nice if we're like hitting all-time highs at the new year. Maybe we let it ride for a little bit, but we'll circle back around to the management in terms of this position at least. Hey, did Jamal adjust or take off the SPX butterfly for December 31st? Salty Wizard, I'm not sure if anybody tuned into Jamal's show earlier today. Let us know what he ended up doing at that position, but we could circle back around. I'll hit him up, maybe tell him to give an update on Twitter or something like that. I'm short 40 puts on Netflix at the 88 strike, 23rd of January. I like that, 23rd of January. And it's not even that I gotta stay, Stefan, because it's not even that I'm too bullish Netflix per se, but I believe in Netflix in more of a longer time frame window. I believe in Netflix more from a fundamental perspective, right? Not that we're trading these fundamentals. We're traders, right? We trade what's in front of us right now, the probabilities in front of us, and the opportunity right now. Not for 6 months, not for a year, not for 2 years. Not in this case, at least. So I got to say, I'm kind of in the same boat as you. And another reason why I leaned a little bit long on Netflix is so that I can kind of even out the portfolio a little bit, get more long delta on. And then also, I don't hate the long on Netflix. So just to put my 2 cents out there, Stefan. South Coast long IWM. Okay. Oh, you're long IWM. That's fire. So we kind of have a similar position on there. Look at our young E doing half hour by himself. I know a little something about that. No, Jamal is the king of just taking these things solo. This guy was doing that on like a daily basis. Absolute beast. Good to see you there. Good to see you though, brother. I know you've seen in the chat, others were asking about that position you had on. So maybe you got to get a tweet out there and give an update on how you're managing some of those. No, with that being said, let's check out VIX, the volatility index, and let's see what VIX has been up to. Absolutely getting crushed. I mean, the Santa rally into the year end, if that were to come to fruition, a lacking VIX isn't too surprising, but it's also not very attractive to see. I'm not going to complain too much, right? I wasn't trading around 2016, 2017. I still hear the horror stories of paint drying, watching grass grow from 2017. So 13, 14 VIX, I think we were spoiled a lot over the last few years, most definitely. So again, I'm looking forward to some vol expansion into the new year. I really am. I mean, this last year surprised me. I gotta say, I know we all have our biases, but the lack of volatility this year definitely surprised me, or the lack of sustained volatility, I would say, more so surprised me. So we'll see how that's looking for 2026, but we just got a lot of pops and drops, no sustained volatility in VIX. And we know that VIX has mean reverting properties. But at the same time, usually volatility tends to cluster and volatility likes to cluster. But I feel like we haven't seen too much of that clustering of volatility whenever we expanded. We kind of just, dropped right back down. So we'll see how this behavior changes into the new year. And with that being said, we got to take a look. It's only right that we got to take a look at some of these metals, silver, gold. And we'll start looking at platinum a little bit more too. Platinum is going to be another one we're going to throw on the radar for 2026. Another very liquid product to trade, get some exposure to. But just keep in mind the multiplier for these futures products is different depending on what product you choose. So silver is one of the largest futures products that you can trade. So if you're used to trading, let's say the S&P 500, and then you jump to trading NASDAQ, that volatility might feel a little aggressive. And then whenever you go from something like NASDAQ to maybe gold, and then from gold to silver, you'll feel that increase in sensitivity. And to any of my ex-gamers out there, right, you know what the sensitivity level is. You usually change that in your settings. Like if you're playing a first-person shooter game, you change the sensitivity, you want to look around, right? You feel the sensitivity of how fast it moves, and you change it to your comfort level. It's a very similar thing to these futures products, if we're being completely honest. You know, trade the products where you're comfortable, or where it suits your sensitivity level, where you feel most comfortable, and your emotions are staying cool. Because again, the silver products is one that will catch you off guard. If you move a few points away, you might start looking to manage your risk. Just a little food for thought. Gold ripping to a new all-time highs. I'm speechless. I actually don't have much to say about gold. This is pretty impressive. Whenever we saw the squeeze on silver, it was looking like gold was lagging a little bit, but it's looking like as gold is putting in another new all-time high, silver already did that, but silver is now putting in another all-time high as gold is putting in another all-time high. So just from a technical perspective, I mean, this is a daily chart, right? I'm not on a weekly chart. Each candle on the screen right now represents one day. And I mean, speechless. I feel there's really not much else to say about this silver, the silver underlying. But with that being said, there seems to be a lot of opportunity present. This is going to be top of our list headed into the 2026. And maybe when we come back here before the new year, maybe we curate a little bit of a list of the products that we're really going to be keeping an eye on and honing in on come January 1st. But silver, extremely difficult play. The way I perceive things right now is the risk is heavily outweighing the potential reward, right? This is just based off of my perception. The market can stay irrational longer than it can stay, or the market can stay irrational longer than you can stay solvent, right? And I might have said something similar whenever we were trading down here right before this breakout at 54. You know, now we're trading at 71, almost a 25% increase. So with that being said, take it with a grain of salt. Maybe if you want to take part of some of these opportunities, maybe if you don't want to pick off the top and short and you still want to get long for whatever reason, maybe we keep squeezing to the upside. I don't know. But if that's the case, maybe just size down, maybe use one contract, maybe put your stops in, because just as fast as we went up, we can absolutely go down. So again, a little food for thought. These are some of the thoughts that are just racing through my mind all day whenever we take a look at what silver has done. And especially gold, they're kind of in the same boat. Appreciate that, Stefan. What are your thoughts on getting short on gold right now? That's a difficult one. I guess we kind of just touched on that, but it's a difficult one. It's a difficult play. It's one of those opportunities that feels very similar to the overall market in the way that I see it. The way that I see it is getting long near the highs seems like the obvious play, right? Because you're not going to be able to just pick off the top. But at the same time, it does feel that the risk is outweighing the reward. So when I perceive it from that perspective, to me, if I view it that way, I don't like to touch it. But then again, beauty is in the eye of the beholder. So if you see that, you know, you can justify the risk for this potential reward because, you know, your sizing might be different. Maybe the time duration in which you want to stay in this trade. Maybe you're going to hedge this trade. You know, we're also not taking into account the other positions that you have in your portfolio. So beauty is in the eye of the beholder and opportunity is in the eye of the beholder at the same time. So with that being said, again, I'd say it's tough getting long at the highs, feels that the risk is outweighing the reward. And it's one of those that you got to just kind of grit your teeth a little bit if you're not a part of, you know what I mean? Like, that's a tough one. It's tough to not be a part of it. It's tough to watch. But I think if a trade ever runs away from you, I think that's a great opportunity to just express that self-control. You know what I'm saying? So you can kind of switch the perspective a little bit on it. Maybe wait for this to slow down a little bit. Look, we'll use a lot of the auction market theory dynamics as well. It's just whenever we're trading at all-time highs, there's no established level at these levels. You know, so if price has never traded at these levels, how can we establish fair value? You know, because whenever we're trading at levels we've never traded before, we're just in a price discovery mode in terms of searching for a new level of value, but we don't know what value is right now. Buyers are just being super aggressive. So it kind of just feels like you're trading blind at all-time highs sometimes. So I would just lean back on risk management, right? There's always uncertainty. You're trading at all-time highs, you're trading at the lows, you're trading in the middle of a range. There's always uncertainty. So with all of that being said, just leaning on risk, leaning on those stops. And that's kind of how I'm eyeing some of these metals because I do like to take a little bit more opportunity with them. With that being said, Last look at gold here. Let's bring this down and we'll jump into the trading view platform. See what's been going on with some of these markets over here. Just give me 2 seconds. We haven't taken any trades yesterday nor today. We'll break down kind of what we were looking at. We will break down kind of what we were looking at. Bear with me as I get logged back in right here. 2, 3, 5, 3. Bear with me. Bear with me. 3, 9. There we go. Not too many opportunities on the NASDAQ market right now. Again, a lack of volatility, just a lack of volume, not much going on, a lot of choppy markets right now. So it's a difficult one to trade in. But let me pull this up and let's touch on this market just so we know the key levels we're going to at least be eyeing on. So we got it right here. With that being said, as you can see, we're trading near this value area high. To help give you a little bit more context, this value area high is from the developing 2-week composite volume profile. That means this value area high is a value area high with all of the data from this week so far, so Monday and Tuesday, and then all of last week, and it's the developing volume. So this is, to sum it up into short, this is a combined data from this week and last week. So for example, I know Mike, you had mentioned before you like to use a previous week. I've seen others like to use a previous month volume profile. So again, just to give you a little bit more context, this is a value area high because we can have like 6 value area highs. It could be the value area high from today. It could be the value area high from yesterday. It could be the value area high from the previous month, right? So it's like, what subset of data is your value area high from? And that just gives you a little bit more context. So this value area high is from the last 2 weeks, this week and all of last week. And you can see we already got a lot of responsiveness from this value area high, right? We touched on this one yesterday. We got a lot of rejection near 25,726. That would have worked out pretty well, but we kind of asked ourselves, well, do we want to take shorts off this level today or this week? I mean, I don't know. We could make money off it, but it's like, if it does go against us and we're forced to manage our risk, are we going to be okay with that? That's a very personal question to ask yourself. I know whenever I ask myself that question, if I'm taking losses, unnecessary losses a day or two before Christmas, I'm like, yo, bro, Errol, what are you doing, bro? You know, can you not be disciplined and just sit on your hands? So that's kind of been my thought process. It's like, how will I feel emotionally if this goes against me, right? Am I going to start trading emotionally? Am I going to start looking for other opportunities? And because it's the end of the year, it's not something that I want to do. So I've just been a little bit more cognizant of that. And that's another reason why I've kind of just been expressing my directional bias using the options. It's a little bit easier to do that. It's a little bit more passive. Give yourself a little bit more breathing room. And it's not as intense, right? You don't have to manage your risk so uptight. You don't have to keep an eye on it every second, right? So let me pull up these settings. We'll go over here because you guys know what we do. We show every single entry and exit on these futures products. So you can see no trades today, no trades yesterday on Monday. Last Friday is where we got chopped up a little bit, right? We were live on this one. This is where we were looking to get, I think we were looking to get short off the value area low. We just had a very tight risk. And if you guys remember, if you guys tuned in last Friday, if you guys remember, we had taken a couple shorts right before the close, or right before Gus and I had hopped off the stream. And this is how we ended up managing it. Price started to chop around. You can just see a lot of this nonsense, right? A lot of these wiki candles to the upside, the down. I mean, none of this even makes sense. Not saying the market ever makes sense, but you can definitely tell when the behavior of the market is just kind of giving you that barcode type action, kind of putting you in the ringer. So that was the kind of action we saw last Friday. We ended up just managing our position. We got short 25,579 and we covered that position 25,574. So that's a 5-point risk after sitting through all of this BS we were sitting through for like an hour. So with all that being said, again, I think the main point in terms of just having confidence going into the new year to take these trades is not being afraid to just admit you're wrong on a trade and just manage that risk, right? Because if this trade goes against me and I stay short all weekend at 25,579, the market gaps up. I'm like, good Lord, what's going on, right? So you can kind of not allow yourself to sit in some of those situations. I mean, what a gap up, good Lord. I didn't even realize we gapped up that much. But if we didn't cover that position, we would have had to sit through that gap up, and then that could make us emotional into our next trades for the week. So that was something to keep an eye on. That was last Friday, and then going into Thursday, I think we had a couple trades maybe this day. Maybe not. It's not populating right now. But no, that's going to be the mindset as we rip to the day highs. And we'll just stay we'll stay long our SPY contract. But that's all that went on over here. Before we start to wrap for the day, let's just take a quick look at Bitcoin and see what's been going on over here. 87,000 Bitcoin. Really not too much going on. I feel like we were talking about 87,000 Bitcoin last week and the week prior to that as well. So not too much going on Bitcoin, but I want to plot this volume profile just so we have a good idea on where most of the trading activity occurred for Bitcoin. So let's see where we're sitting right now. We're trying to pull off the highs a little bit. We're going to use a fixed range volume profile. I think the fixed range volume profile is probably one of the easier ones to learn. I think that's because you know exactly what subset of data you're getting, just like how we were talking about. You might use the previous week, you might use this day, you might use the previous month. But whenever you use a fixed range volume profile, you're able to just drag and drop the exact subset of data that you want. And when I say subset of data, I just mean, let's say we want to take it from this breakout. So what we can do is we can go over here to the highs. I'm going to drag this fixed range volume profile down here, and you can kind of see right down here at the bottom, this dashed line where we're sitting at 76,000 right now on Bitcoin. I'm going to drag this all the way down to this low right here. But I'm going to put it at the current trading price so that it calculates everything. So this diagonal line is going to calculate all of the trading activity in this time frame for us. So that is what gives us a little bit more context. And I think context gives you confidence, and that confidence naturally bleeds into your conviction when you trade, right? So the point of control for Bitcoin so far since October 16th, which was a Wednesday, to today, what's today? December 23rd, the point of control, the level with the most trading activity was 96,943. So with that being said, if this is taking in all of this data from that breakout of this high from 71,000, 72,000 to where we started trading within like a new playground on Bitcoin, we know this is going to be a pretty prominent level in terms of where we're going to get our bias. So maybe plot that on your chart, see how price responds around those levels, and we'll take a look at it together. But with that being said, I'm trying to think anything else top of mind before we wrap for the day. We'll see how the market responds, just a day or two before Christmas here. Interesting thesis. Metals futures are predicting a similar equities move 6 months out. Yeah, no, the metals is just a tough one to get long. And I mean, just from a visual standpoint, especially after the move that we've seen in gold today, I'm definitely more on the side of I'd rather do nothing than get long at this point, right? I probably would have said the same thing last week, and then obviously not knowing we would have made a new all-time high on gold. But I think I'm okay with that, just based off of how these metals are reacting. So curious to see how you guys manage your positions in the metals. We'll circle back around to it. We're a couple days out from Christmas, but that's going to be it on my end. I hope everybody else has a great Christmas, a great holidays, and spend some time with your family and manage these positions so that we still have a portfolio to manage come January 1st, right? But no, that's going to be it for today. We're not going to be taking any more NASDAQ trades, but we're definitely going to be managing our options positions. I'll get that Netflix and that SPY position up on the Follow Trader page if you guys want to check that out and see how we're managing it. But that's going to do it for today. Again, Stefan, Theta Traders, South Coast, everybody else, thanks for taking the time to hang out with us today. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Happy holidays. Peace.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control. Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We're back. It's still Tuesday, December 23rd, 2025. This is Futures Power Hour. Seeing if you're paying attention, Jamal. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, how are you as we wind down our trading week here?
I'm good. I am not as excited as you. My trades are not as exciting as yours. I mean, we could just do the whole hour on silver if you want. We could just literally talk about that for the whole entire hour. I'm sure you would love to do that. But no, I'm good. I'm good. It's that wonderful time of the year. It's pretty awesome. Weather is actually warmed up a little bit around here. As you can see, I'm wearing a short sleeve shirt. It's kind of crazy. But you know, that's all I got going on, really.
Can't say the same here. Still snowing. Beautiful outside.
Nice.
Gonna have a white Christmas here in New York. That's nice. Transition. Stocks are up.
Stocks are up, drifting higher.
Usually,
As I kind of thought.
Drifting higher, melting up here. Low volume, low volatility. S&P
that.
500 sitting near session highs. Metals, depending upon where you're looking, close to session highs, if not at all-time highs. Dollar's still falling apart. Crypto's not terrible, I suppose. That's some good news, some holiday cheer. Jamal, I wanted to bring up a chart that I saw yesterday. We shared it on the show, but I figured it'd be a good centerpiece because, as we know, not everyone is going to be here the next few days. People might be celebrating a holiday. They might not. The market will be open on Friday. We will be off air. It's going to be open part of the day tomorrow. We will not be on air. But what roadmap does that leave us with? I found this to be really compelling from Ryan Detrick over at Carson Research. And maybe this is just confirmation bias, Jamal, but I am guided by what happens with seasonality. And I am a trader who has paid attention to these things. So it's not like I am just seeking this out. But we are in the Santa Claus rally window officially. That's the final 5 days of the year, the first 2 of the new one. Since 1950, S&P has averaged 1.3% higher. And if we take a look at the seasonality chart for the month of December for the S&P with yesterday's move, we're basically tracking for a pretty typical month of December so far. This is where we would be on average at this point in time, which gives me confidence that the Santa Claus rally is on, that we're behaving somewhat normally. This isn't going to be like last year. Volatility continuing to come in is perhaps the clearest signal on the runway that we're still safe to land. Jamal, there's not much standing in the way of me and a long S&P 500 position between now and the end of the year.
Yeah, this is the one time where I'm all in on the idea of seasonality, mostly because there's a lot of factors to it, I think. I mean, one, there's really just not as many people trading. There's not heavy volume days. I think the other thing for this particular December is there really isn't a wall of worry. There's nothing that can kind of take the market down right now. The themes that were surrounding the market that were made it weak going back a couple of weeks ago, I feel like they're kind of dissipating now, right? I mean, the whole worries about AI, obviously the Fed meeting, whether or not they were going to cut, but just what they might potentially say around that. Those things are kind of out of the window now, and there's really nothing holding markets back from continuing to do what we've seen the last 2 days, which is drift higher. And volatilities are going not volatility, but volumes are going to be a little bit low. They were definitely low yesterday. I imagine the same today. So, nobody has a real axe to pick right now with the market to try to push it lower. It's just onward and upward.
Onward and upward is certainly one way to describe it, particularly after the GDP report that we saw this morning. Really astounding growth there, Jamal, particularly when you consider the fact that the reading that we saw, it was real GDP. We saw real GDP today. We care more about what's happening with nominal GDP in some occasions. Nominal GDP was up at 8.2%, which real GDP was at 4.3. So there is a heavy lift from inflation in there. To be clear, half of the growth rating is effectively inflation. But 4.3% real GDP is a hell of an economy. So you get a little bit of a wiggle this morning after the data where stocks were changed, unchanged. They finally find some resolution to the upside here as the session goes on. Maybe we're not going to get our rate cuts because those odds are sitting at 13% right now for the month of January. But when we do get them, they're probably going to be for good reasons because GDP is holding up. And a labor market that's looking at a 8% nominal growth rate, and that's a very hot economy, Jamal.
Yeah, I mean, it's pretty surprising.
The fastest we've seen in several years.
It's pretty surprising because I remember earlier this year we were kind of looking at all the potential layouts where GDP could go based on like tariffs and all those types of things, right? Like, I mean, we're looking at possible 2.6%. I feel like I think I'm making that up. It was all over the place, really, because we just had no idea to what to expect. And look at us now in December. Look at us, man. I mean, what'd you say? 4.3, 4.6?
Real GDP was 4.3, nominal was 8.2.
I mean, 4.3. I mean, look at us. Who would have thought?
Crazy when you have federal spending on levels akin to where we were in COVID, which in itself was the economy running deficits on par with what we had done in World War II. But that continues. And of course, the Fed's cutting rates.
if we get these, if we, I know you hate when I do this. If we get these tariff dividends, is that going to help things even more? I mean, we should be gangbusters then, right? All kind of spending.
So the Treasury is going to issue debt to give Americans money after we just
forget the details, Chris. The details don't matter. Details don't matter. Give the people what they want, man. Give them some money to spend around.
That's so funny that you say that, because I was showing this to Nick recently. I'll cover it up here, but like we just got inflation fighting checks in New York. Like, nah, that's not how that's. Nope, not how that's gonna work.
Oh man, I mean, I don't know if that ends up happening, but I think that would really change things here. But I don't know. It's hard to really say. Nevertheless, look, markets. I mean, look, technically sound. We're heading up against the all-time highs here. I don't think there's really anything stopping us from hitting it, other than the amount of days that we don't have open, honestly, because we basically got 2.5 days off between now and next week, as far as like the markets being closed. And so I think that's about the only thing that's going to slow us down. Again, I don't really see much negative news out there more recently, and if it is, it's shrugged to the side. So why there's nothing stopping you from having bullish deltas for the most part. The only thing that I've done is I've kept I do have a few bullish positions on. It's funny, I had on more a week ago, even after the dip down, but I decided to just be prudent and take a few things off. I still have a couple of things. One of the things is an SPX butterfly 6950, 7000, 7050. The other thing that I have, and I mentioned this to you, I think when I was thinking about it. Again, this is an idea that I borrowed from Mike Butler. He did it in MES. I'm doing it in MNQ. I'm short a strangle, and this is the beginning of a year-long trade. And I started it in the January expiration because it was closing in on 24 days. I probably could have held it longer, but because it's closing in on 24 days, I actually rolled it already. So now I'm in Feb. And again, I've had this on for, I think, a total of 2 weeks now. I am short the 25,250 put and the 27,000 call. And the goal is to sort of always have a leaning long delta in here. The 27K. And the goal is just kind of to have a leaning long deltas in here overall. And I think I'm going to try and be about 1,000 points to the upside in this. This probably will, I guess in some ways, maybe deter me from getting long a lot of individual NASDAQ names now. I mean, I'm not going to get too carried away, I would say. Before, I used to love being long a lot of those names, finding ways when there was dips, I would get long. But now, since I'm going to have an embedded NASDAQ long, I think it's not to say that I won't get long some of them, but I'm probably going to tone it down a little bit just because I'm going to have an embedded NASDAQ long all year.
Interesting. Yeah. Well, I'm looking at the market here and thinking that this inverse head and shoulders pattern that we've had on the screen for the better part of the past week plus, it's playing out picture perfect so far. And the path of least resistance, low vol, low volume, clearly the upside, a continuation of what we discussed yesterday. The VIX itself, Jamal, of course, we look at volatility as our keystone here on North Star. You get in that range, as our research shows, over the past 20 years. If you have volatility bucketed out, like what's a 15 and below VIX regime look like? What's the most efficacious way to put capital to work in the market? Historically speaking, you get the highest daily average returns with the lowest standard deviation of those returns by simply being long stocks. It's more efficacious than doing a short straddle, a short strangle, a short iron condor, even a short put spread, right? It's the way to play a market that's going up right now. And so single digit IVRs for each of the four major equity indexes right now, as the VIX cycles into another low for the year. This would be a low close for the year in the VIX. It's another cycle closing low for the VXF26 and the G26, both the January and February expirations here. So, the table's kind of set right now for that low volume, low vol push to the upside. And now that we're in the Santa Claus rally window, there's, barring some sort of catalyst that appears, there's really no reason to fight the tape as far as I'm concerned.
I agree. And so, of course, that begs the question that people are already asking, is this a good time to go out and buy puts? Is this a good time to go out and buy VIX calls or VIX future? I mean, I would probably say more the latter two than the puts. I mean, certainly there's no cheaper time to buy puts than right now. Obviously, volatility is low, even though they're still skew. Obviously, those puts are cheaper. But, you're still betting on, you're betting on, for now, let's just say end of the world. You're betting on the end of the world, right? I mean, that's usually what it is when you're betting on markets falling and betting on puts. And so, yeah, they're cheap, but they can still just melt away slowly. And they're cheap from a volatility standpoint, but they're not cheap from a cost standpoint. I mean, you're still paying for them. So I used to love to do that idea. I used to love to be like, I am fine holding these long puts right now and wait till market falls. I feel like it's benefited you more to watch the market fall and then go ahead and jump in and get long at some point. So that's the kind of way that I look at it. The VIX, on the other hand, I will say there's probably nothing wrong with the idea of you wanting to buy a VIX call. I will say always pay attention to, again, if you're buying Jan VIX, if you're buying Jan VIX options, you're buying, like Chris just showed, the F contract, right? Not the VIX index that's at 1377, the VIX contract that's at 1685. That's your at the money, what you're looking at. So, and you can see that from the pricing. If you look at the at the money, the 13.5 call, it reflects a VIX future of 16 and change. So I would say one of the easier things to do is a mini VIX, VXM. You could buy that future, to which I literally just said on Options Trading Concepts Live earlier, you could buy that future, but why buy it today? I mean, tomorrow is probably going to be more of the same. You could just wait till tomorrow or maybe even the end of the week. But that's probably, those are not a huge lift when you look at the price point on that. So that's probably another way to do it.
Interesting. Curious, why would you go to VIX future as opposed to using an ETF product? Is it simply because we have futures markets that are open and these are liquid?
Yeah, exactly that. I mean, they're open, they're liquid. When you do have overnight situations, you can actually trade this versus the ETF product. And I don't know, the VXXs of the world, I mean, I don't know. I mean, you could buy that too, but I mean, realistically, if you're just talking about price alone, I mean, you're paying $2,700 versus, again, this is margin account versus right. that price point on the future. So, and I forget, I think these are 1/10 the size, this VIX micro, I'm pretty sure.
It's actually, the tick size on VX is 0.05. On VXM, it's 0.01.
Okay.
The tick value on VX is $50. On VXM, it's $1. Full point multiplier of 1,000 on VX, 100 on VXM.
There you go.
So it's definitely a smaller product, a little bit more manageable, trading at 1689 here. So we have that steep contango in our volatility curve. Sitting near session highs right now, the head and shoulders pattern here, simply put, would give us a move back to about 69.90 as we measured it out recently. And so we're about 30 points away from that, less than 0.5%, Jamal. And thinking about a VIX that's trading with a 13 or 14 handle, that might be tomorrow morning's move. And then as far as I'm concerned, the two trades that I have on, first off, because of expiry coming up around the corner, if we got to move up towards 7K, I mean, I got to just get out of Dodge. The 7,000, 7,050 call spread that we've been holding on here, thinking that there could be a potential return to all-time highs by the end of the year. We're getting pretty close to it. So it's worked out enough that if it does occur in the next few days, we're fine. But it's not going to be one of those positions where it's like, let's ride this into the sun and see how much more we can squeeze out of it. Mm-hmm. Because I already do have the MES position on as well, which is working out, as neatly as one could hope thus far, considering what it was.
The future or our options in that?
No, the future itself got it at 68, 88.5. So it's, it's up 70 odd points. But I have my exposure in stocks. I'm really comfortable hanging on to it. The technical momentum is great. The volatility composure is fantastic. And this is that sweet spot for low volume melt ups, which is happening to a T.
Yep, it sure is. And I think we kind of forecasted that this potentially happening, and that's exactly what's going on. I will say, I know it's kind of frustrating for some people in this type of environment. You do look for more trades, more ways to put capital to work. Outside of, like Chris just outlined, I really don't see much. I know a lot of people like to try and get short very high dollar names and try to get short, strangles and straddles and those, feeling like, well, we're not moving, so that straddle's going to come in. And yeah, that's a possibility. I mean, look, when I worked at a prop firm, we definitely did that. We definitely looked at big straddles and strangles to sell around these times. Like, that thing's not moving. It's low vol and it's going to stay low. And that's possible. But I just, if you don't, unless you have deep pockets, I would be careful with that, because again, who knows what we get a pop on. And the last thing you want to lose is lose money on a strangle where you sold something that's implied vol of 20, hoping it'll go down to 16, and it pops for 5 vol points. That sucks.
Yeah, that's never fun. We've all been there, but you gotta try to take steps to mitigate that. We have the NASDAQ here, Jamal. We've been spending a lot of time focusing on ES. There had been a little bit of a vol premium, and there still is in the NASDAQ thanks to the AI trade. You can see it has an IVR of 9, which is the high on the board for the 4 indexes. S&P, by comparison, 7.5. Russell, 1.5. My goodness. But the technical turn that's been made here, I think, is fairly concrete. We're going to remove everything else. We're going to make this nice and bright. When we take a look at what's been going on in the NASDAQ in recent weeks, Jamal, I see a very clear line in the sand. And it's right around, we'll call it 26,650 or 25,650, excuse me. Swing lows, early December. Once we break through it, it becomes resistance. We've been hugging it the past few sessions and treating it as support anew. Almost classic breakdown, false breakout, get back into a consolidation, which as a heuristic, 26,100 or so, a little bit north of there, you return to the other side of the consolidation. That becomes your near-term target. So you have a setup here in the NASDAQ that looks a little bit more bullish. It's not quite the inverse head and shoulders pattern that you see in the S&P on the corresponding time frame, but it does give you might call it something like an expanding wedge down here from a technician's perspective. I know all these terms seem like they're made up, and guess what? They are. But this is what you would call it, right? An expanding wedge of sorts is a turn, a reversal pattern, and that's what's transpiring here. And then you slap on the fact that we're treating the wedge high, target resistance now becomes support, gives you that confidence for the near-term drift. The Russell is the last piece of this puzzle, which is surprisingly down 0.5% today. We can see that we had a little bit of a rounding out here as well. And if we can get comfortably back above 2560, you kind of have all the pieces in place then. You have a NASDAQ that's back in its consolidation, failing to break lower. You have an S&P that's still working through its inverse head and shoulders. And you have a Russell that's warded off a more significant top. The next week and a half, barring something crazy, I don't know how to describe it in a more technical way, but unless something comes out of left field, Jamal, there's not much standing in the way of the market of kind of being on autopilot right now for an extension to the upside.
Yeah, I agree. I mean, I think it's in short order here. We're going to be at 26K because, again, there's just really nothing weighing down the market. And it's interesting how fast those fears disappeared around AI. And that's not to say they're going to return, that they won't return, but it just doesn't seem to be as much of a concern right now anymore, at least towards the end of the year here. So, yeah, I mean, I think we just continue to do what we've been doing here, maybe even have days where we start off in the red a little bit and then, eventually or drift higher. I mean, there's no other way to say it. So that's what I'm seeing in the market.
What could derail this market, Jamal? Maybe something Trump says, although I find it interesting because Trump definitely said something today that we're going to go over.
I don't even know if that's going to hurt the market right now.
No, I mean, it just popped on like 5 minutes before we went on air on from Nick Timrose at the Wall Street Journal, which is we'll get a kick out of it. Sector performance today. The Russell falling, I think, is something to be noteworthy. We do have those Fed cut odds coming in. Most of the companies in the Russell are unprofitable. And they really need those lower rates for their floating debt structures. The bigger companies have the fixed rate debt. The smaller cap companies, they don't have the cash balances, they don't have the moats in their balance sheets, and they are more likely to pay variable loans. So they really need those lower rates. Rate cut odds 20% down to, and I should refresh this before I make such a claim, so that's why I'm going to talk to fill this space, still 13%. So cut odds are down after the GDP data today for the month of January in aggregate. March now will have, well, it's actually now right back to 50%. I just saw it flick up from 49.9 to 50.6. So March is now a coin flip, whereas a few days ago, we were talking about March was going to give us a cut with the new summary of economic projections. Russell's not too hot about that. But the sector performance today, I think, underscores why this really is a story of the tech names and the semis leading the way. XME, metals and mining at the top of the board, up 0.87%, but then semiconductors, that's positive. That's up by 0.81%. You have energy doing a little bit better, utilities up. Financials still strong. This has been on our radar this week. We don't have anything going on in here. Probably should have, as opposed to just being navel gazers and watching the technical pattern. But that's a break into new all-time highs, holding former highs as support after the breakout and moving up into them again today. When banks and semis are up, what can you complain about? Perhaps the fact that we do track 25 sector ETFs here on Futures Power Hour, Jamal, and 15 of those 25 are in the red. So it's not a super strong day breadth-wise. It's really selective here. It's people padding their accounts with what's really worked well in 2025.
You know, it's interesting you say that because now I'm starting to see some areas that are kind of weak, healthcare being one of them. And this is one of the things that I am trying to, if there's one thing I do probably at the end of the year, it is something like that. I do pay attention to how certain sectors performed on any given year and how that possibly changes for next year. I used to try to make that trade immediately. Now I just watch and see if it does come to fruition, right? Now I don't think XLF has been, financials have been that weak this year, obviously, but it's been quiet. Is really what I'm getting at. It's been quiet for a while. We don't talk about the banks as much as we used to at one point in time.
Don't you want the banks to be quiet if they're going to be on a nice bull run? Like, we don't want noise in the banks.
Yeah, I suppose so. Overall. The options trader in me wants some volatility in them to some degree to be able to trade them a little bit more. I just feel like when we have two-sided actions, the world's a lot more fun, Chris. I mean, look, that's one of the reasons why we talk about the tech names so much, because of the big two-sided action. Oh my God, Meta got taken out, they're done. Oh my God, look at the stock now in just, a couple of months time period, the way that they move. So I don't know if we're going to get that in the banks. I mean, obviously we really haven't had that since, well, the crazy times of 08, 09, 2010, if you will. But I don't know. It's something to keep an eye on.
Yeah,
well,
SVB.
Yeah, you're right. Yeah,
like that was a flash in the pan. The Fed hiked rates a few weeks later. They weren't worried about that at all.
No.
Leadership, talk about semis going up. MAGS is not a sector ETF, but it's certainly an interesting group of names. That's breaking out here, Jamal. Talking about leadership coming back into play. That to me looks like a chart where we are going to, and my finger is slipping. So if you're a diagonal person, you already had your breakout yesterday. If you're a horizontal person, you're getting clearance of the earlier December highs today. MAG 7 names perking on up. I do have a Google position that I intend on carrying through the holidays because a bullish wedge of sorts at the high and starting to break out from that. Maybe this needs to be reconstituted to cover the gap. But if we were to take a look at this chart, Jamal, as someone who's a bull, I could get on board and convince myself that this is a pattern that I should trade on a potential breakout. And it looks like it's breaking out. So I'm along a 330, 340 call spread, which is right at the expected move over the next 24 days. And I plan on riding this into the sun. This is not a typical tasty trade. This is, I need high convexity here to get off to a nice start for 2026.
And that's another interesting thing to talk about, too, that we've seen this year, the different phases of AI. Obviously, they benefited more recently with their Gemini. But let's go, we go back to earlier in the year. I mean, remember DeepSeek? It seemed like that was going to derail everything. Those stocks really all took it on the chin. They eventually bounced back. And then, there's been kind of a race throughout the year. We've seen, obviously, NVIDIA moving at times. Really more Microsoft moving at times. Meta moving at times, Apple kind of not moving at times, if you will, until it eventually started to move. So that was definitely something that I think, I wonder if that's going to carry over to next year, if there's still going to be, it's almost like an arms race, but it's the AI race, right? Like between these set of stocks here. So I don't blame you for holding on to the call spread and Google, because that chart looks like it's working on its way to a breakout, and they're in the lead right now, last I checked.
Microsoft is a really fascinating chart going into the next few weeks. The swing low that we have on September 5th, also a low from November 7th, and really has been resistance since then. We'll call it 493. Coming into convergence with 493 right now is our 50-day moving average. And you could see the yellow line here, the 1 month resistance in November, here in December. We're starting to turn the corner. So just like little canaries in the coal mine, Jamal, if Microsoft's at 495, 500 all of a sudden in a few days' time, NVIDIA here starting to break out a little bit more, really nice day up 2.7% and clearing the earlier December high. You're seeing the pieces, the leadership groups reemerge, right? We talk about that Mag 7 name. You have the leadership coming together and starting to show signs of a little bit more strength here. And maybe there's some holiday shopping that can be done. And an Apple that's back to its 50-day, or a Meta that's been so beleaguered. But the stock market to me looks like it's on the up and up. We can make our way over to the bond market here, Jamal, as we go into this holidays, which they're mixed after GDP. And certainly after something President Trump said here, which this is you should believe it with your own eyes. I'm going to read it on the screen. I'm also going to put it up there for the sake of this. Okay, this comes from Nick Timros at the Wall Street Journal. The Trump rule. The financial news today was great. GDP up 4.2% as opposed to the predicted 2.5%. And this despite the downward pressure of the recent Democrat shutdown. But in the modern market, when you have good news, the market stays even or goes down because Wall Street's heads are wired differently than they used to be. In the old days, when there was good news, the market went up. Nowadays, when there's good news, the market goes down because everybody thinks that interest rates will be immediately lifted to take care of potential inflation. That means that essentially we can never have a great market again. And those markets from the time when our nation was building up and becoming great. Strong, even phenomenal markets don't cause inflation. Stupidity does. I want my new Fed chair to lower interest rates if the market is doing well, not destroy the market for no reason whatsoever. I want to have a market the likes of which we haven't had in many decades, a market that goes up on good news and down on bad news the way it should be and the way it was. Inflation will take care of itself. And if it doesn't, we can always raise rates at the appropriate time. But the appropriate time is not to kill rallies, which could lift our nation by 10, 15, and even 20 GDP points in a year, and maybe even more than that. A nation can never be economically great if eggheads are allowed to do everything within their power to destroy the upward slope. We are going to be encouraging the good market to get better rather than make it impossible for it to do so. We're going to see numbers that are far more natural, Jamal, and far better than they have ever been before. Okay, and then he goes, we're going to make America great again.
Buy markets. Buy. Is what it sounds like.
Buy everything. Yeah, I mean, like we talk about running it hot. Right, isn't this kind of like they're showing the cards here? This is the whole running it hot perspective that you're going to have an economy it's growing at 4.8.2, 4.3 real nominal, coupled with Fed cuts, continued government spending. Next year, a ton of tax cuts coming down the pipeline. I don't know if people listened to the Wells Fargo conference call the other day, kind of outing myself here, but they noted that their expectations for tax rebates in the forthcoming tax season are going to be north of $500 billion. Typically, that's a number closer to $325 billion, Jamal. So there's going to be a lot more money circulating through the economy. And, maybe that's what's going on in gold and silver. There's a repricing around all that. But, for the bond market here today, volatility is finally starting to perk up. Is that a 5 almost in ZB's IVR? Are we almost out of negative territory in ZN? Oh, sure enough.
Yeah, I mean,
I think I'm really, I have the bond market totally misread myself personally.
Oh, 100%. I mean, I don't know what to make of it as far as the story goes. I'm actually at this point, I mean, it's all the things that have happened in the bond market over the last couple of years. I honestly am a little bit confused at the moves in the bond market. That said, I mean, when you draw out and you look at the big picture, the bond market is still in this really big, long drawdown. And so that's the only reason why I feel like the only trade that I've done in bonds is try to get long at different times. And I'm doing it once again. I mean, I've had this on for probably about 2 weeks now, but the 115, 117 call spread. Because again, it's just the big picture. When you see how bonds have been weighed down so much over the last couple of years, why not to try and give yourself some duration and try and get long? That's the only trade I can think of, because obviously there's no short vol trade to do as of right now. I mean, bond vol is in single digits.
I'm gonna make an argument for ZT. It has a 30 IVR. It's the only thing that has any volatility in it, except for the fact that this is not really that deep of an options market, and ZT doesn't really move all that much. So perhaps we have an iron condor-ish type of trade in here. This is when, like we're really scraping the barrel here, Jamal, to try to get this like.
Yeah, I'd just rather the directional plays right now. I mean, and even with that, it's like you said. I mean, like I said, I've been confused by bond moves over this past year. It's been hard, but yeah, I just when you again looking at the bigger picture and you see how we're still in this drawdown, call spread.
I'm just hoping for some directional move. This reverse iron fly is not doing anything too hot right now. I just needed to get away from 112, as everyone's heard me say repeatedly for the past week, and it's not.
Yeah.
So there's plenty of time left on the board. Doing this trade again today at 62% pop, almost a 1-to-1. It's not quite that, like more of like a 2-to-3. I'm fine with that. I'm fine holding on, and I probably would put this on again still because it's a 0.7 IVR, and that's ultimately what something like this environment calls to do. But if we're on the other side of the new year, Jamal, and this thing is still hugging 112, and we get through, let's say, the January 9th non-farm payrolls report that Friday, and it's still at 112, and then we get to CPI a few days later, that Tuesday, and we're still at 112, I'm just going to cut bait, because if those things can't get it moving, then the January Fed meeting is dead on arrival. That's that.
No, I agree with you on that. Kind of the same on this call spread. I got 51% pop, and I'm basically risking 1 to make 1.5. Same deal. I need a catalyst, and that's been the hard. We talk about the confusing part about bonds. That's been it. The catalyst, and I feel like it hasn't moved the same on the catalyst. That, and I guess there's probably a reason for that. Those catalysts have really changed in their severity and their meaning. So maybe that's part of it too. But yeah, bonds have not reflected any. Have not shown any care around the catalyst that we used to see it do.
What's to say? What's more to say? I do find it interesting that ZB is up here a skosh after all the data, particularly the GDP report. That was really hot. Okay, no reason to lie about it. 115.12, we fall all the way down to 114.23, 24 ticks. Sizable move. The fact that we've rebounded such is a little shocking to me. So do I still want to hold on to that long put spread 113, 112? Not really, but I'm going to do so because I'll be actively managing positions the next few days. But I'm not happy about the bond market, which is why we cleanse our palate here, Jamal, and we bring in the metals.
Look at you! You can't even contain yourself. You can't even contain yourself.
Why would I want to contain myself, Jamal? Silver's up 4.5% right now. This is actually the danger zone, because if this has been the channel that we've been watching over the past several weeks and months, really going back to late November, as we break out of our cup and handle formation into our falling wedge, okay, you could start to see that this is getting a little long in the tooth up here, depending upon how you measure it. So adding into a position right now is probably not the best thing to do if we want to size this up to the most recent swing high. As we get into like 72.25 or so, if this thing is still running, people who are long may want to trim position a little bit and then just wait for the pullback and get in on the next long leg. Because for the past several weeks, Jamal, that yellow line here, that 1 month moving average dips into it have been ironclad support. And so presented with an opportunity even to rebuy silver at like 67, 68, which is where the uptrend would be, I think it's an opportunity that we have to entertain. We ride the bull I'm a momentum person. We ride the bull until it kicks us off. We keep putting coins into the machine until the game spits out a loser. But it's not right now. So We get our silver move to the upside. Volatility is cycling up into a new high. Those two like to go hand in hand. Silver vol up, silver price is up. And that's what we're seeing play out. So I don't know how else these trades could be working out for the better right now, considering how we've continued to just feed long deltas, long out of the money call spreads. It's going to burn in our face at some point in time. One of these trades will not work. But until then, got to enjoy it.
Enjoy it, ride it. It is getting a little long in the tooth. You're right. Up here, the air is a little thin. Up here, that doesn't mean it can't do the same thing tomorrow, just like the markets are drifting higher tomorrow. For those who want to get short, I think you start scaling in slowly here. You don't want to, jump in with both feet. I kind of scaled in slowly with a put in SLV today. And yeah, just a put in outright. I bought the 65 put in SLV. Why SLV? I mean, honestly, SI is as far as risk to reward, it's gotten a little expensive. And SIL, I mean, same deal, 7,000 for one contract. Can't do it, homie. Can't do it. It's a little expensive. So SLV seems to be the easiest way to play as of now. And again, look, this is doing exactly what it's supposed to do now. Don't get me wrong. It's going higher. The vol is going up. That's telling you a lot. I will say it is interesting, though. Let's see what skew looks like right now. Should be upside skew, but I don't know no, hold on, not February. Let's just look at January. Let's look at 71 and a half. Let's look at $10 up. Let's look at the 81 strike call, and that's a 55.
Where are we at? 35 or 62 days?
35 days. Take a look at the 81 call and let's look at the 61 put.
81 call, 192, and you said 61 put?
Yeah, long way down there. Yeah, skew is still
95
massive.
cents. So what do you do with that?
Nothing. Actually, that tells.
Upside?
I think that tells you we still got some upside. Honestly, it's not flat skew yet. I mean, there's still strong skew to the upside. I actually think that's the and the other thing about this, I will say, as much as this chart is up and to the right and bullish, platinum. Look at platinum. Like that, I think that one is probably more overbought than silver. I would say
Platinum's up 9.6% today.
Yeah.
It's crazy because yesterday we highlighted on the show that the metals, there was this metals mania, obviously. We jokingly called the show Metals Momentum Hour instead of Futures Power Hour because you had a platinum that's closing up at multi-year highs. In fact, I mean, I wonder even if the continuous contract would go back so far as to show this here.
It actually does, yeah. I remember, I'm sure you do too, I remember when platinum was way more than gold. I remember when platinum used to be 2,000 and gold was like, a couple $100, right?
2008. Yeah, I mean, well, if you think about that dynamic, then isn't platinum really undervalued by like 50%? Like, doesn't it need to double from here? Excuse me. If it wants to get back on par where it was with gold in 2008, that's just, we don't really talk platinum futures here. Maybe we should incorporate them into our metals conversation because they have gone absolutely haywire.
Yeah,
in just the past month.
Earlier today, swear to God, buying power was like 7,000 to trade this platinum future. It's gone up. It's 10,725 now. Is what I'm seeing.
Platinum's 1 month return is 36%. Silver's December return is 25%. Gold's December return is a paltry 6.07%, Jamal. But it's the metals mania that's really just defining this market today because gold prices themselves here, they finally take their leg up after breaking out of their little triangle that had been consolidating last week. We do see here that volatility is picking up again, right? So another one of those check marks if you're staying bullish here going into the Christmas holiday. Of course, if you're at a very short, time duration. Yesterday we were at 1 DTE on a gold call spread, so we took it off. We kept on the longer one that's still sitting at 35 days. That's deep in the money now because it was a 4,400, 4,425 call spread. That's doing some nice work. also, Jamal, and I know it's crazy to say, but it felt prudent to also get long the 5,000, 5,100 call spread in gold for the April 27th expiry, 125 days out. Talking about an 11% move over nearly 4 months. Gold's had an astounding year. Gold's up, 71% right now, year to date. Asking for $500 today is different than asking for $500 at the start of last year.
Mm-hmm.
Totally different environment. Asking for $500 at the start of this year, we opened up at 2641. So you're effectively looking for a 18.5% rally. Now you're looking for an 11% rally. So I think 5K is going to happen at some point next year. It's whether or not we can do it by April 27th. This is another story, but I'm certainly hoping for that to play out. Either way, though.
When did you put that
bottom
on?
left, top yesterday.
Oh, okay.
Why not? Sprinkle
that
something
trade.
a little extra. Sprinkle something in a little extra this holiday season.
I'm going to join you in that. And yeah, I'm going to try first 1850. I like that trade.
We have a nice set of fractals here as well in gold. A larger triangle, which consolidated into a smaller triangle, But all of them are like little building blocks that are all pointing to the upside, because that's what ascending triangles typically do in these occasions. So as long as that technical pattern's in place, again, the best trade, you stick with your winners. These are going to fall apart at some point, but when vol's up and prices are up, that's not exactly a sign that a top's coming in. It's a sign that the rally has its backbone.
And I do want to explain, like, again, when I talked about getting the silver short and the idea of the air ascent up here, I mean, they're a little extended, but this was a little extended. I'd say silver and platinum a little bit extended. Gold, I don't think is actually, I think that's just starting to break out. But my point is I'm putting on I have this put on SLV for maybe a 5 to 10% pullback. Like, I'm not expecting the story to be over. I'm not expecting silver to be below 60 going down to 50. I'm not expecting that, honestly. I think there's strong reasons for this run to continue. But again, small pullbacks end up being the thing that push these things eventually higher, as we often know. So just to clarify, my short is very short term.
I won't hold it against you. Silver 63 days, gold 35 days, plus a little bit more gold sitting at 125. Copper, that's making nice progress too. We're at 35 DTE there, Jamal. And I would point out that the position that we've been looking for, the 570, 580 call spread, again, holding it through the next few weeks, this thing looks like it's breaking out. The measured move is 40 cents on top of the 535 target. So that gave us a 575 target in a potential breakout here. Another one of these metals, triangle into a breakout. We've seen this movie playing out before. It's currently playing out. Not going to think. Just ride the wave. So I'm very content with the metals exposure. Maybe we need to buy some platinum too, Jamal. Really get all the eggs in one basket.
Yeah, this is one you wonder if it wasn't for that weird with copper, if you wonder if it wasn't for that weird situation that happened earlier in the year, if this would be at all-time highs already, sitting comfortably like the other metals are. I think that really kind of wrecked the whole copper market for a while there, but it's starting to get its feet back now.
Energy firming up here. We're getting lots and lots of, I don't need to do that. There you go. Lots and lots of little signals here that the Trump administration is preparing for land strikes, as Trump said last night. So we get another leg up here. Also, oil is highly correlated with global growth. We've referenced this stat on the show now twice, I think, in 2 weeks after going several months without doing so. But the rolling correlation, if you take a look at the relationship between demand for oil and global GDP on a quarterly basis over the past 30 years, 4 quarters in a year, so that's 120 data points. That's a 0.91 positive correlation, Jamal. Near perfect. So when you have an economy that's growing at 8+% nominally, 4+% real terms, it probably infers that energy demand is pretty high still. And, the Trump administration just canceled a bunch of wind projects yesterday that would have provided electricity for 3 million homes in the Northeast, which is the day after that his firm merged with the fusion company, which, I don't know. Anyhow, Crude oil here is continuing to move to the upside. It's a 21 IVR. Do you see any reason to have anything on here during a period in which geopolitical tensions are high and you or those listening in may not be able to operate as much as they'd like to because, well, the holidays are here?
Well, after seeing what essentially were almost yearly lows there, and I actually don't remember what it was trading down around April and May or March, April, but I feel like somewhere around the lower level. A week ago, 55. I mean, it was looking bleak, honestly, and it looked like we were looking at a new sort of lower range for oil and then another bounce back. And that's kind of what we've noticed about oil over the last couple of months. I mean, there's, $2 to $3 to the downside, and then all of a sudden it bounces back $2 to $3 back where it was. And so that's kind of what been my play. I mean, I had it on. It's funny, I got caught in the head fake. I mean, when it dropped to 58, 57 and change, I got in at 58.80, I think, actually. And then it fell to 55, which kind of sucked. And my contract was expiring. So I had to roll that out to the next expiration and get long one with a cost basis of 55, even though I know my real cost basis is 58. And as a result, I was also able to put on a 1x2 call spread. I got to give Mikey another shout out on that good idea. Buying one to sell two right around that break even of around 58.5, right? So I bought the 56.5 calls, sold two of the 58.5 calls, and I'm long the future at 55, right? So right now that's all working out as it's all bounced back, and that's kind of what we've seen over the last couple of months of oil. Is there a new lower regime ahead? I mean, you talk about the administration. They've often said that they want lower oil prices. I mean, lower gas prices. We've seen that at the pump to some degree. I just wonder what the next year or so of oil prices look like without any political strife, if there's any of that, because that's been the number one thing to move it over the last couple of years.
We think about the margin between the price at the pump and what we see in the futures market, and it takes a few months for it to get into society, right? But this has been range bound since April. I would be shocked if I actually haven't seen my local pump. It's been like 359. It feels like all year long. I don't think I've seen it move once. That's in part because the gasoline futures themselves are stable. Kind of a pain. Would be nice to get a little bit lower prices.
Yeah, we're looking at like 315 right now, I feel, like in the suburbs.
But it hasn't moved that much, right?
The last couple of months, not much. Yeah, you're right.
It's like up a few pennies, down a few pennies, but it's been oscillating around the same range. So I don't know if we're looking for any relief there. We're up more than $3 from the low. It begs the question, is this potential Venezuela situation fully priced in? To a certain degree, I think it is, but we've been talking about the geopolitical hedges here, Jamal. If we think about something going through the end of next week, perhaps into the new year, January 2nd, what would another $2 or $3 rise look like? You willing to risk $100 for some protection? Could we think that stocks would react negatively in an event that we do get land strikes during a liquid time? Yeah, $100 here. Take a flyer on that. We've been working these. Obviously, not all of them have worked out at all because we haven't had that significant upward drift, but it's something just, I think, having in the pocket, one of those things that helps you sleep better at night if you're thinking about managing your book. The other side of this is what's happening in natural gas as we quickly go into the final few minutes of the show, which now has a 96.1 IVR, Jamal. Hello. That's also a savior for the trade that we put on here recently, which was underwater, but now at 35 DTE, the 3.537 and 5.5, 5.7 short iron condor trade is back in the game. We still have some time now, and we're now back in between our strikes. So look, this trade has sucked. There's no other way to put it. That's the professional way of describing what I feel has been just gut-wrenching, watching a big winner turn into a loser and just go absolutely vertical in the wrong direction against me. But we're still in the time frame, and this is a typical tasty trade, Jamal, right? It's 45 in, 21 out, or some variation of that, close to getting in around 45 in, 21 out. And there's still time left on the board, and it feels like a trust the process situation. But a 96 IVR, talking about finding something uncorrelated with what's happening in the rest of the market when you see single-digit IVRs for equity indexes, this is hard to look away from if you're following what we consider to be our core methodology of how we approach volatility in markets.
Look, I'm in the same boat with you. Matter of fact, worse. I have the 380 and 4 put spread, right? And so I'm still a little bit in the money. But it does seem like it's trying to mount a turnaround here in nat gas. So I'm not touching it. I'm in 35 days. I think I still got some time here. I'm good. So I do want to address a question somebody asked us in the chat. It's an interesting trade they got on. They're short the 344 put spread. So they're short that put spread. And I think from what I can gather, they are long the 450 call and short 3 of the 510 calls. And so essentially you're pretty bullish outside of the fact that if we get back up to those highs once again, you'll be kind of pinched a little bit. But they're like, asking about adjusting this trade. I mean, I don't know if I'm comfortable personally. This is me. I don't know if I'm comfortable short 3 of the 510s. That's about the only adjustment I would make. But otherwise, I mean, you're in a long situation. And you got it right where you want it right now. You seem like you suffered through the worst part of this trade. Maybe you could, if there's anything, 4 to 340 is pretty wide. Personally, I don't know what your capital situation is, but that's pretty wide as far as potential losses. But again, I would probably manage some of those edges of that trade, the 510 and the 340. But outside of that, I mean, you got a long trade on essentially, and the more this goes up slowly, it's going to be work in your favor.
Why are we bouncing today to the degree that we are? It's an 8.3% gain. That's the question that I'm asking myself. I've looked around the news. I don't find anything substantially compelling. I was looking at the temperature forecast to see maybe that changed.
I don't know. Why did we drop from 510 to 360? I mean, it's been hard really to figure out the nat gas moves more recently. It doesn't seem to be as straight and narrow as it used to be.
No, it doesn't. But the fact that the volatility is here, listen, being directional right now is going to be a little bit more expensive and costly. And, at a 95, maybe we could play with the recent lows. I would have my reservations about being so heavily tilted on the short 5. Was it 5.1?
510s, yeah, 5.1. Yep.
Yeah.
Short 3 of those. I would
That's
too.
really heavy up there. And because the way that this market's moved, it almost implies like there's not a lot of, it's almost like it's a thin market. Not that it has been thin, but these 20% swings in the span of a few days.
Yeah.
If we're back at 425 tomorrow, I wouldn't be shocked. Just as if I wouldn't surprise me if we're at 340 tomorrow. And that's more or less what the market's pricing in right now for what it's worth if we were to take a look at this. I mean,
being short 3, of those, I'm in the gold trade filled. Being short, multiples of those calls in what we are considering, right, what we are currently in December with that Feb contract makes me nervous. I definitely wouldn't have 3 of those.
We can go over to FX real quick here, Jamal, and we're going to go back over to this and back over to the slides. Dollar keeps struggling. Yields mixed. 2-year yields are higher, so you might think that would cater to a stronger dollar. Hey, we don't need those rate cuts. Well, the dollar is not enjoying any sort of downside protection here. In fact, it's struggling. The euro is up above 118. The British pound up near 135, closing out the year on a stronger note. Certainly a December high. Even a Canadian dollar continuing to rally, which I really needed to stop doing because I'm going up there in a few weeks to Quebec City. But my interest here is in the Japanese yen, which while not near the session highs is potentially showing some signs of bottoming. We do have a yen intervention trade on here, Jamal. Ooh, something spicy for the holiday. At 17 DTE, long the 66, short the 67 call spread. Max loss is around $100, depending upon where you've entered. Mine's a little bit less than that because I got it closer to the recent lows. But if we do get a 200, 300 pip move because the Ministry of Finance officials have been speaking so poorly of the market's reception to the recent rate hike, not too different than what Trump was saying today about the market's reaction to GDP data. Either way, hey, you know what? Maybe they do something when liquidity's thin. Will it work out? Who knows? But at 17 DTE, you know what? Maybe there's still enough intrinsic value there on the other side of the holiday if nothing happens.
I might need to adjust my trade. I've had this on for a while. I have the 6.7, 6.9, and I I might just need to roll down some to the 6567. I think I got to do that.
The dollar is in dire straits here as we are coming into the end of the year. Of course, closing lows for the month could be here today for DXY. What's next on the calendar? Look, there are some things that are coming out tomorrow, coming out potentially overseas. We have Japanese data, of course, due on Christmas Day. Delightful. But tomorrow, jobless claims here in the U.S. There could be a market reaction, of course, in the morning, 8:30 a.m. Eastern. Other than that, we are done and dusted here today, Jamal, and Futures Power Hour. And I suppose we should say Merry Christmas to everyone who celebrates. Otherwise, enjoy the time off. Of course, Tasty Live programming will continue with more Dr. Jim Schultz up next year with From Theory to Practice. I'll be back later with Overtime, Jamal. Hope you have a nice holiday time off, buddy.
You too, my friend. Merry Christmas. Happy holidays.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday edition of what it is that we are trying to do. Welcome to the Merry Christmas Eve edition of what it is that we are trying to do. So thank you guys so much for being a part of the network, being a part of my show and all the other great shows that we have here on the network, because it is only because of you all that we can do what we do. So if you are watching over on the Tasty Live network, I would actually bounce on over to YouTube, because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the program. And for the 97th consecutive day, you can celebrate if you are a gold bull or a silver bull here today. So Paul, go ahead and bring us into the market. Man, I guess you can celebrate if you're any kind of bull today. You've got EMI S&P's up 30 on the day. You've got the risk-free instrument, also known as the NASDAQ futures, extremely high risk, up 95. You've got the boomers up 112, and you've got the Russell 2000 futures index down 14 on the day. So a little bit of a mixed market. Like normally you see the indexes obviously following each other forward through the forest, but today you've got, I guess the major market indexes, S&P 500, NASDAQ, Dow, all kind of following each other to the upside. And then you've got the Russell bucking the trend, man. You've got the Russell actually down 14 points here on the day. But man, take a look. Yeah, you got bonds, you got notes, you got oil, you got whatever. But man, look at some shifties out there. Look at these guys and gals. Gold up 48. Silver up $3 on the day. Silver up to 71.53. Man, that is some crazy, crazy bonkers stuff. I mean, I felt like silver was having a short squeeze from like 37 to 39. Like I felt like, man, when this thing was at 37, I'm like, here it is. Like they're taking all the shorts out, 37 to 39. But man, we had just gotten started. We hadn't even gotten started to get started yet from 37 to 39. But yeah, the metals, man, this is some wild stuff. It's some wild stuff indeed. If you take a look at silver, we'll look at SIL. That's fine. Take a look at silver. You've got man, now that is a strong chart right there. Like, I mean, I don't know how you couldn't possibly be bearish on this chart, but given what's happened in the past, man, that's a lot of strength, a lot of bullishness. It was actually up to, did it hit 72? No, it was up to 71.80 on the high. So 71.80 was your high tick for silver. And man, that was really crazy. Gold, I think gold is around the highs actually. Well, yeah, I mean, it's a little bit off the highs. The high for gold was 45.30. We're now at 45.16. And so gold up, silver up, and they just keep printing 2, 3, 4% a day every single day. Is that indicative of a healthy economy? Like, is that indicative of, some things are looking good? I don't know. I'll let you decide whatever you think out there. But all right, so if we look at, and obviously volatility's got to be getting crushed here. You've got VIX futures down 4 cents, and then you've got spot volatility. Your VIX down 24 cents on the day, down to 13.80. Man, the Santa rally is here. The Santa rally is real, and it's happening right before our very eyes. And so the VIX down to under 14 now. Man, all is well in the world. Everybody is excited. So, all right, what I want to do today, though, speaking of being excited, man, I'm excited that you guys are here. Man, look at you guys. Sam L's in the house. Brian Dowdy's in the house. Man, Margin Walker in the house. Away from the numbers. Man, Harold Montero showed up. Man, look at this. Harold's in the house. Man, that's some crazy stuff. And he's there with the first comment like old times. Man, I appreciate you there, Harold. I'm going to get to as many of you guys a little bit earlier today in this kind of final show before the Christmas holiday. But I do want to talk about at least a couple of the positions, happening in the portfolio. I don't think we're going to do too much. There isn't too much that needs to be done right now, given what's happening across the board. And I certainly don't want to put on any new trades right now. I think this is going to be very much kind of a monitor, kind of a wait and see type of situation. But if you take a look at, would it be a true Christmas season if we didn't allow the P&L Open Bros to celebrate as well? Like, would this be a true holiday season if we didn't give the P&L Open Bros a little gift under the tree by our P&L Open here on the show? And so it had been looking pretty good there for a couple of minutes. Like, it was looking pretty green across the board there for maybe more than a couple of days. And so now things are all well and good, I should say. And everything is right in the world as the P&L Open is hemorrhaging cash. But again, remember, I joke about that because that's the way it's going to be when you're managing your winners, I should say, early and you're taking those guys out for modest profits. You're going to leave the trades on that aren't necessarily working. And so naturally, you're just going to have red P&L Opens. And that's just kind of, what you're signing up for when it comes to this. But anyway, I digress. If we look at, just a quick little scan, we've got an MCL strangle, 50.61. We sit tight, we do nothing. That's right around a scratch, no big deal. Costco, we're long a call spread, 880, 890. And, right now it's obviously not doing well. It's certainly seen better times. But for now, we've got 24 days to go. It's defined risk. There's no reason to do anything there in terms of going in and overriding the process too early. Like, I'd like to let this guy play out. Let's give it some time and see if it can't come back in the next 24 days. And again, remember, that's one of the benefits of defined risk. Like, if it doesn't come back, it's okay. Like if it doesn't come back, then it's okay. Like we have our risk essentially known at entry. The maximum loss point is not going to change as long as we don't go in and start fiddling with strikes and kind of janking around with the risk return relationship. But Nike, you've got Nike's unchanged on the day. We've got this short 62 put. I think this happened to us in Nike before, did it not? I'm gonna have to look at the tail of the tape here. And by the way, speaking of the tail of the tape, man, my boy Phillip Rivers. Man, he came to play last night. The problem was he was the only one on the Indianapolis Colts that came to play. Like he was one of the few that even showed up for the game. And so he was about to throw for 400 yards there in the first quarter, it looked like. But man, the Niners were just too strong. My Niners, I've been telling you guys about them for a long, long time now. And so it's not a big surprise to me. And it really shouldn't have been a surprise to you either if you've been watching the show for any length of time. So Nike at 57 and some change. We've got a 62 put. We're going to sit tight now because there's still a lot of time left, 59 days to go. This is one of the benefits of a short put. You can just put it in your back pocket if you need to. You can just inventory the shares if you need to. And, generally speaking, Nike, which I did scan the comments. Apparently this is in the Dow. The other day I was asking you guys, I think yesterday, I was asking you guys if Nike was in the Dow. And, James is trolling me about my Niners playing the Bears. Yeah, I'm not worried about that, James. I couldn't possibly be less worried about that because my Niners are an absolute juggernaut this year. And so, but we'll see what's what. But with Nike being in the Dow, this is a major market player. I feel okay about Nike in the longer term. I'm not overly concerned. So if we have to hold the shares for, a month or 2 months or 2.5 years, then that's the way that it needs to be. So if I go to Nike though, let me bring up my chains on Nike. Where are we at here? Did we not sell a put in Nike at some point? I thought we did. Maybe we didn't. Oh yeah, here we go. Wait. So we did this on 6/26. Hey, that's Autumn's birthday. How about that? Quick shout out to my wife, born on June 26th. How about that? We sold this guy for $1.95 and we bought it back for 8 cents. So that can't be it. It must be a different strategy. Let me see here. Yeah, maybe was it this one? No, this is the one we just did. Yeah, I don't know. I'm not going to spend too much more time on this because we are floundering here live on the network. Only on the Tasty Live network can you find this type of programming. But yeah, that was the trade that we just did a couple days ago. So all right, so Nike, I feel like we had a trade before, but maybe it actually worked out. Maybe I'm thinking of Chipotle, thinking about Best Buy, thinking about many of the others that did not necessarily work. But Nike, we sit tight, we do nothing. Starbucks, it's seen better times. Right. And again, I think people are they're kind of, they're wising up. They're wising up to the whole, operation over at Starbucks and saying, this is really not that good. Like the price is really, really high. Like the amenities are pretty solid, but the coffee itself, just not very good. And so maybe we should move on to some other things. Now, are we going to move on to a different position? No, we're going to stay right here and let this guy kind of, simmer on the back burner for, at least going into 2026. I think it's been good that we've had this trade on for so long, because this has been a year-long process now for Starbucks. And, it's been good because so many traders out there, so many investors out there, like you guys are familiar with, holding stock and just sitting on it. Like you're familiar with holding stock, inventorying the position, and then you just play the market higher, which is a great strategy, of course. Well, there's so many other things you can do in the derivative space from an actively managed standpoint, but you maybe don't want to jump right into all of that on day one. Like you might want to kind of, ease your way into it, like kind of dip your toe in the water, if you will. And so this is one way that you can do that, kind of taking the shares and then maybe selling some calls against the shares, like taking the shares and then maybe start building these covered calls from time to time, which is exactly what we've done, for Starbucks from the beginning. And I remember I said I should look at the basis of this, and I don't have it. Maybe we'll do that next week because it will be the end of the year. And so it might be a bit more appropriate for next week. But if I look at, if you look at Starbucks, I just want to show everybody, in case you're brand new to the show, welcome aboard. This could be your first time checking out this show. I'm very, very glad you're here. I'm very excited you're here. Let me filter for Starbucks. We go back to the beginning. This was the beginning of the trade right here, 1227. So almost a year ago, almost a full year ago, right? We bought our 100 shares, and then you can see we did a myriad of things along the way. Now, as I've said many times before on the show, but if you're brand new, you don't necessarily know this. I try to do all of my trading live on the show, especially any of the trades that I actually make, the opening trades. And so you won't usually, well, you'll never see me make an opening trade off air. 95 to 97% of the closing trades also happen on air. But when I have an expect to move butterfly or something on around a binary event or something, then obviously, I might be taking that guy off earlier in the day when I have an opportunity to take the guy off. But don't worry, we still talk about it for no less than 16 to 19 minutes. But if you look at all these trades that I did, you can see, you can even just look at the timestamp of the trade. Do they have the timestamps? Oh, they don't right here. They have the timestamp on some of them. Interesting. So like these guys, you can see it's all happening during the show. And back here, this was when my show was at 2:00. We made that change about midway or maybe in the fall of this year, with kind of the changes to the programming and the changes to the on-air talent and things like that. So, but we did this original trade back in December 27th. I've sold premium all along the way. If you're brand new and you want to kind of catch up on these things, then maybe screenshot this. Because you're kind of like, hey, I would really like to see kind of like some shares and a covered call like managed over time. Like not just like, wham, bam, thank you, ma'am. Like I want to see this thing over the course of months or maybe years. Well, this would be a really, really good, project for you to kind of, fire up, because that's exactly what I've been trying to do on this trade from the very beginning. So you can go back and watch all of these shows. Your boy needs that watch time too. So that would certainly help. But you've got all these trades all the way up to July 31st. And if I scroll up on the screen, you've even got, these guys right here. So these guys too are also going to be part of the whole package. Like everything here was kind of, playing off of or a complement to those original 100 shares. We did some earnings trades. We did a couple other things, but it was mostly all centered around the 100 share position, which again, if you're an investor and you're looking for ways to actively manage, that's what you yourself are going to be doing. And so there's Starbucks, SLV, can't stop, won't stop. SLV up another $2 today. I'm glad we rolled it yesterday. And so now we just sit tight and do nothing. I don't really want to roll this guy again. It's right there on the call strike. We'll give it a chance. Let's give it a chance to maybe, cool off. Of course, those are famous last words. Silver's on its way to 80, of course. And so that's SLV. And then SPY, this is our Iron Condor. That is, yeah, so we're at 24 days to go. This is interesting. We're at 24 days to go. And so 21 would be Friday, but we're going to be dark on the studio tomorrow, Thursday, and Friday. So 21 would be Friday. This is a $15 wide Iron Condor. So it is a defined risk strategy, but you're starting to tap into some of the undefined risk characteristics at that point. Like you're starting to tap into, kind of something that's going to feel a little bit more like a strangle. Now, with it being $15 wide, it's not going to feel like a full-fledged strangle. If you get 30, 50 points wide on an Iron Condor, then that's going to feel a lot like a strangle. It obviously depends on the stock price and things like that, but that's getting wide enough to where that's kind of a synthetic strangle at that point. $15 wide, I don't think we're quite there yet. I think we would need to be, a good bit wider before we would actually feel like a truly synthetic strangle. And so when I look at this situation, defined risk strategy, normally we're just sitting tight. Normally I'm not necessarily managing these guys too aggressively at 21 days to go, unless I have a situation where I have an economically significant profit on my hands. And I do have an economically significant profit on my hands. Now, this is our only green P&L open. Right, so we've already given the P&L Open Bros one gift. Do we need to give them a second gift by taking off the only green P&L Open that we have? The answer, of course, is yes, because this makes the point that I've been trying to make from the very, very beginning. When you have green trades on, they're economically significant, they hit your profit targets, what have you, you're taking those guys off. Like you're going to be taking those guys off. You're not going to be leaving those guys on. And so I'm looking at this, considering the fact that we're going to be dark the next few days. I'm like, yeah, man, let's just go ahead and close this guy down. Let's shut it down. We've got $1.26 in our pocket, and it ended up being a solid trade. And maybe we'll get back into some more, wider Iron Condors, $12 wide, $15 wide, maybe some $20 guys here in the near future. And yeah, so let's close this guy down. It looks like it's about 338 on the mid price. So let's go ahead and let's get this guy. Let's see here. Let's try 340. All right, so we got filled at 340. All right, there you go. So we're out of SPY, out of the Iron Condor, and man, that's it. The portfolio is looking a little paltry, but again, we're winding it down into the end of the year, not looking to take on a whole bunch of new trades and kind of keep a bunch of undefined risk on, especially going into, all the holidays and all the this, that, and the other thing. The only undefined, well, I have 2 undefined risk strategies on, I guess. Well, I have 3. I have Nike, we have the oil strangle, we have the silver strangle. The oil strangle is between the strikes. The silver strangle is obviously the one that is maybe the most, the most concerning. But when I look at this, I'm like, man, is SLV really going to be 66, 67, 68 in the next couple of weeks? Naturally it is, of course. That's the pathway that it's going down through the forest itself. But I'm like, I don't know, man. Let's just sit tight and let's just kind of, let's just let it work. And so, and again, that's, obviously one of the huge benefits of being small on order entry, because, even if it is, let's say it is 68, that's only a few $100s. And so that's very, very reasonable when it comes to, position sizing. Sorry. So let's see here. Where are we at? Where are we at? Man, I see you guys in the house. Let me go ahead and, let me see. Where are we at? Let me surprise and delay somebody in the middle. Where are we at? Where are we at? Here we go. Mikos, what's going on there, Mikos? This might be actually closer to the beginning. But Miko says, Dr. Jim, Merry Christmas to you and your family, to you too, my friend. So thank you so much, and Merry Christmas and Happy Holidays to you and yours. I'm finding it difficult to stick to tasty mechanics when IVs are so low, other than lighting stacks of cash ablaze. What strategy should I look at? Well, so this is what's difficult, right? When volatility is low, the benefits and the advantages of selling premium are just not as pronounced. They're just not as significant. And so what do? You basically have 3 options. Number 1, you do nothing. You do a lot of nothing on order entry. And so that means hey, maybe you're spending time with your spouse. Maybe you're spending time with your family. Maybe you're spending time, with your friends. Maybe you're doing other things that you like to do. And so that's always an option, of course. Number 2, you're doing more directional strategies like vertical spreads, maybe like diagonal spreads. You could even do calendar spreads, which are oftentimes more neutral strategies, not necessarily directional, but it's a lower volatility play. So you're using strategies that are going to be more suited for a lower volatility environment. And so, that is one way to handle, the VIX being at 13. It's like, hey, I'm going to lean on more, low volatility strategies, which is not as fun. Yeah, it can be kind of fun, especially if you get a couple directional moves right. It can be a lot of fun. But in terms of feeling good about selling high volatility and playing for the volatility mean reversion lower and volatility contraction, none of those things are going to be there. And so that would be the second option. And then the third option is you can still sell a little premium. If you want to still have some positive theta working for you, I actually did a segment. This was many years ago now. I did a segment called The Timeless Sale of Premium. And this was this was 2017 or 2018. The timeless sale of premium. And the basic idea was this. Selling premium, out of the money premium specifically, is so powerful because you have the high probabilities, you have the overstated volatility, even if it is at a low level. You just have, the stock has to beat you. You have so many things working for you that selling premium to some degree kind of always works. It kind of works in all environments. It's kind of, ubiquitous in that way from a standpoint of, I don't have to wait for high volatility to have some premium working for me. Now, do I want to have a lot of premium working for me? No. And this is where, Julia's book, Julian Anton's book, The Unlucky Investor's Guide to Options Trading, kind of talks about, I can't remember what the table showed, but it shows you when the VIX is X, you're only allocating Y percentage of your portfolio. So you may only want to have 10 or 15% of your portfolio allocated right now with the VIX so low. And so with that being the case, the number is not usually 0 because we all, the number of allocation that is, because we all have objectives and things we want to hit with, the different, the assets that we have working for us. And so we want to keep that train moving forward to some degree, but I think waiting for high volatility before you get towards the middle part or even the upper part, especially the upper part of your capital allocation range, I think that makes a lot of sense. And so that's how I would look at that there, Mikos. But I appreciate you, my friend. Thank you so much. So yes, Harold's in the house. To be told you're the Eminem of options trading is top tier compliments. Yes, thank you there, Harold. I appreciate you. Yeah, Tony and Nick told me that just yesterday morning, and that was I wasn't quite expecting that. I think they meant the Eminem candies. I don't think they meant Eminem the super successful rapper. I'm pretty sure they meant those little chocolate covered deals that we're all loading up on here for the holidays. But Ron Vashar in the house says, Merry Christmas, Mary Dr. Jameis. Oh, there you go. I like that. What are you doing with the SPY Iron Condo? Well, there you go, my friend. I took it off because it's economically significant, and I wanted to go ahead and book that guy and then just kind of move forward. And so it makes sense to me. We're getting close to 21 days to go. Honestly, if you wanted to keep that guy on because it's right between the strikes, it's looking pretty good. The theta is still pretty plump and juicy. I would not have a problem with that either. Maybe loop back around on like Monday or Tuesday of next week. And then, well, actually, Friday the market's open, I think, right? And so you could actually just do it on Friday. I mean, we're just going to be dark on Friday, and so I decided to do it today. But Emmett Morrison or Harold says, what's going on? How's trading? And have you given up in chess? I have not. I still play, and I lose a lot. I lose a whole lot. And are you and your wife in good terms despite her not watching Die Hard? So we finished Die Hard, and she was like, wow, that was really good. Like, I really enjoyed that. And I was like, yeah, of course you did, because it's Die Hard. And so that was really, really fun. And so we're probably going to have to do Die Hard 2, Die Hard 3. And so, because in my opinion, those are as good as the original. Like 2 and 3 are really, really good. Like 2, if I'm not mistaken, is the one where it's like Christmas season again, and it's where the guy hijacks the planes and like he changes like the landing mechanisms so they're crashing into the ground or whatever, and then Bruce Willis comes out and he's got like he's got the fire things to like land the planes or whatever. I'm pretty sure that's 2, and then 3 is with Samuel L. Jackson, I think, right? And so that's obviously iconic. That's classic. I would say, I mean, Die Hard 1 is amazing because it's 1. But it was actually one of those like series with the sequels and whatnot that didn't fall off, in my opinion. Now, when you start getting into like Live Free or Die Hard, it's like, okay, all right, we've gone a little bit too far. But when you start thinking about 1, 2, and 3, I think it's really, really solid. I mean, it's kind of like Rocky, honestly. I mean, Rocky 1, 2, 3, and 4 were all equally as good, in my opinion, with my personal favorite being Rocky 3. I know Rocky 4 is a fan favorite, and I'm not hating on Rocky 4 at all. But man, Rocky 3 with Mr. T, whew, that's a tough one to beat. Man, that is a tough one to beat. And so thank you there, Harold. I appreciate you. Emmett's in the house. Happy holidays, Dr. Jim. Hope Santa doesn't leave you a big bag of coal this year. Yeah, I hope not. But we'll have to wait and see. When you have small kids, it's like Christmas is not about you anymore. Like when you have small kids, I mean, it's all about them. And so we're very, very excited for the Christmas season. And my kids are beside themselves, obviously, because they're very clear of the concept and they're very much understanding that they're hours away at this point. And so that's obviously pretty fun. Samuel, last show of the year, Doc. Not quite. We're going to have shows next year, or next week, I should say, Monday and Tuesday. Let me think. Monday, Tuesday, and Wednesday. We've got Monday, Tuesday, and then Wednesday is New Year's Eve. So Monday, Tuesday, Wednesday, we'll have shows, and you're not going to want to miss those shows because we can recap how I did with my predictions this year, and then I will give you guys my predictions for next year. So that will give you fadeable fodder for the whole 12 months of 2026. So you're not going to want to miss that. Not going to want to miss it at all. And so time to close the positions, open calories, and manage the holiday dad bod like a pro. Yes, I'm going to try. I don't know if I'll do as good a job as Philip Rivers, but we're going to give it a shot. Mr. Pillows, Dr. Jim, at which all-time high would you stop being bullish? Oh, I'm not bullish. I mean, I'm just if you can't beat them, join them. Like again, this is all just Santa Claus rally stuff. This is basic stuff. I mean, I think the Santa rally, I mean, it comes true about 49% of the time. So I don't know how you couldn't possibly be bullish around the Santa Claus rally. And so, understanding that, it's like, okay, like, we're just gonna play that. But obviously I'm bearish for next year. Like, obviously for next year, it's going to be super bumpy and super rocky. And I would say, we're going to see some VIX back in the 30s, possibly even the 40s for some periods of time. And so, but we'll have to wait and see. And so let's see. Emmett Morrison says, whoa, that shirt is quite something. I appreciate you, my friend. This is one of my few button-down shirts that I will wear on the program from time to time. So thank you, my friend. Brian Dowdy, hello, Dr. J. I got $70K in cash that's just sitting in SGov. Any ideas on what I can do to utilize it better? It depends on what you're trying to accomplish, man. Like, if you just want risk-free, I mean, that's about the best you can get right now. Like, I think maybe you could find like a money market deal that might pay you a little bit more, especially if you start getting into like like municipal bonds and stuff like that, like you might be able to squeeze another percent off of that. But the nice thing is, I mean, if you're an SGov, now the capital is available to you, to do other things. Like now the capital is right there, at your disposal should opportunities arise and you want to take advantage of those, which doesn't mean you have to, but it's obviously logistically way harder if it's in the money market. You got to move it over. You got to this, that, and the other thing. And so it all depends on what you're trying to accomplish, right? Like if you want, some risk-free return on your excess capital, then that's going to be essentially the best way, SGov or BIL. If you want to step out and take a little bit of risk, that's a very different discussion. But given the fact that you said it's sitting in SGov, I mean, I'm assuming that, that's kind of what you want. You kind of want the risk-free nature of it. And so Rets Media, let's sell some 64 puts in SLV for Friday. Yeah, I'm not touching that. No way. But Rets Media, I got to give you some props, man, because I know that you've been calling for bullish silver for months now. Like it's been going up and you've been like, this thing is not over. Like I'm still bullish. I'm more bullish. Like you've been all in and you've been totally right on this guy. And so you're basically the opposite of iPod Touch. Like iPod Touch, who pops into the chat. He's probably watching right now. What's going on there, iPod Touch? iPod Touch likes to call for the event horizon, and then the NASDAQ will drop like 19 points, and then he obviously takes his victory laps. And I tease, of course, because iPod Touch, he actually did nail like a 400 or 500 point move. It was last week or the week before. And he came and he took his victory laps as he should. And so, but nice job out of you there, Rets Media. Very, very nice job. And so let's see. Samuel, thanks for surviving the markets, the algo, earnings season, and our comments. See you next year with the same entry, better exits. Maybe. I don't know about that. But again, yeah, we got next week. I'm not on vacation until January 1st. So it would be the week. It's going to be that first week of January, like January 4th through the 9th or whatever. That's when I'll be gone. But I'll be here next week. And so let's see, Mount Go Real, Merry Christmas. A friend of mine hosts a friend party this evening that he calls Xmas Eve Squared. I like that a lot. That's very, very good. And so let's see. Oh, Emma Morrison just says, just put it in my account. Yeah, that's pretty funny. Let's see. Brian Dowdy says he's going to do this. So there you go. You guys are making friends, man. This is some good stuff. Let's see. AI me biz says 30 on the day. Shanghai silver is trading at 75. Oh, 30 on the day. Are you saying you want to wager somebody 30? You trying to start up like a pool or something? Yeah, silver is it at 72 yet? 71.43. All right. So it's obviously, it's cooling off a little bit. It's down at least 9 or 10 cents since we looked at it last. I mean, yeah, it's crazy stuff. I mean, part of me feels like one of these days, obviously silver's just going to be down like, $4 or $5. But then it's like, well, that would just put us back to the start of yesterday. Like that wouldn't even do any damage. Like that wouldn't even like leave a mark. And so, man, this thing has just been absolutely bonkers crazy. And so, let's see. Where are we at? Mount Go Real, are there futures for coal? I actually don't know that. That would be a fun market to be in this time of year. Yeah, I agree. Away from the numbers. Dr. J, those silver bells are ring aiding ding. Yeah, that might be something. That could be a typo. It could also be something that I'm not picking up on. But yeah, silver is the talk of the town, man. It is 100% the talk of the town. Brian Dowdy, this low IVR is such a drag. I agree. And this is like, again, go back and look at your charts, man. Go back and look at 2017. Like it could be worse. It could be a lot worse. There is no question about that. And so, yeah. But let's see. Sam L says, who knew the real winners of 25 would be the Hunt Brothers and the Shifties? I didn't see that one in the options chain. Yeah, neither did I. I mean, again, silver's up like 150% this year. Gold is up like 70 or 80% this year, I think. And so, yeah, there's no question that the real winners have been the metals. And, man, it's been quite a story. Quite a story indeed. Brian Dowdy says, and touching metals is so risky to me. I don't know when that's going to collapse. I know that's exactly how I feel. I think that's how a lot of people feel, where it's like, man, like, I just feel like, I'm going to get long, obviously, and then boom, like that's obviously the trigger. That's the signal. We've all felt that way, of course. I mean, I felt that way many times myself. And so, yeah. Rats is still calling for the short 64 put in SLV. Hey, go for it, man. Like 100% go for it. Let's see. Oh, Young RC says, Merry Christmas, Dr. J. When will they announce tasty events for 2026? I don't know. I think we're meeting about it soon, though. And so just keep, be on the lookout. Like, I don't know. Like, I don't know, but I'm pretty sure that in the next couple of weeks we should be meeting about this. And so we should have more to say about this very, very soon, I would imagine. And so let's see. Trader Nate's in the house. Hey, Dr. Jim, what's going on there, Nate? Appreciate you, my friend. Rant says, Errol spooked me out of silver. Think I'm going to exit with a small win. Hey, I would absolutely do it. I mean, a lot of people are trying to exit with, pretty large losses, especially if you're trading from the short side. But then, of course, there have been some bulls that have been in this thing the whole way, which is pretty impressive, of course. Let's see. Oh, Steve Aguilera, the algo time. Ho, ho, ho. I appreciate you, my friend. Thank you so much. Samuel, the algo brought me here. I stayed for the B-minus humor, man. Thank you, my friend. Like, look at you. I appreciate you. You are part of the core position for sure. And so thank you, my friend. Dan Ducarn's in the house. What's going on there, Dan? Emmett Morrison. Let's see. Emmett Morrison. Tom usually paid for himself, I believe. Talking about, I think I missed that. Was there a message that I missed? That might be part of a previous thing. Yeah, Tom was good at paying for himself and paying for all of us. So I have to give Tom his props. I don't know what you're talking about there, Emmett, but Tom was pretty good at picking up the bill. He wasn't a very good trader, and he wasn't that great of a leader. But when it came to picking up the bill, man, he nailed it. He 100% nailed it. And so I appreciate that about him. But let's see. Rand says, would you exit a 31 DT 56 strike put in SLV if you were me? Oh, I would absolutely do that. Oh my gosh, you're short, obviously, right? I mean, I don't even know what you sold it for, but if it's a 56 strike put, like you're up a wazoo on that position. And so I would absolutely get out of that. Now, if you're long that put, that's a different story. But the way you phrased it, I'm assuming you mean a short put. And so, yeah, I would be done with that trade for sure. Let's see. Sergio, greetings, Dr. Jim. What time do we have to be at your house for the Xmas party? We're actually going to someone else's house tonight. So we're having it's a party tonight. And man, some of our friends, man, like, they've got a pretty nice house, and I think they're expecting like 80 people there. And so the way they did it, and all of us have a bunch of kids, and so it is going to be a total circus, just an absolute circus. And so they've got like this window of time from like 4 to 8 when we can just show up. And so I think we're going to be kind of on the earlier side to hopefully get the kids back and get in bed and do those kinds of things. But yeah, no, the Christmas party's not at our house. Like, I'm not cleaning up after all that mess. No way, my friend. And so let's see, where are we at though? Emmett Morrison, wonder if he and Scott will do something on Lost Dog. Yeah, check them out. I mean, they're out there. They're doing it. Like, they're putting it on YouTube. Like, go give them a look. And so, yeah. Let's see. Seeking Fate. Anybody use Festivus as an entry point? I don't know. I mean, all I think about with Festivus is, Festivus for the rest of us, which I think was, that was a Seinfeld episode, if I'm not mistaken. And so when I think of Festivus, that's what I think about. Brian Dowdy's in the house. Don't worry, Dr. J. The P&L closed bros. No, they're definitely the P&L open bros. But the P&L closed bros know what really went down and where the portfolio stands. Yeah, I appreciate you, my friend. So thank you. Thank you so much for all the support, Brian. And I appreciate you guys fighting back against the P&L open bros. I'm going to need you guys. I'm going to need you guys on a day like today because they've got a lot of ammunition. I mean, they're going to be doing screenshots. They're going to be doing screen recordings. They'll probably even offer up some deep fakes, although you don't even really have to deep fake that. Like, it's right there, in its authenticity. But yeah, I'm going to need you guys to back me up on this one. And so thank you guys very, very much. Rant says, I also sold the cash you could put in Nike. Yep, there you go, my friend. And so it looks like you and me are in it together, which is probably not good for you. Ron Vishar, what strategy would you use on a losing trade like Costco, Nike, or Starbucks if you are bullish long term? Never add to a losing trade is my rule that I never follow for the love of the alcohol. Oh, that's pretty funny. Okay, so a couple of thoughts. So number one, so Costco is just a long call spread, right? So I'm going to leave that one. I'll leave that one out for the purposes of your question because Nike and Starbucks are actually bullish positions that, are or could be a longer term focus. And so Starbucks is a longer term focus. And so what I've been doing with this position is when the stock has been strong and the stock has been rallying, that's when I've been selling calls. When the stock has been weak and the stock has been down like it is right now, down to 83, that's when I just sit tight. Like, that's when I do nothing because I'm like, hey, this is exactly where I would be if I just held the stock. Now, I might add, kind of like we added this long-term, 55 call, this kind of leap option as a way to kind of synthetically dollar cost average our way into this position. And, just to push back a little bit, I mean, personally, I really don't like the whole only losers by losers and averaging down or whatever. Like, I really don't like that whole philosophy. I think there's a ton of opportunity by improving your basis and doing things like that and thinking about your position size and adding tranches and things like that. But especially if you are long-term bullish, like if you're long-term bullish on a position, man, I think you're kind of doing yourself a disservice if the stock does go down and you don't use that as an opportunity to at least consider adding shares, to at least consider adding to that position. And so, I mean, those are my thoughts when it comes to this. So for Starbucks, I'm going to sit tight when it's down. And then if it rallies back up, that's the time to sell calls, in my opinion. Kind of taking advantage of the natural ebb and flow, of the marketplace. Nike, at 57, we have a 62.5 put. We're pretty bullish right now. You can see we're long about 80 delta on the position. Obviously, the maximum would be 100. And so for right now, I think just doing nothing, just sitting tight and doing nothing is the move. Like, I think that we sit tight, we do nothing. If it comes back and the option expires out of the money or gets to an out of the money point to where we can manage it early, then that's what we'll do. If we have to take the shares, then we take the shares. And then what do? We kind of do a similar type of deal with what we did with, or are doing with Starbucks, where it's a longer term focus. You inventory the shares, you're selling calls, you possibly wheeling the strategy, whatever. Now, is that guaranteed to work? Of course not. Because you guys saw what happened in Chipotle. You guys saw even what happened with like Best Buy. It's like, I mean, these things are not going to work all the time. But if you have a longer term focus that's bullish, that does line up with the positive drift in the marketplace. So, it's just something to consider. I mean, that's how I'm looking at this. And so hopefully that helps you at least a little bit there, Ron. Let's see. Oh, Rand says he looked angry. Old Man Rivers. Yeah, I mean, I would be too. I mean, he came to play, man. But that defense, man, they couldn't stop. I mean, they couldn't stop his high school team. Like, if his high school guys were out there, they would have shredded that defense up 100%. And so I think the announcers, though, they made a mistake last night. I think the announcers said that they were eliminated from the playoffs. I don't think that's true, if I'm not mistaken. Now, I think they need a Hail Mary. Like, I think they need a lot of things to bounce in their favor. They would obviously have to beat Jacksonville and beat Houston, which is no small feat. But I just hope that Old Man Rivers plays at least a couple more games, at least one more game, because it's been super fun to watch him play. And I mean, last night he played really, really, really well. Obviously, he had the pick six at the end, but he's Old Man Rivers. I mean, he's like 75 years old. So, I mean, one pick six a game is really not that bad. And so let's see. Dan Ducarn says New England Patriots, baby. Yep, that's right. The Pats are looking good. Kind of back to the Brady days, man. Like, that's crazy stuff. Mr. Pillow says, is today Festivus? Yeah, I wonder, is today Festivus? Somebody let me know. And let the algorithm know, because they would love to know if today is Festivus. Let's see. Drake May. That's right. Been telling you all about Drake May from the beginning. WX Devil says, how many teams are you a fan of? I'm a fan of one team. Like, you just got to follow. You just got to look back and check the tapes. Just follow my voice. It's 49ers all the way. It's 49ers all the way, and I'm all in on the Patriots. Like, that's my squad. Been talking about this from the very, very beginning, and, it's just Seahawks till I die. Just ride or die Seahawks all the way to the end. Let's see. Seeking Theta. Emma Morrison says, Drake who? Yeah, there you go. Be careful, man. That's his boy. Be careful. Ranch says, do you think silver will sustain its upward momentum over the holidays? I mean, I think it's due for a cooling off period, definitely. But to be fair, I thought that at 60. Like, I definitely thought that at 60, 63. I was like, this is pretty crazy, pretty wild stuff. I mean, that was like a week and a half ago. And so this type of move oftentimes is met with a pretty vicious reversal. Which is not to say it's going back to 30. I'm not saying that at all. But could it viciously go back to 56, 57, 58? I think so. That would not surprise me at all. And so, but also, I mean, market's fairly quiet, over the holidays, not as much activity or liquidity or whatever. Like, it wouldn't surprise me at all either to kind of see it just kind of maybe slowly drift higher. I mean, another thing too about the holidays, actually, you have less volatility, or not less volatility per se, but less liquidity, less trading. So that can actually make for more explosive moves because you have a thinner market. There's less liquidity that's there to absorb, whatever orders might come in. So we could actually see continued momentum to the upside, or even potentially a big sell-off that isn't necessarily indicative of what, quote unquote, like every trader thinks, or what the conglomeration of the average trader feels. But because of the holiday season being thinner markets, you can actually get some pretty explosive moves. And so, but man, I'm like just about out of time. Man, look at this. Man, I appreciate you guys so much. Man, look at Catterday Night. Stephen Bivens here. Man, look at you guys. I appreciate you guys so very much. Strategic Resistance is in the house. Man, I appreciate you guys, but I got to go. I got to get you guys over to Tim. I appreciate you guys. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and Merry Christmas. We'll see you guys on Monday.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Estos son los ratos buenos. Ave María Morena. Morena, pero mira morena. Ave María Morena. Oye, que bien ya suena. Ave María Morena. Oye, digo que morena. Morena, morena. Ven morena, Oye, morena, mira que bien, estas son las rumbas, enrúmbala, estas son los buenos, estas son las rumbas buenas, estos son los ratos buenos. Oye, mamá, cántalo hasta mañana. Oye, pero ve morena. Oye, morena buena.
Hey everybody, Merry Christmas Eve. Tim Knight here. We're going to look at some charts together. It's a good day. I am entirely short, and that may seem odd because everything's green now. ES is green, YM is green, NQ is green. But almost all my shorts are down, which is pretty cool. And my mantra this year, for those of you who read Slope, that is slopeofhope.com, which is my own website, my mantra has been bullish precious, bearish equities. Bearish equities barely working out. I mean, I celebrate days like today when my shorts go down, even though the market's up. So that's nice, but we ain't seen a bear market since 2008. The bullish precious has worked out great. I went bullish on silver in 2024, went bullish on platinum in early 2025, and those have both been sensational. I've kind of ignored platinum, but platinum has become incredible lately. And I think 2026, I'm going to stick to the same mantra. I think precious has great days ahead, and I think equities are insanely overvalued. I think people have recognized that overvaluation for so long, and they just keep going up, that they're like, forget it. They just threw their hands up and figured that, well, it's different this time. We'll see. But it is heartening to see that classic technical analysis, which is what I do, can defy a market that's lurching to lifetime highs like this. So keep on keeping on. I've got my charts loaded, so let's thumb through them. Here's the spider. We could be at lifetime highs tomorrow. The Santa Claus rally could really kick in. We are very close to lifetime highs right now in the spider. There is the peak that was set back on October 29, and one more day like today would do the deed. We'll see. I am not short any ETFs right now except for XLP, the consumer staples, and TLT bonds. Staying away from all the other stuff. The cubes are up, not quite 0.5%. We've got a bullish engulfing pattern today. They need to, for the bull's sake, cut through this gap and then afterward cut above this lifetime high. This is a very positive time of year for stocks. It's not too surprising. Things are strong now, and it's very quiet. I mean, until, what is it, Monday, January 5, things kind of normalize again. Then we'll have another holiday a couple of weeks after that. But anyway, yeah, it's just kind of like Dullsville. As I said, I am short XLP, which is the consumer staples, and this is down, which is nice. It's down as much as the cubes are up, which is pretty cool. And like I said yesterday, it's not exactly a very clean chart at all, but it's going the right direction. So I'm just across the board, I'm just kind of tidying up positions, growing some, shrinking others, tightening stops, keeping those fresh, just kind of tending to the garden and the weeds. Let's just jump right into precious metals because that continues to be hot stuff. Gold up over $50 in the futures, over $4,500 an ounce. 5,000 an ounce would have seemed just ridiculous a year ago, and now it's almost a foregone conclusion. Another 10% and we'll be there. And so it's, last week when it was just below this line, I was pointing out how much gold wanted to get above it, and once it could do so, would let loose some of those animal spirits. It seems to be happening right now. And silver is just a phenomenon. It's up 3.37%. The futures have just been, except for this brief intermission, have just had an amazing 2025. Back around Liberation Day, this was down in the 20s, and now we're in the mid 60s. So just a tremendous rise. As I said, what I consider kind of my trade idea of the year was palladium. I published it on January 24th, I think. And it took a while to kind of get going. You can see here, I became infatuated with it right around here, thereabouts. It's not a straight line up. If you had bought here and held on for months, by the time June rolled around, you would have no profit. Wow, Tim, that's a great idea. Well, like I said, it took some time. And it was very frustrating, just kind of banging around, not really kind of getting itself situated. But after 5 months of messing around, it finally got its Nikes on, and so it pushed higher, consolidated, pushed higher, consolidated, and pushed higher again. So it's been a really great run, and really it was really just the past 6 months that this run has taken place. As I said, I don't beat myself up too much about platinum because they're so similar, but platinum has become just the superstar here. Up today, 8.7% just for today. And the metal has doubled, I think, this year. It's just been a sensation. And so the past 8 days or so, I think it's just been just one up day after another. And someone's going to get caught holding the bag. It's going to top out at some point, for the medium term at least, but it hasn't happened yet. Interestingly, miners today are pretty flat with all this region around them. GDX is up 0.14%. It was actually red for most of the day. So they're looking kind of tired. Maybe metals are getting kind of away. Maybe kind of getting in front of their skis, I think the expression is. But if you dare, of course, dust is out there. This is the leveraged bearish instrument on gold miners. It is at a lifetime low for obvious reasons. But that's one way to play it. Although most people kind of prefer to make that an intraday trade as opposed to an overnight trade. Now, in sharp contrast to this, fantastic year for gold and platinum and palladium and silver and miners, there's crypto. And so here's Bitcoin. I saw, I guess based upon my search history and my activity on x.com, it shows me a lot of Bitcoin stuff, even though I don't trade it. And they're getting frustrated, the crypto crowd. They're getting really tired of all the precious metals people high-fiving while Bitcoin just grinds away lower. It wasn't that long ago that Bitcoin was setting the world on fire. October 6th, it was just over 2 months ago. Lifetime high, $800,000. Since then, it has lost much of its, not most, but a lot of its value, about a third or so. And it, to my eyes, looks very vulnerable to lower prices. I think that the low 70s it would be a good place for support before it could kind of shake its blues off and rally again. So that's my hunch as far as how low Bitcoin will go in the medium term. With this going on, of course, Strategy Inc. continues to sink, down over 4% today, I think. And Michael Saylor, the prognostications and the declarations from the crypto crowd are getting kind of loony. Because I used to kind of roll my eyes about, $250,000, Tom Lee, $250,000 by the end of this year. And now he's like desperately just trying to make up new stuff. So now he's saying 100,000 by the end of the year and maybe even new highs. Okay, Tom. But like, $250,000, $500,000, 1 million, people love big round numbers. I read just a couple of days ago, I think it was Saylor himself said, it may have been, I don't remember, $1 billion a coin. So get them while they're cheap. Like, what? And it's none of it is based in logic. There's sort of three defenses I've seen through. One defense is they'll throw jargon at you like the halving, and another one, which is just bizarre, is they'll take like all the value of the M2 money supply, like all the cash out there, and divide it by 21 million Bitcoins equals X, and that X is the target. It's like, what? The supposition is that Bitcoin in and of itself is worth all the money in the United States. Why? And of course, this tried and true one, which I see whenever I see something non-bullish about Bitcoin, is, well, look how it's done since 2009. It's like, that's true. Did you buy it in 2009? I don't think so. I think kind of no one really even could for the first couple or 3 years, unless you were really deep into that community and knew what you were doing. But it's just look, I live in Palo Alto. Homes in Palo Alto cost $7, $8, $10 million. And I wouldn't suggest you buy at those prices. One could say that, in 1940, homes were $3,000 here. Look what a great investment. Great. Do you have a time machine? It's not 1940 anymore. It's not 2011 anymore either. So these kind of long-term, see what has happened, see all the money that's been made, that doesn't mean anything. What's the old saw about past performance is no guarantee of future results, or not indicative of future results? That's very true. So the fact that Bitcoin went from a penny in 2009 to $800,000 a couple months ago, that's really amazing. And I think it's more indicative of human nature than it is about asset quality. But it's like, cool, that's interesting. But it doesn't mean that it's going to somehow follow that path in the future. So rant over. Also, I got an early start today, so I had extra time to gripe. As far as the Ethereum goes, which is the aforementioned Mr. Lee's favorite, it's also down. And it's sunk from almost 5,000 to about 40% less than that in the past couple of months. As I said, I've got a lot of, it sounds odd because all my shorts are dropping. It sounds like, really disappointing movie, but I've got 30 different positions, and just at this very moment, of those 30, 5 of them are showing a gain, which is bad. but the gains are like 0.17%, 0.37%. They're very small. The other 25 are all down, which is great. And I'd like to think they're well chosen. And I wanted to share a few of them right now. And they're all, for newer viewers, I tell you that almost everybody watching me is a more sophisticated trader than I am. I am a simple soul. I'm just a dumb old bear. I just sell things short. On rare occasions, buy puts on them. End of story. That's it. So these are just simple short sales that I'm in. CMG, Chipotle. This is one. It's already lost the vast majority of its value, but I really like just the long-term movement here. And I'm not short Cracker Barrel, but I wish I was. But Cracker Barrel's undergoing the same thing, which is just this like multi-year demolition of its market cap. CrowdStrike, CRWD, just got back into this one today. It is forming, present tense, what might be a nice distribution top. On semiconductor, even with semi so strong right now, it's showing a little bit of red. And this is, I've only got a couple of semiconductor shorts. On is one and Intel is another. This old favorite here, Oscar OSCR, is down again today, 1.5%. Is my best percentage winner. And I haven't bothered to mark this up with the various illustrations here, but most of my charts is really, really obvious, like why I'm short something. This one's a little more strange because it essentially failed what should have been a bullish pattern. But that has been my best percentage gainer. Owl, Blue Owl Capital, OWL, big into the hyperscaling, big into the whole AI scene. This is down about 0.85% and under that pretty sloppy top right there. RCL, an old favorite, Royal Caribbean. I got into this again today. It's had a big lift lately, but my assumption is that this topping pattern here will hold. I've set the stop just above today's high. What else? There's another semi I'm short. ARM. This one's down over 1% today. It's got its own cute little top there. It's not been around very long. Intel's been around for decades. ARM's only been around for a couple of 3 years. But it tends to have these top and drop phenomena right now. And with tech so strong now, the fact it's down is pretty impressive. This is the one I've almost apologized for on a daily basis, but it's doing great. Brandywine, BDN. And I apologize for it just because, it's nice to short stuff which is like $500 a share. It's a little odd to short things at $3 a share, but it's the chart that it's all about. And this pattern right here is what motivated me to get short this. And it's been pretty consistent. And so we zoom in here and you can see on the whole, ever since I got into it somewhere around here, it has pretty much either dropped or flatlined. And lately, it's been moving down nicely. And I think it's got plenty of downside potential. It could be a penny stock by sometime next year. Bloom Energy, BE. Nice little top on this one. Had some annoying strength yesterday, but it's down today, but more than 1%. And one last one on this. I always want to say Donkey Kong, but it's not. It's DraftKings DKNG, down about 1.6%. And it's underneath this resistance line, like so. Bonds, which I'm also short, they are up a little bit today, 0.15%. I can deal with that. I would appreciate it if they didn't go above this gap. That'd make things a little easier. But the nice thing is that my home builders idea, XHB, continues to do nicely on the short side, down 0.53%. Very consistent performer here too. It's like the 9th red day in a row. But just to put a bow on it and end things up, I'll just say again, silver, hats off. It's doing amazing. And I did a post today where, and I don't feel firmly about this at all. But in terms of maximum upside, I'm thinking maybe 160 an ounce by some point on this. If it apes the kind of behavior it did back in 1979, where we had a similar base and breakout. So 160, that's the upper limit, I would say. All right, that's it. See you on Christmas Eve. And right, am I right? I think I'm right. So I'll see you tomorrow, and then we'll be done for the week. Bye-bye.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
You gotta level up, just look at me. You gotta level up, but it kinda like it way.
tanta paciencia. Contigo quiero.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, Jenny. We are back, and this is Last Call, our last show this week. We are off for 3 days, so public service announcement. My name is Liz Deerking. That's Jenny Andrews, and what's going on the rest of the week, Jenny?
Rest of the week. Tomorrow's Christmas Eve. We do have morning programming. It's a half day in the market. So the boys will be on in the morning. They'll have a great show until 10. And then
No shows tomorrow.
No shows tomorrow? I thought they were on in the morning.
I'm almost positive, right? No shows tomorrow, Paul?
Correct. No shows.
Yes, no shows tomorrow. No shows. I'm still living in the olden days.
There's no live programming. I think they're gonna try to play the best of the best or some VODs. So
okay.
Tasty, tune in and you can see it.
All right. I'm so used to days where they have like a half day market, a half day programming. But you know what? There's a new sheriff in town, and everyone is off for the Christmas Eve.
You get off. Yes, this is canceled this year. Okay, but I know you were watching Tim Knight. We love Tim Knight. Right before this, I regret to inform you what Frank Walsh said. He put it in the research thing that in the beginning, he said it at 2:30. I'll post that in the chat. Tim Knight said that silver could get over 160.
Oh, I heard him say that. I was listening to him. I heard him say that. He's bullish on metals, bearish on crypto. I wrote down a handful of things that he has an opinion on if we want to take a look at them today. And we love Tim Knight. We love him.
Oh,
right?
I love him.
And you know what else he said, which makes me think maybe he was listening to our show earlier. He said past performance does not
indicative of future results.
Yes.
All right, let's hop into the platform because this is a trading show. You wouldn't know it by us two fools. We are red and green because it is Christmas. But the spoos have not really been moving. We're up 31. We've been up 31 since we left the trading floor.
Now let's talk about this. Earlier, we were looking at the SPX calendar, and we put it on this morning at 8:30. Spoos were only up 10. Now we're up 31. That calendar is only a $150 loss. So, it's not terrible, right? Not terrible.
Yeah, I mean, mine is different than yours. I had the 85. I know you had the 90, and I $4. So it's $145 loss.
Right. So it's not horrible. So I don't know. In this low vol environment where maybe your iron condors can't be too wide, it's not. And I don't know how it's going to fare. I asked Jacob to do a study on it. That'll be coming in the coming weeks. So I'm curious to get the results.
I don't know if you saw the results. He is not doing that study.
Oh, he's not?
No.
Wait, did he send an updated? He's doing two. He's going to do two studies for us.
Well, he said he can't do the 0 day 1 day.
Oh, because of the way the software is?
Yes. So that's I just don't want people to get really excited about it because the 0 day 1 day is still, the software's a little bit tricky with it.
And I've tried to run my own back tests. And again, I can do the 1 day, 2 day. I can't do the 0 day 1 day on the back test. So we need something. We need a program that can test the 0 day 1 day because I'd like to test that calendar.
Mm-hmm.
With more than just me putting it on every day for 2 years and let you know the results.
Jenny, we'd like to say thank you for your service.
I'll check back in a couple of years, let you know how it went.
Yes. So he is, that's going to be a little bit trickier. That might be down the pipeline. We will get that software up and running and fixed, but the transition.
All right.
I just double checked in the chat to make sure.
Okay.
Yeah. So that is pretty interesting, but.
Since we're on the topic of SPX, why don't you go to the 0 day and look at what we saw in Kai's study today, talking about selling at is 245. We're 241 right now. Talked about selling the iron condor at 245. Now we haven't moved. Spoos have been up 30 for as long as I've been watching them since I logged in after we got off the train. If we don't move, you can make $150 on this trade. Sometimes I will do this trade. Oftentimes, it moves into one side or another, and it's a small win or a small loss.
This is a pretty interesting.
Yeah.
We have the upside one, so this is this one. I'm just gonna kind of roll in here.
Yeah, zoom in. Well, we take off our other position because it's showing that 30-cent debit probably.
Oh, it probably is.
Like if you go to analysis and you take off our Feb position.
It's still the same. It's just over here.
And yeah, so you've got that very narrow window, but I guess the point is if we're in a very narrow range where we're not moving,
I can make the window look bigger.
Yeah. So if I zoom in a little bit. So the crazy thing is it's 2:42. You've got 18 minutes and it's kind of nuts. Like you can go down, like Liz, if you go to the trade page and take a look at some of those options, you can go look at even the 68.90 nickel at a dime.
No, they have to have some type of value. There's no real value there.
Well, I was trying to buy back my 68.90 puts and I couldn't buy them back. Put in a nickel bid, couldn't get filled on buying those back.
So you couldn't buy them back, which means you can't sell it either.
Well, I mean, no one was hitting my nickel bid. That's what I'm like. No one was hitting I'll see if we'll do a test right now. I'll see if someone hits it because I have short puts in there and I'm going to do a little test right here and see if I put in. Oh no, mine are lower now. I can buy them for a nickel now. Now there's a nickel offer.
Yeah, there you go.
You know what's weird? What I will say, looking at your screen, those are all grayed out. Mine are red.
Really?
Yeah.
So they kind of stop in my mind. They kind of stop trading when they're all grayed out. Do you know what I mean?
Yeah. But mine are still red, even down to the 68.75.
Really?
Uh-huh.
You're pretty active in those?
I don't know what setting I have on. So
yeah, they're grayed out from there. But that was the point of the Kai study right here. And you can watch this decay as we're sitting here because all of this. So say we stay right here. All of this 110 will come out and all of this 75 cents will come out because theta has to come out at the end. So if you change this to theta, take a look at that. It's going to lose 80 cents in the next minute. And this is going to lose 112 because it's taking the mid-market of what it exactly is. If we stay right here, that's got to come out of it.
If we stay right here. But sometimes we'll see a kind of a move at the end of the day. 15 minutes to me, like we've got 16 minutes until the bell. To me, 16 minutes is too long to have this trade on.
Oh, I think 16 minutes is an eternity.
Yeah.
It's so funny because I think our show goes by fast. But whenever they're like, oh, it's 2 minutes to intro, I was like, that's an eternity.
I know. Our hour goes by fast. But like to me, if I put this trade on, this would be the longest 16 minutes of my life.
You're right.
Well, if you didn't buy anything, if you just had this naked strangle on.
Yeah, because you're staring at it. Okay, Now let's do some things. Let's springboard off some things that Tim Knight did. Now, today was not a surprise. You've got all the metals are still up. CL is up. Everything's making all-time new highs. And if we stay up here, I think this is going to be an all-time new high again. Let me take a look. If it holds it up here. No, I guess it was over here.
No,
it was high. It was something was going to hit an all-time high if we stayed up there.
Because go back to that, like you can see a higher.
I know.
Yeah, we were 30 cents away from 690. We're not near. We didn't.
Oh,
we didn't get there.
Okay, well then it's not going to hold all-time highs. We need to get back up to here. But so the market's been pretty complacent, I would say. And what do you usually think about Christmas week? Because I don't think Christmas week, I think Thanksgiving week to me, when there's the half days, you can get some movement. Christmas, I don't remember anything ever really being crazy around Christmas. After Christmas or before Christmas, but not the week of Christmas.
Not like the week of Christmas. But we can't, again, past performance is not indicative of future results. Like just because we don't remember a busy Christmas doesn't mean it couldn't happen. But I really don't remember a busy Christmas. It's slow. I think it's slow. I don't know that look at the volume. What's the SPY volume? 49
million.
It feels slow though. It feels slow.
I wish Frank would come in and tell us if it's calls over puts and what number.
Do you want to look at, so I wrote down some of the products Tim was talking about, Tim Knight, and he was looking at CMG, CrowdStrike, Royal Caribbean, ON,
Okay, let's see.
I don't know if you're interested in any of those.
So ON is just, it's not on.
No, it's not on.
I would like to see, I'm interested in all of them. Let's go quick.
Okay, let's go to CrowdStrike. CrowdStrike.
He was bearish, right?
I'm gonna give. You can guess on all of them. He's the same.
He's bearish, except for metals bullish. Correct?
Yeah, correct. Okay, so here's crowd. Bearish. -1 rank. So a bearish trade with a -1 rank to me would either be a diagonal or a calendar.
So diagonal, this is going to be very expensive.
Oh, geez, this is going to be expensive. Or a downside crab.
It's a $400 product.
Yeah, we got to move on. We're going to go to CMG. CMG is another bearish pattern that he saw.
All right, this is a $37 stock. This is a number I can sink my teeth into. I'm going to go bearish pattern. Ooh, look at this, Jeannie. It could be a earnings setup bearish.
Or this could be a
I'm going to make sure I'm getting something.
This is a cheap zebra, or like you said, bearish diagonal. The diagonal's cheap, but you're only $1.50 wide.
You're $1.50 wide. So I'm going to give the pros and cons of this. You're $1.50 wide, but you're $1.50 wide because your long is going through earnings. If I delete this leg, and we don't have time to screw around like this, I forget that we're in last call. If I delete this leg and go into there, then you're $1 wide and you're only paying 64 cents for it. No. Okay. If he's bearish CMG, we've got an 11 rank.
Just price out a put zebra for me. Price out a 24-day put zebra.
Sell 150 delta, buy two.
No. Oh, yeah. Buy 270 deltas.
Buy 270 deltas. $3. Not bad.
Not bad at all for a put zebra.
Sold to the lady in red.
I am. We're buying one put zebra in Chipotle Mexican Grill for $3.
Yep. Build. So we got a bearish trade in Chipotle.
All right, I'm going to push that out.
I did want to look at RCL because I'm getting on one. Ooh, their dividend is on December 26th. It's down $7. This is insane. That's a big move up for there. I mean, but after a long, I don't like it at these levels. I don't even like it at its recent lows of 240. This stock should be right here. An $80 stock. And it wasn't too long ago.
And he's bearish. So I don't know if you want to put in a bearish trade.
Sure. So if we're going to be bearish in Royal Caribbean, let me see about a diagonal here. So I'm going to go
293, 6 rank.
I'm going to go.
Or you could just keep it. Yeah. Okay. Yeah. Let's look at the diagonal.
No, I don't like it. It's too expensive.
It's expensive. I know it's a 6 rank. Do you want to look at an earnings setup calendar?
Sure. To the downside?
Yeah, like 280 or something, where we're $12 down. We're not too far down. 280.
Not bad. It's $4.
So if someone wants a bearish position in Royal Caribbean, it's tough. I know there's sometimes when you nothing looks great, a call spread's better than.
I agree. I would rather have that room, kind of like what we did in silver today.
Yeah,
that room to be wrong.
Yeah, let's do that. 24-day, 305, 310. This is going to be, this is the first time Liz is going on a Royal Caribbean in a long time without the genie. They're going to report that to the news, and the stock is going to plummet.
You're right. It's exactly what's going to happen. I'm even pennying it down. So we're bearish. Yeah. We're with you, Tim Knight.
We're with you, Tim. We're selling the call spread in Royal Caribbean. I want a little down move. I'm still holding my calendar. Gonna get out.
We have not moved. We've not moved at all.
I know. We've moved from up 28 to up 31. It's like up 28 to up 31.
Since we've been on the show?
Yeah.
Every time I glance at it, we're up 31.
I saw up 28 once. I don't know. Since I've been sitting here, I saw up 28 once.
Okay, so hold on. We are getting some breaking news from Frank. He said, check the open interest on the silver SI Jan 8085 call vertical. The open interest over 7,000. I've never, ever seen that much open interest in any silver option.
Whoa, Jan.
So we're in Jan, the 8085. I'm going to go open interest. Then I'm going to go volume.
All right, we gotta go way.
Oh, yeah, there you go.
Yeah. 80-85 call spread. I don't know. And again, were they buying or selling it? What is it?
This is big. We sold a call spread today that was 25.
Sell it though, just to give us a
It doesn't matter. I was just pricing it out.
Yeah.
You can go
max,
either way.
What is it? 4,000?
Yeah.
Max profit 4,000, max loss 20,000.
Yeah. Yeah.
Betting that silver's not gonna be over 80 in 35 days. 28. There's who's up 28.
Or it's Tim Knight who's saying it's going to be over 85.
No, I want to say, didn't he say 100? And he said like 100 and something, 130, something like that.
He said 7,000 open interest. He's never, ever seen open interest in any silver. Yeah, that's what I'm saying. Like if he thinks it's going to be 130 at some point, then you're definitely buying this because 85 is definitely less than 130.
But that's just in 35 days.
Yeah.
Right, I think I got to get out of my SPX calendar. I can't wait anymore. It's only $100. It's only $100 loss. I paid $480. It's trading $380.
Yeah, they're not bad. I mean, they're not bad, but you do have to close them. And you can leave them if they're out of the money. So I'll go to SPX so we can talk about what she's doing. If you go to SPX, you can leave your put calendar because I know you did that. You did a 0 day put calendar and a 0 day call calendar. You can leave your puts because they're all out of the money. So I'm going to assume you just have the put. You're going to have the 1 day put through, right? Or did you close the whole thing?
No, my put calendar I just left.
The put calendar you left. So if you have there's still $3 in risk in your put calendar. You're the 90s, 270 in risk in your put calendar.
I know my put calendar was the 75.
Okay.
My put calendar was only like $3 and change. It was the 75.
Okay.
So.
But if you do have the one that's in the money, which Jenny has and I had, I closed mine before the show because I was running this. You should close these because there is a chance of losing more depending on what happens.
Come on, I'm not getting filled on this. $360. So I took $120 loss on the call calendar.
So I'm going to take a look at gold and copper because I think copper futures are. What is copper futures? HG.
And you mentioned this before, Liz, and earlier it wasn't showing me this, but when I just closed that trade, a calendar that I paid $4 for, $4.84, that would have $4.80 in risk, when I closed it, it gave me back almost $2,000. So it was starting to hold up as we get very close to the end of the day. It was starting to hold up a lot more buying power.
It does, right? It does because it doesn't know what you're going to do with it.
Well, I think because it was like $2,000 in the money, probably.
Yeah.
Yeah. $20 in the money.
Yeah, and it doesn't know what you're going to do with that. Okay, so I just want to see, this is copper futures. They hitting, I know they were hitting highs, and then I know gold, GC was up again. I want to see where it's ending. Still all-time highs. Maybe that's what they were talking about. 45.20 on gold, and let's look at our little SI.
So we sold a call spread today. What's that looking like?
It's not looking good. Wait, where is it? Oh, it's up top, right? SI. We're down $80 on it.
Okay.
Because we were only up like, I don't know, whatever, when we did it today. And now we're up to, 61.
Yeah, right. It's up almost 4.5%.
Yeah.
That won't stop. Today was my day. You said it. You can't call the top. That's why I've got room to be wrong. And if I lose on this, it's defined risk, $800. I put this same trade into my account.
Well, like I said, when you're selling call spreads to this point, there's so much premium. Look at this. Oh, and Jenny, when we were doing this, silver had an 88 rank. Now it's got a rank. The higher it goes, the higher the rank. So the rank is kind of going against us as well. But this to me isn't like when I'm long gold and I'm long silver, I'm just long it. I'm not selling puts because this has reverse skew. So I'm just long it. This is you're using premium. And we did have an iron condor and we closed our call spread and our put spread on the S&P.
Right. So like we could have, if this turns into a loss, the iron condor, that call spread on the iron condor would have been a loss. We took one off and left the other.
Yeah.
Look at
this open interest. So look at the volume is what's traded today. The open interest is what the open interest is, right? So that was traded. There's only a little bit that was traded today. Look at all this. Like you can go all the way up to the 100, 105.
Well, how much do you get for 35 days? What do you get for selling that 100, 105?
For selling the 100, 105?
Yeah. What do you get?
A lot.
$470, 24,000 in risk.
Yeah, but that's what I'm saying. That's a lot.
Is it 24,000 in risk? Yeah, 24,000.
Yeah, and there's a comma, so I'm assuming.
Yeah.
That's never a good sign, Jenny.
Jeez.
Because these guys are big guys. Let's see what our little natural gas is doing because we've got a couple minutes left.
Right, we're almost at the end.
And I do want to show, we didn't get to this earlier today, and I wanted to get to Frank Walsh's little baby. This is so cute. We were talking about puppies today, and I love when Frank posts it. So I'm gonna
cute.
Sorry, Sadie. I'm gonna heart you. And then I'm gonna go back to this, and we are going to take a look at our natural gas position. We did that earlier. It's our butterfly, so we don't need to look at it. Where is it?
Where is our natural gas position?
Yeah.
We never got filled.
Come on.
Yeah, we never got filled. Go to natural gas. We never got filled. No, go to the chart and see. We on the down moves, we kept trying to get in. We didn't get filled, and now it's skyrocketing.
What did we do that butterfly?
Natural gas up 10%. We were trying to do that downside broken butterfly, and we were right around the 3 level, and we didn't chase it because.
I'm not gonna lie to you. 4 is high. Like we're at 390. That's high for.
Well, it's up 10% today.
Yeah. And the other thing that's coming in hot is your oil. It's not nearly as hot. It looked like it was gonna be hot.
I was gonna say, I feel like every time we look at oil, it's around 60.
Yeah.
Yeah. Are you all caught up with Landman?
I've never even started Landman.
What?
I've never watched a single episode of a single show of Landman.
It's not something to be proud of.
And I don't think I'm going to. I'm not going to do it.
Hey, she's still long medals, and she's not watching Landman.
I shouldn't say that. I have watched like YouTube clips with Billy Bob Thornton when he just
going against the crowd.
When he's yelling at everybody about oil.
So look, that little 245. See what that 245 iron condor is now. Because now we're 1 minute away. 1 minute away from the close. We're right where we were. Yeah. You could buy it back for 35 cents.
Yeah.
Okay. How much was it? $1.50?
$1.50. Yeah, that's like $1 the hard way though. Do you know what I mean? It's totally getting $1 the hard way. I don't know that I could do that because I'd just be staring at it. That's what's the problem with the SPX is I have positions on all over. I have positions that are much bigger than my SPX calendars or iron condors, but they're the ones that I look at.
I think I'd rather at 259 just get the 30 cents.
Yeah.
At 239, where's it going? But sometimes you do get a little like.
Oh, you can get it. You can get it going.
Yeah, you can get a move. You can get a move in.
Although it did.
Yeah, they would have both been out of the money, the 10 and the 5.
Yeah, they would have both been out of the money. All right, but Jenny Andrews, it is the eve of the eve. Are you going to go out and party like a rock star, like the teenagers?
I'm going to go rap. I'm going to go rap like a maniac. Everybody, Liz, you're going to go slice potatoes for your potato casserole.
And no kidding. All right, everybody have a wonderful holiday. And remember I was going to say trade small, trade often, but this is last call. So
this is last call. Everybody have a wonderful holiday. We will see you after Christmas. We'll be back on Monday.
On Monday.
All right. See ya. Merry Christmas.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Saw you talking to somebody, telling them it'll be okay. Got the sign that we're running away. 'Cause you know we're getting lazy now. We gotta show you how. We'll do it even if it's not allowed. We gotta show you how. Sweet and sour, you pucker up.
Stocks rip. Is this the holiday melt up? It's Tuesday. It's still December 23rd. It's 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the next 30 minutes as we wind down the trading session. Some of the last few hours that we have here before Christmas, Ilya. It's a half day in markets tomorrow. Of course, we are off air. But what a day that we have here as we get ready to go into a holiday period as the S&P 500 on thin trading volumes moves up to 6960, 0.44%.
Thinnest thing since the Thanksgiving Friday, actually.
NASDAQ up 0.5%.
Shocking.
The Dow Jones up a little bit. The Russell off by just over 0.6%. President Trump lambasted markets today for the eggheads who were preventing the upward slope of the markets. Because they, of course, good news is bad news for folks like you and me, Ilya. Good news today, nominal GDPs is north of 8%. Real GDP, north of 4%. So inflation's doing a heavy lift, but it's still a fairly robust economy. And the fourth quarter trackers for the Atlanta Fed GDP are now live, and those are sitting at 3%. So maybe the party goes on. Ilya, that's obviously not the big news, of course, as equity markets do churn higher. We have to talk about what's going on in the commodities where you see a natural gas up 9.2%.
Yeah.
Silver up another 4.35%. Gold has another 1% to close above $4,500 an ounce. The dollar is continuing to come off. We could talk about even platinum, which is now /PL here on the platform. You could see here up 10% today. So we're heading into this holidays with a little more metals mania in the market. While breadth wasn't good and rate cut odds are down, people just can't get enough of gold and silver right now. So Ilya, why is this happening? And should we be concerned that maybe these rallies are getting long in the tooth despite our best laid plans of mice and men, our bullish narratives heading into next year?
Well, I think the response to today's GDP report was really telling, because you got this situation where obviously the markets want rate cuts. They got a hot GDP report. They know it's not going to be as hot in the fourth quarter because this GDP report doesn't capture the government shutdown. But nevertheless, it's much hotter than expected, meaningfully. The expectation was 3.3%. They got a full percentage point higher, 4.3 on the big number. And you can see the initial response. The markets don't like it. because they go, whoa. How are we going to cut rates like this? And indeed, the outlook for next year, the full year, down to 53 basis points. That's the least dovish in 2 weeks. The likelihood that we get a cut in January down to 13%. Now, it wasn't particularly hot last week, but that's a 10% lower likelihood than a week ago. So markets initially don't like it. They spend about an hour not liking it and then go, yeah, but all the data is out of the way now, and we can go into the holiday in a peaceful fashion. And there's a rout. So in my mind, the danger here is that you have really thin volumes and a market that seems resigned to sail into the year end. So this data had not so much cheered the markets as gotten out of the market's way. And there's not a whole lot more, basically, until we get into the beginning of next year. So yes, this is, of course, good news if you're long. Yes, this is, of course, encouraging. But is it encouraging in the way that you might extrapolate forward? Not really. We saw something similar with the CPI numbers last week and the interplay between the jobs report, which the markets did not like, even though it gave more reason for rate cuts, and then CPI, which the market seemingly did like, even though it pulled in the same direction. Why the difference in response? CPI was second. And once it was out of the way, the event risk was spent. And the market seemed to go, okay, well, if the event risk is spent and there's nothing in the way, melt up is the way that we're going to end this year because nobody's going to screw up our high water mark. We're all going to get paid this year, said money managers. We've been long all year. It's been a good year. We're going to go ahead and get our year-end bonus. Does this extrapolate to 2026? Doesn't look like it. Or at least not necessarily so.
I see the bull in me says, wait a second, that 4-hour S&P 500 chart, I've seen this movie before, a left shoulder ahead, a right shoulder that's forming here. Here's your neckline, 6,600 to 7,000. We have a 7,400 target going into next year on stocks. I could work with that. And I'm thinking about what's happening in the gold.
And we still haven't made a higher high since October.
No, and I'm also thinking of this silly 1998 analogy that we've shared here before. But if we were to use the 1998 analogy on our charts, that yellow line still, we're following it pretty darn closely, my friend, from how this year has evolved so far. We even got our chop going into the third quarter and coming out of the fourth. Maybe if we continue to follow that analogy, we still have some legs, some wind at our back moving forward. But I'm really interested in what's happening with silver right now, because silver price is up another 4.4%. Obviously, this thing's just been an absolute screamer to the upside. I shared this stat over on Twitter X. I also gave it to Frank. He put it in the chat here. But something's happening in silver prices that I don't think that we should dismiss, even as it moves to the upside, even being a bull's bull here. I'd like to point to this chart in particular of silver, which is a weekly chart. And that bottom panel is measuring the rolling quarterly returns for silver prices. Okay, so 13 weeks. All right. And over the past 13 weeks, silver has returned 53.4%, which seems like a lot because it is
incredible, as a matter of fact.
Because historically speaking, the number of instances in the available data series that I have here going back to the early 1980s, since 1987, okay, there have been 37 instances in which silver prices have seen a gain of at least 40% over the trailing one quarter. The forward 1 month, 3 month, 6 month, and 12-month returns aren't fantastic. -5%, -3%, 0%, -5% respectively. There's a lot of variation in these returns. Sometimes it's 20% higher, sometimes it's 50% lower. Okay, but so the median returns, 1 month out is -7%, 3 months out -10%, 6 months -4%, 12 months -9%. Really, the point that I'm getting at here is that this is really, I don't want to say too far, too fast. I'm never one of those people who ever says too far, too fast. As a momentum guy, I'm going to ride this until the rails fall off.
Well, and who's to say what's too hard and what's too fast? The markets are going to make up their mind all by themselves on that one.
Right. And there have been instances in the past where, like 1987, you had a rolling 1 quarter return of 61%, nearly 62% at the high. We're at 52 and change right now. Okay. What about the 2010s? You had a rolling return there north of 67%, nearly 68% at one occasion. So this thing could run longer. But on balance, you're starting to get into rarefied atmosphere that, you know, incrementally just know that we're flying into the sun at this point in time. And the further, you know, it's great. Everything's working out well. I'm still staying long. I'm not getting off the train. Volatility is up 96.2 IVR on a day when it closes at a fresh record high. This literally couldn't be working out better for those of us who are long. But if we start to stall and we get one of those markets, Ilya, where, you know what, prices peak out and then vol starts coming in, we should be cognizant of the fact that, historically speaking, it could be a sign that this thing is running out of a little steam, and it could require a good period of time correction, digestion, before we make another forward lurch up towards 80, 90, 100, whatever that may be in 2026 later in the year, or maybe even 2027, should that transpire, if at all.
Yeah, I mean, as you look at this, you kind of have to put it in context with what else is going on at the same time. This is very clearly a speculative narrative. There is nothing that's occurring here in the sort of structure of Fed policy expectations, the dollar, yields, that would give you the kind of lead on metals as the historic foil for fiat currency and interest rates that they usually are.
Well, you know what's so interesting that you mentioned that, though? Like, when you look at the dates here, 1987, we're building into the, you know, S&L crisis, 2006 and the 2008, 2000. So we have housing crisis, global financial crisis, Eurozone debt crisis. And then you don't get any of those type of outsized positive returns until COVID. So the market and we just ticked this again. We haven't, I don't count the November readings that we saw here for this particular metric because we don't have a 3-month return window. We don't even have a 1-month return window yet.
Yeah.
So there's no reason to put this on the screen. But the point is that, like, these are typically things that are occurring. Silver's really only moving like this if you're in a crisis. And it's really only moving like this when the crisis is reaching its peak. I don't know what that means given the context, because it doesn't feel like we're in a crisis at present time, at least from the market's view, unless we are, which you and I could definitely have that conversation and construct a narrative about how things are changing and breaking. And maybe this is all very warranted. But
yeah, I mean, it depends what kind of crisis.
I bring this all up, okay, today, not because this is what happens when I have winning positions that get too big and start, you know, making me feel nervous.
Yeah.
But I'm trying to poke holes in my own argument. And this is going to be one of my exercises that I do over the holiday here, Ilya. All of my prior held assumptions, all of my beliefs, all of my outlooks, what would make me wrong? What's the risk here? You know, you and I pointed out yesterday the GLD to SPY or the SLV to SPY ratios, the gold to S&P, or the, you know, you look at these ratios in terms of the ETFs, and they're just rising off of multi-year lows. And they were at double, triple the levels they were back in the 2010s. So why not? Why couldn't these run further, faster? Well, maybe that's a counter argument. The price action that we're seeing right now is typically indicative of an exhaustive type of move, if history is any guide, unless this is totally a new regime and we can't count anything that's happened prior to, say, the past year or two as part of our data set. So I find myself kind of with some cognitive dissonance right now. Technically, there's nothing here saying this can't go higher. Fundamentally, the macro narrative is very much intact. Historical returns tell you otherwise.
Yeah, I mean, I think you look at this and you say, well, okay, let's say this is a speculative narrative. Let's say it is a speculative narrative disconnected from the usual metals catalysts. And obviously, this is outperforming anything we're seeing in stocks by a long mile. Silver, we know, has historically had a little bit more of a sensitivity to risk sentiment and to the kind of things that animate stock markets, then gold, because it has a level of cyclical sensitivity because it has industrial use, whereas gold, not really. So we know that there is obviously outperformance in silver here, not only relative to gold, but also relative to stocks and relative to both taken together. And gold is going up. So, and gold is outperforming stocks by a long mile. Friend of the show, Frank, pointed out yesterday, in gold terms, the S&P 500 is back to April lows. So the weaker dollar that we've seen this year has really flattered stock markets a lot. And so when you look at this and say, okay, is this historical norms sensitive, this move? What kind of a speculative narrative is this? And I think when you consider the decoupling lines up with basically the beginning of this year, you start to go, well, this probably reflects sort of institutional risk on an international scale. And we've talked about this before, that the world has really accelerated into a deglobalization kind of mind frame. And it makes sense that in this environment, gold outperforms and silver, as a less liquid, more speculative instrument, ends up looking like gold on steroids to some extent, largely because, number one, the US and China are increasingly at odds. And although they try not to get too far away from a sort of simmer on their Cold War, that Cold War is nevertheless there.
Right.
And so what sensible people might think is, look, if this thing goes off the rails and there is a kind of bifurcation of the global financial system where the two sides say, you know what, I'm taking my toys and I'm going home. And instead of having one sandbox where everybody is playing, even begrudgingly, even at opposite ends of the sales of the sandbox, you just see the players walk away. And then you need, if you're a third country, if you're a Brazil or an Argentina, let's say, or a Turkey, you need to be able to do business with both. And so you need a third go-between for commercial settlement that isn't the dollar only or the yuan only. You need to be able to move from sphere to sphere. And gold is a non-sovereign asset. There's no government you're upsetting there.
That's exactly. I recorded a video that's going to be on the channel in a little bit about what happened with gold and silver this year. And, I specifically, I pointed out it's not as much an anti-dollar and euro trade as it is a risk management decision. The question that's being asked by reserve managers is what assets sit outside the global payment system and carry no counterparty risk. Gold answers that question cleanly.
Yep. And to some extent, so does silver. Now, there's another flavor to this, which is that the hope and prayer for stock markets this year was that the AI boom will carry everything into a happy and rosy future and paper over whatever issues we might have. That's cute and all, except in an era of globalization, the incredibly global and interdependent AI supply chain is extraordinarily vulnerable. Because in order for any of this build out to mean anything, you need to be able to do commerce across complicated supply chains that include the US, Japan, Korea, Taiwan, China. You lose one cog in any of it, and the whole thing falls apart and can't work. And you don't have backups to any of the nodes. Some of the parts are made over here, and some are made over there, and some are made over here. And if China and Japan get into a kerfuffle, goodbye. If China and Korea get into a kerfuffle, goodbye. If the US and China get into a deeper kerfuffle, goodbye. So all of a sudden you go, what? wait a second. So what do I want to own here? Do I want to bet that the AI thing is going to work? Or do I just want gold to not have to think about these things and to be able, again, to do business with all the parts separately?
Hey, why not both? Your Mag 7 names
Exactly.
are breaking out. Your Mag 7...
that's the year we've just had. Why not both? But if you look at relative performance, gold has absolutely crushed stock markets.
Well, not just stock. It's really U.S. markets. U.S. have been the worst. American markets have been the worst developed markets in 2025.
I mean,
across the board.
It's crushed European markets just as well.
Well, yeah, and silver has crushed everything. So, but I would point out the Mag 7 names here as gold breaks out today, silver continuing its run. Mag 7 names, maybe their time in the penalty box is coming to an end. It's been a sideways slog for a number of months, Ilya. We do break our downtrend diagonally. We likewise clear out the earlier December high on a closing basis, and we basically close at the highs here in the Mag 7 ETF. I'm keeping an eye on Google over the holidays, sitting some long 330 calls here over the next few weeks. I see a little bit of a wedge that's come together that's potentially starting to break out. We did get that gap fill for what it's worth between the 21st and the 23rd. So once we fill that gap back here on the 17th, we've then resumed our upwards march. And so if the Mag 7 names are starting to lift off, Google obviously has been a leader at the front of that pack. You can see Tesla's up here sitting right near its highs going back to last December, teetering. The most interesting chart, though, Ilya, because of the narrative versus NVIDIA and Google, Oracle, yada, yada, right? I'm interested in Microsoft because if we can get through 495 in Microsoft, I see a September low there, a November low there, and ever since then, upon that break right around Thanksgiving, Microsoft has not been able to clear 495 or so on a meaningful basis. And it just so happens that as we go through these next few weeks, our 50-day moving average is going to be coming in right near 495. So some signs, right? If we think about like, is this just, as you point out, window dressing here, potentially? People want to get paid. You know, I know it sounds obtuse when I say it all the time, but like human psychology really matters for all this stuff. At the end of the year, when your clients check their portfolios, they want to be able to tell their friends over their New Year's dinner, their party, yeah, I own gold this year. I owned NVIDIA this year. Of course I had some silver because last year was all about owning crypto. So you got to window dress a little bit. Also, you can't be the fund manager who missed these high double digit or triple digit moves and expect people to keep investing with you. They'll just move on to the guy who figured all that stuff out and got the money. So Microsoft can't break above 495, Ilya. That might be a telltale sign that this is all just window dressing and small amounts of money pushing around the indexes to paint the tape. But at a Microsoft through 495, you know, it's a long way from here, but like a Bitcoin through 95, you go into 2026 on better footing. But this is the seasonal time of the year for this to happen, of course. Curious how this has all followed a very reliable path so far, as far as I'm concerned. That big washout move that we had here, what was this, back in November? On the show, we pointed out the three occurrences there. It would happen to be the seasonal low for the rest of the year for the S&P, also happen to be the seasonal high for the year for the VIX for the remainder of the year. If you go back through the product's history, we have, of course, the day 1.5% gap, and only to close lower by more than 0.5% in the S&P 500. We hadn't seen that since the April low. And then we had that VIX 3-month high point spread move into territory where we had not seen it occur since the April low. So all those have come together. The bottoms here, we're now in the Santa Claus rally window. I know it's easy for me to say as someone who's bullish, like the bears should just pack it in. And this really isn't the time to kind of try their hand at this. But if I'm a bear right now going into the holiday, I see low volume, I see low volatility, positive technical drift, and a market that just does not care about anything at all.
No.
And I might just, it's placing new bets here over the next week and a half. It's either ride it to the upside or save your chips until January.
Yeah. I mean, I think when you look at this, duration is your friend. And I have plenty of it in my positions here. So thankfully, the Russell is my friend today. It's actually down 0.6 And I have that short, but I've got another 38 days in there going into the end of January. In the Qs, I've got another 59 days going into the end of February. In SPY, I've got another 66 days going deeper into the end of February.
Yeah, I want to latch onto that for a second here. You mentioned SPY in 66 days, Ilya, at ESH6 right now, because of how low volatility is priced, and this is still the ESH6 contract for the February 27th expiry. If you wanted to get downside protection of, we're at 69.57, so you wanted to get long the 68.50 put, short the 6,800, a small out of the money put spread here, risking 1 to make 3. You're saying that we can get 2% downside protection? It's less than a 2% move. You're saying you can get less than a 2% move in your pocket for a potential 650 loss? I mean, like maybe that's where, if you're going to be really bullish here and you're trading on tilt, like some of us on the show are right now, maybe you use the duration and the cheap volatility to get some downside protection so you can keep doing your Icarus bit and flying into the sun with gold and silver. But I mean, that's really, you say time is your friend. Playing for the downside move the next day, week or two,
you're asking for trouble.
But if you're looking out, like, the pricing's reasonable on some of these things, and you need to be a little bit more creative if you want to be bearish at this juncture. I'm sure there's going to be a point next year, Ilya, where, like you had in the first few months of the year, being bearish proved to be fruitful. I don't know if we're there right now.
Yeah, I mean, I'm not looking for this price action now to necessarily mean anything. And I think the back and forth we just discussed around the economic data really showed it. Jobs, inflation, GDP today, rate cut odds are down. Market goes, I don't like it, but I'm not dealing with this now. And we still haven't made new highs since December, never mind October. So the peaks around the Fed meetings, they're holding. And for now, that just means the market isn't ready to make up its mind. It'll do whatever untoward thing it wants to do if it wants to do it in January. So I've got lots of duration, and I'll wait.
Ilya, with that, overtime is out of time. It's going to do it for us today and for this week. I suppose as we head into the holidays, I can speak for both of us, and we could say thank you for spending part of your trading day and really part of your year with us. Markets never really sleep, but hopefully you get a chance to slow things down, recuperate, recharge your battery, and spend some time with friends, family, anyone in between, even if it's just your dog. We'll be back on the other side, of course, next Monday, Ilya. Overtime is back next Monday, breaking it down on the other side as we get ready for New Year's. So from all of us here on Overtime, myself and Ilya, plus the production team, we wanted to say thank you, happy holidays, and remember, trade small, trade often.
Indeed.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
I got a good.
Markets are going into the Christmas holiday in a chipper mood after U.S. GDP data, but we're pretty much done with U.S. economic data, and we're going to take this opportunity to take a look at another major player in the economy as it is shaping up for 2026, the world's second largest, China. It's looking like an interesting set of circumstances here for the world economy as we get into this next year. So we're going to take this opportunity to take a look and check back in with what is going on in China and why next year looks like it is going to be a problematic year, or at least a year of risks linked to how China performs. As ever, this is Macro Money. I'm Ilya Spivak, head of global macro here at tastylive. And what we'll start with is a look at how all of this is shaping up now that the year is almost over and we're heading in the final days of 2025, and why 2026 might turn out to be somewhat spicy on this front. So let's first take a look at the big picture. What we have here is the dire state of China's economy. Why dire? So in the red lines here, we have real GDP and nominal GDP. And what we see, of course, under normal circumstances, is that nominal GDP takes the value of all of a country's output of goods and services and counts them up. But inflation, that is rising prices on those goods and services, can make that appear bigger than actual output. So inflation is subtracted and we arrive at real GDP, which is supposed to be a little bit lower than nominal under normal circumstances, because when you subtract positive inflation from output looks a little bit lower. You take that overstating effect of inflation out of the picture. What we see for China is the inverse of what is supposed to be normal. What we're looking at is real GDP is running above nominal GDP. And what we see is that this has been persistently the case since early 2023. What does this say? Well, it means that for basically 2 years now, China is in a state of economy-wide deflation. If real GDP, that is nominal GDP minus inflation, is higher than nominal GDP, well, then inflation must be negative. You must be subtracting negative inflation from real GDP to arrive at the nominal number. And we can see that spread right here. In fact, here's a year, here's another year, and here's 2 more quarters. For 2.5 years now, China's economy has been locked in a deflationary morass. Now, why is this bad? Well, consider why prices go up, why inflation occurs in a healthy economy. When there is demand for stuff, people compete on price to get it, because at any given moment, there is but so much stuff. Production is obviously ongoing at all times. Supplies are replenished, so are inventories. But at any given endpoint, there is a certain supply of things, and some people are going to get them and some people are not. And that's going to get allocated in a normal economy by the price. So if more people want something, if there's demand, the price goes up. What happens when the price goes down, which is what we're looking at here? Well, that just means there's no demand. And so the entirety of the economy is essentially in the bargain bin. To clear demand, to get people to buy the stuff, prices have to fall. And that, of course, is a very scary indictment of what's going on in China's economy. It essentially suggests it is operating with next to no net demand. Now, if we look at the most recent data, obviously GDP data can be a little bit slow. This is PMI data. The blue line here is the official composite PMI number, taking in both manufacturing and the service sector, and that's put together by official government sources. In the gray is the same kind of data, but this is from S&P Global and Rating Dog, which is a Chinese publisher of data. And what we find here, as ever, in the logic of PMIs, where 50 is neutral, above that is growth, below that is contraction. China's economy had a brief pop in early 2023 as COVID lockdowns were taken down in late 2022, and since then has slowed into near standstill. Official numbers are sub 50 narrowly, suggesting the economy is contracting. The S&P Global estimate is a little bit better, but also is a little bit more volatile. And so what we see here is we get nominally positive growth on that score, but only just. And the overall story seems to be hugging the 50 level. That is to say, very near standstill with a slight bias to positive growth. The further you go above 50 in PMI logic, the faster the growth. The further you go below 50, the faster the contraction. And what we see here is we don't really get growth accelerating in any kind of a meaningful way off this 50 mark for years now in any sort of a lasting way. And depending on which one you look at, we get a little bit more growth or a little bit less, but the upshot is anemic. If we look at the latest PMI data, we find much the same as the latest inflation data, where we see that wholesale inflation has been running negative going all the way back to the middle of 2022, from before the reopening after COVID. CPI has been hugging zero. In other words, inflation continues to look like the issues that we see here are persisting with no real sign of abating. Now, it's relatively easy to see what's going on here on the domestic front. This is, in the yellow, household deposits that are of a longer term, sort of savings-oriented nature. So in U.S. terms, this might be something like a CD or even a savings account. And the red are demand deposits, or in U.S. terms, a checking account, where the money that's going into consumers' deposits here is intended for near-term consumption. Hence, they're there on demand. The money going into these accounts is intended for saving. This line here shows you the gap that has widened dramatically between the two. And so you can see where household money is going. It is not going to consumption. It is going to savings. And the share of income going into savings is vastly expanding, such that you can see why the economy is so anemic. You can see why there's no demand. Nobody's buying anything. Nobody has the confidence to splash out. Now, perhaps there is something to be said for China's economy on the external front, and indeed, there has been a little bit of resilience in exports. We can see imports here since this reopening in 2023. We can see they look soggy, showing us what we just saw as far as households not wanting to spend money. In fact, imports here we can see have a long run of negative readings going into the second half of last year and the first half of this year. They've since righted the ship ever so slightly, but we're only barely above 0% growth at this point. Exports were a little bit more chipper, despite the influence of tariffs at the start of this year. But we can see here's the beginning of this year. Export growth has slowed. Now, there was quite a bit of catch-up export growth as Chinese firms looked to front-run that tariff increase. Of course, it was obvious that those tariff increases were coming as the polls around the U.S. election crystallized around an outcome. And then, of course, that outcome was had. And so there was a big run-up, especially toward the end of last year and in the very early months before the tariffs started to get rolled out. But since then, things have slowed. And exports have continued to have moments with bright spots, largely because China has used third countries to try to circumvent the tariffs. So, for example, exports to ASEAN countries, Southeast Asian economies, have boomed. And there's a whole range of estimates out there suggesting that half or more of that boom is meant to use those countries as essentially intermediate steps whereby the tariffs are less expensive if the goods appear to be arriving from Vietnam, say, rather than China. And so this appears to be a way to get around the worst of the tariffs, but nevertheless, the overall picture looks soggy and has looked increasingly soggy for months now. In fact, if we look at the way Chinese economic data has performed relative to expectations, we can see since about May or so, it has increasingly deteriorated relative to forecasts on this Citigroup measure. It was a slight attempt at a bit of a bounce, but we still are holding well below zero. That is to say, Chinese economic data is tending to come out weaker than economists expect, now with some consistency and for some months. In other words, the sort of forecasting universe of economists are being shown to be month in, month out for a few months now, more optimistic than reality endorses. And so you end up with a Chinese economy that is, for a few months now, weaker and staying weaker than benchmark economic models have it. Obviously, there has been no shortage of stimulus attempts by Beijing. They've come mainly through the loosening of credit conditions, through creating an environment where regional governments can borrow and spend more, where consumers can go and, let's say, do a trade-in of their old appliances for new ones. And so there's quite a bit here that may be helpful, or at least was aimed at helping, everything short of having actual spending from the government itself. But nevertheless, we're in a situation where that seems to be, if anything, suspect in its effectiveness, and in actuality, seemingly losing steam already as we look at the way that this has behaved. That this is Bloomberg's Credit Impulse Index, which measures the share of new loans in GDP. So what this ought to be showing us is a situation where if the efforts from Chinese authorities are succeeding, then you would see a significant push higher in the share of new loans in GDP because people will have taken up all of these credit facilities and borrowed a bunch of money and financed expansion of output, financed a pickup in economic activity. But obviously, that pickup in economic activity isn't really there, as we can plainly see here. And so what we find is that this credit impulse index was at best anemic through the reopening. It actually fell only really into the end of last year and the beginning of this year did all of the extra credit provision seem to get a little bit of an improvement here. But we're continuing to hold at very weak levels, even relative to recent history. And when we look at these year-on-year numbers, we, of course, see that they've turned a little bit positive, but that seems to be largely a rebasing effect because, of course, they were very, very negative all of last year. And so this looks more like statistical improvement than actual credit expansion. It's a similar story for foreign credit. We can see since the reopening from COVID and the opening of the credit spigots, at least to some extent, where capital could make its way out of the country by hook or by crook, really, once the lockdowns ended, what we see is foreign direct investment plummeting. Now, the intensity of the decline, again, has rebased away this year. You can't be falling at over 30% year on year for a very long time. At some point, things do start to look at a lower base month in, month out, and the calculations get smaller because, of course, you're counting against a lower number once you get into here. By the time these numbers arrive, their reference point is here in terms of timeline. And so you're looking at numbers that invariably are going to get smaller in terms of magnitude year on year, but it's falling still. It's negative still. So really, for the better part of 2 years, even a little bit more, capital has been fleeing China. And so you're looking at a situation that doesn't seem to be doing anything but going from bad to somewhat slower deterioration. But there's really not a turning of the trajectory here or a turning of the overall direction. So as we go into 2026, the world's second largest economy appears to be in relatively dire shape. Now, why does this matter? That, of course, is surely front of mind. Why do we need to care that this is what's going on? Well, if we look at the makeup of global GDP, it really rests on three engines of growth: the US, the Eurozone, and of course, China. With the rest of the world, 42% of global outcome, basically dependent on what happens in the former three, because most of those economies are vendors feeding demand from the US and the Eurozone and China. And China, to some extent, is itself a vendor because most of its end demand, for lack of domestic uptake, as we clearly saw, that end demand is in the US. It's in the Eurozone. It's in rich markets that have the money to spend. And if China is going to be this anemic, well, then it's just not going to be a backstop for the global economy if something were to go wrong with either the U.S. or the Eurozone. Now, we just got U.S. GDP data earlier today, and it was a scorcher in the third quarter, 4.3%. That's the strongest in 2 years, going back to the third quarter of 2023, and much stronger than expected. Expectations had it a full percentage point lower at 3.3. And when we look at the makeup of the growth, it's an encouraging makeup. We can see a significant rebound in consumption. That, of course, very encouraging. The strongest consumption result, as a matter of fact, since a year back. Whereas at the beginning of the year, we saw with all these shenanigans around the tariffs, you can see here, private inventories go up, imports surge. Private inventories go down, imports fall apart because we're not replenishing the inventories. We're hogging everything we could possibly hog here to front run the tariffs and stuffing them into inventory, hence the import surge. And then imports collapse because we have what we need and we're not buying anymore. But all of that seems to fade away by the third quarter, and we seem to have kind of adjusted for the tariff back and forth, at least initially. But a key feature here was a collapse in consumption, which is 68% of the economy. It's the only part that really matters. Well, now it seems to be rebounding here in the third quarter, whereas everything else seems to be back to a more normal spread. And so, seemingly, at least for the U.S. economy, this looks encouraging. For what it's worth, the Eurozone economy seems to have taken a meaningful step lower in December. Now, things were running relatively weak here at the start of the year, but they started to pick up. As ever, this is a composite PMI, so we can see we're well north of 50 here, but something seems to be stumbling, and perhaps this also is more catch-up than momentum. We'll see if that holds up next year. But what we're seemingly setting up for here is a bit of a worrying environment. If China is going to be as anemic as we've just found it, and the Eurozone seems to be once again losing steam, as we've now seen it lose steam for 2 consecutive years, every time it tries to build any kind of momentum from these near standstill levels, it is right around here where we've seen it lose pace and fall back. So if that's what we're setting up for here, well, then next year is going to look like the U.S. is the only game in town once again. Just as we start to really see some of the major issues around what the tariffs will mean longer term, what demand can hold up, and whether the boom that we've seen in the AI space is sustainable in an era of deglobalization, considering the AI supply chain is deeply globalized. And the more that we go into a world where the US and China don't get along, maybe Japan and China don't get along, maybe Korea and China have some friction. The US has friction on and off with most of its major partners. Whether we can sustain a strong US economy. We already know the fourth quarter is going to be weaker than the third because, of course, that buoyant data doesn't include the government shutdown. So, as we look at this, we enter 2026 in a precarious state, whereby the entirety of the global economy seems to be standing on basically one leg. And if that leg is kicked out, China is certainly not there as a backstop, it seems. And the Eurozone is, at best, a weak substitute. Now, positioning-wise, going into the holidays here and into next year, I'm still long the metals, and I've actually increased my exposure to gold as it continues to rally. I've taken off the short Aussie dollar position that I had last week. And so now I'm uniformly short the US dollar, which seems to be accelerating to the downside once again. And I've added a long Canadian dollar position here on top of the shorts of the dollar against the pound and the euro that I've been holding. I'm still short risk through an assortment of instruments. Bitcoin is the one that keeps working. I've still got the remnants of my put verticals here with a little bit more time on them into mid-January. The duration on my stock put verticals is deep into the end of January and the end of February to give lots of time for the holidays to kind of wash over these positions and allow for sentiment to find its path for next year as they sort of take stock of all of these risks emerging. And I still have some long-term exposure here, MSOS with expiries in January 2027, expecting maybe this will come up in the midterms, and still a little bit of exposure in Brazilian stocks. They've had a decent haircut. It's been a great exposure spot for most of this year. I still have tons of duration on it, and I'm probably going to be looking at this pullback as a chance to add once the dust settles somewhat. And that is macro money for today. We're in an abridged week here, of course, because of the Christmas holiday. If you're celebrating, I hope you have a good one. We're going to be back on Monday next week, going into the New Year's with another abridged week. And then, of course, return in January to our regular Monday through Thursday schedule right after overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money comes back next week. Happy trading.